When people consider coming out of retirement, there are more factors than just how much money is sitting in the bank. More people are deciding to take a break from retirement or deciding not to retire altogether. Here to talk on retirement is Christine Russell, Senior Manager of Retirement at TD Ameritrade. Good to see you. I was reading your survey, and we'll get more into the results, but immediately I thought, I'm going to die at my desk working. I'm never retiring.
Only if you want to, Brian. Only if you want to. That's the best news.
It's likely. I mean, well, listen, I think at the end of the day, people are working longer. I think that's the takeaway from your findings, right?
Absolutely, absolutely. And they're working longer, not just for financial reasons, but they're also working longer, Brian, because they want to keep their mind sharp, because they don't want to be bored. So there's very positive reasons behind working longer.
Sure.
What are they doing when they go back to work? I mean, are they still in the industries they were in during their regular work life? Are they trying new things? And because I'd have to imagine it might be difficult to start over in an industry you were never part of that late in the stage.
That's a good point, Alexis. It can certainly be difficult, so you want to plan ahead, that you've thought through what other industry you'd like to go into. But we do see about 4 in 10 people who want to join a new industry, try something new. Again, think about these unretirees as folks who want to challenge themselves intellectually. They want to keep their mind sharp. So trying something new in a new industry gives them that opportunity. It might even have been a job that they would have liked to have done, but their career took them in a different direction.
What really stood out to me is people are working into their 70s.
Yes.
What are they doing into their 70s? Obviously, they're not out there lifting bricks, I guess, or concrete. I don't know. Maybe they are. I'm not sure. But what are they doing?
But you also need somebody to hire you at that age. And I have to think that can be a challenge, right? To say, look, I still have something to offer, even though I'm in my 70s or sometimes my 80s.
Absolutely. And in our TD Ameritrade study, we did have some of our older folks say that it is difficult to switch industries or find someone to hire you to use your skills to the best of your ability.
Right.
But I think a lot of it has to do with knowing what are your skills, and again, planning ahead a little bit to think about how do my skills translate into something else that I want to do, and talking to folks in that new industry.
I have to say, I see a lot of folks, I mean, just anecdotally at Home Depot.
Oh, sure.
That's like one of the places where a lot of people go. I mean, are those the kind of jobs we're seeing? Is it more customer service type or retail jobs that they're going into?
Our particular survey, we didn't ask them in particular what they were doing, what kind of industry they're doing. I know anecdotally, my mother, her neighbor across the street, he drives the school bus part-time.
Yes.
Because he likes that social interaction. So I think we are seeing that as well. Also think about from our study that for folks who were in their 70s saying they wanted to work, they were talking about 10 hours a week.
Okay.
We're not talking
about a full
about
40-hour week or something. Okay.
So what job would lend itself to a part-time experience?
Norwegian Cruise Line is setting sail on a new quarter after reporting third quarter earnings that beat Wall Street estimates. Norwegian Cruise Line CEO Frank Del Rio is in the house to discuss. Frank, always good to see you. Does it feel like a 1% U.S. GDP economy to you?
No, not at all. You know, I hear that there are signs of recession, slowdown in pockets of the economy. So the coal miners might be having a bad year, or some of the industrial machinery, but the consumer is alive and well. And we see it in several ways, Brian. First of all, the booking window. How far in advance are people buying a cruise? Expanded 10%. That's huge in one year over year, 10%. So people are buying their cruises further and further out, showing they have confidence in their situation. Second is those who book their cruise 8 or 9 months out and are on their cruise today, what are they doing on board? Are they spending money on spa treatments? Are they going on shore excursions? Are they spending money in the casino? And the answer is yes, in a bigger way than they ever have before. And the third way, perhaps even the most indicative one, is those that are on board and spending money in the spa and so forth are also buying their next cruise on board.
Wow.
So I don't see.
They are the loyalists, right?
They're yes, and we love them. But it shows the confidence of the core consumer. Here they are buying something that's totally discretionary. No one has to take a cruise. Yes, they choose to. and that's because the economy's strong.
And the latest numbers I saw, 30 million people expected to cruise in 2019. Where is most of your business coming from? Where do most Americans want to cruise to?
Yeah, well, the largest region year-round is the Caribbean. So across the industry, and similar to us, roughly 40% of the capacity is dedicated to the Caribbean. And that comes mostly out of Florida, as you'd expect. But we have cruises that sail from the Hudson down to the Caribbean, from Tampa, from New Orleans. So the Caribbean is the big destination, but Alaska's growing like a weed. Europe has always been strong.
Is Europe still strong given some of the slowdown we're seeing there and Brexit worries?
Yeah, so the German economy, the Italian economy has slowed down, Brexit, but Americans still make up a good 60 to 70% of the folks who are on board our ships that sail around Europe.
Frank, you're making a big bet on Alaska. What's going on there?
You know, Alaska's got everything people want. First of all, it's safe, right? There's no risk of hurricanes. It's American. It's the last frontier. It is not year-round, but expanding. So we're seeing, it used to be that Alaska was maybe good for June, July, and August, 3 months. Now we're seeing cruise ships arriving in late April, extending their season through October. And as a result, we're making big investments in Alaska, in land programs. As these ships get bigger and bigger, as you know, Encore is 170,000 ton, nearly 5,000 people capacity. The berthing capacity in some of the upland projects in Alaska are lacking, and we, along with other cruise lines, are building up the infrastructure that will allow us to bring these huge, beautiful ships to Alaska.
And you have some new ships in the pipeline, right? And you have to order those well in advance, I understand?
Well in advance. We have 10 more coming through 2027 across our 3 brands. As you know, Norwegian Cruise Line Holdings operates Norwegian Cruise Lines, Oceania Cruises, and Regent Seven Seas. And so we have ships for all 3 brands coming.
Real quickly before we let you go, you have repurchased, I believe, 9% of your outstanding shares under your current buyback.
Yeah.
It's almost like you're taking the company private.
Well, not quite. We love the public markets, but look, we're underappreciated right now. Our stock is undervalued. We're trading at 9 times 2020 consensus. With all the cash flow that we're generating, we think that the best use of that cash right now is to buy back our stock at these ridiculously low prices.
All right, well, U.S. household debt is reaching a new record. Overall debt rising $92 billion in the third quarter, now nearing $14 trillion, according to the Federal Reserve Bank of New York. Brian, it's being led by an increase in mortgage debt. Of course, anytime we talk about record debt levels, that becomes a problem. We're going to get into that later when we talk about student loans. Right. But what do you make of this?
Well, no surprise. Interest rates are at historical lows, even though they're not at zero anymore like they were in the years following the financial crisis. But they're at, 1.5, 1.75 right now as far as where interbank lending goes, and that bleeds into the system still in the form of relatively low mortgage debt, mortgage rates. So that means that it's really cheap for people to get a mortgage, and it's also really cheap for people to refinance their mortgages. So that's why you're seeing a lot of the volume. What's interesting about this too, specifically, is that millennials, when you unpack by demographic, have actually been a big driver in that mortgage debt as well. So you talk about, yeah, well, millennials maybe are interested in renting, especially in these expensive cities, but maybe in cheaper parts of the country or more growing parts of the country, it's actually the case that millennials are being inspired to take a mortgage on a home or an apartment or a condo because it's been so cheap to get the financing for it.
But the worrying piece of this, too, though, is delinquency rates. And you think about that ticking higher as well when you look at people who are behind on their payments. Not exactly a positive development on that front either.
No, absolutely not. And when it comes to delinquency, it's actually student loan debt that's kind of leading the charge here. So we're facing a $1.5 trillion student loan debt crisis, and we're seeing a lot of people not being able to keep up with those student loan debts. So what do you think in terms of the risks this presents to the U.S. economy moving forward? Because
Well,
we
again,
keep talking about the health of the U.S.
the
consumer,
consumer's so
but
great.
but the consumer
Yeah.
is often spending on borrowed money.
Well, when you think about, especially with millennials, right? And the story here is that wages have also been going up in this post-crisis recovery. That's a good thing. But the problem is that home valuations and asset valuations for real estate have gone up way faster than wages. So if you think about those two levers, people are making more money, but the cost to actually rent or own any real estate is even higher. If people are taking out these mortgages, even if it's cheap, they're taking a mortgage out on what is supposed to be actually a higher principal cost of the underlying asset that they're buying to begin with, which means that you're crowding out the other, money that you could use to spend on food or on goods or clothing and what have you. So there's a serious crunch here that some might worry that if the continued pace of wage growth continues to go at the trajectory and getting overpaced by the growth in asset prices, that they're not going to have much money to spend on anything else in the future. And especially without any sort of social security net to help them once they get into later age, you do wonder if maybe there's a serious crunch in consumption in the future, which would have a huge macroeconomic impact.
Yeah, and we talk about millennial debt, and I think people forget how old millennials are getting now. It's no longer just college kids. We're talking about people well into
get
their
older every
adulthood.
year.
They're late
Exactly.
30s, late
It's funny how
30s,
that
yeah.
works. But I'm looking at debt now with Generation Z people. We've got 18-year-old kids now that are taking out $10,000, $20,000, $30,000 in loans as young 18-year-olds without the knowledge of what that's going to look like in the future. And I think if we're talking about reducing student loan debt moving forward, it's going to continue unless we find a way to incentivize universities to lower costs in the first place, which right now they just don't have, because universities know we can charge whatever we want. Students are going to take out these loans because they know, well, I have to get a college degree. There's no other option. That's what I've been told. And so they're going to take any student loan out. The government's going to continue to back high-risk loans that they would never give to other people in the private sector, but when it's government.
But that's
handing out
also
these
kind of the
loans, there's no problem
concern
for
when we
them.
talk about subsidizing college or free college for everybody, and you hear about that on the campaign trail.
Right.
It's also an issue here because of the point you just raised, which is colleges know that this money is going to be coming to them, so they have no reason to cut costs.
Yeah.
And if the government's going to foot the bill, then why charge less?
We just saw the first instance, I believe it was University of Chicago, where the projection is by, I think it's 2030, it's going to be $100,000 annual tuition.
Jeez.
And it's the first college to reach that rate. And I think we're going to see more and more of that. And again, when students know, or when universities know, well, they're going to get the money, let's just throw a random number out there.
Yeah.
And for a lot of these students, I've talked to thousands of students in the last 3 years with Campus Forum. I've interviewed them personally.
Yeah.
Whenever I bring up student loan debt, it's kind of this thing that's way off in the future, this distant thing they say, well, we all have student loan debt. They don't know anything about it. They don't know anything about the fundamentals of taking out a loan. And I think that's a different element of it when you've got 18 to 22-year-old kids that are racking up this loan debt. And it's actually going to affect all of us when you look at the numbers of students that are going to start defaulting on these moving forward.
Yeah,
It's gonna increase.
10.9%. It seems very high. 10.9% of the record $1.5 trillion number that you mentioned when we're talking about student loan debt. That's up from 10.8% delinquency in Q2, so ticking higher, becoming a more serious problem.
And you know when reality really sets in for those college students that are taking those loans and don't really know how much it's going to take them to pay it every month is that first job, that first paycheck, and they go, whoa, way too small. My debt is way too high.
Yeah, your debt is way too high. You need to cut it, is basically.
And
Your
real
debt
quick,
is way too high.
You need to cut. Yeah.
And real quick,
Well done.
another problem there is so many students, they take the first job they can out of college because they realize I need to start paying this off.
Yeah.
And a lot of them aren't starting businesses. They're not looking at potentially higher earning jobs because they say, well, I just got to get a paycheck in so I can start paying this off. And that's another area that I think is hindering the economy, where students are underperforming with their degree because they say, I'm just going to take the first job that comes my way.
Yeah, and shifting that, I mean, as we're talking about it, shifting that debt from individuals to the government, not necessarily
Absolutely
a
not.
fix there either.
Absolutely not.
All right, well, Brian Chung, thank you so much for breaking all that down. Appreciate you sticking around. Well, a new survey out from AMN Healthcare has found an alarming rate of burnout among nurses, with almost a quarter working 2 nursing jobs at a time. Yahoo Finance's Adriana Belmonte joins us now with the details behind this and some shocking findings here when you think about the stress that America's nurses are under.
Yeah, so I'm going to read a few statistics here that I thought really jumped out from this survey. So 22% of nurses hold more than one job as a nurse. 37% of those working that second job say that doing so negatively affects their quality of life. There's also 27% who have witnessed workplace violence. So it's kind of, just showing how, while they're in those settings, the burden that's being placed on them. And then there's also 52% of nurses who are saying that the nursing shortage has gotten worse over the last 5 years. So survey kind of covered a broad base of different conditions going on, but it just shows that, there is burnout happening.
I know you talk to people in the sector as well, though. It's not just the fact that there's a shortage, but also kind of, the fact that there are changing descriptions of the job, changing responsibilities of the job as well. So all of that kind of tying in here.
Yeah, so I talked to a nurse from National Nurses United. It's one of the largest nursing unions in the country, and she said she was very strong in this emphasis that it's not a shortage of nurses, it's a shortage of nurses willing to work in the current conditions. So she said that, they're experiencing or displaying criteria for PTSD because, the violence that they're witnessing or experiencing. There's a nurse suicide rates, are a little bit more than the average amount. They're, working the second jobs, and also automation is playing a role in this too.
Yeah.
So we've got nurses under a lot of pressure, because if they're working with diminishing resources, they have to be the caretaker, but who takes care of the nurses? So seeing the results of this study, are there any resources that are being offered to nurses to deal with these kinds of situations?
Not at this time, it seems like. So a big issue here with what's going on, what they were saying with the current industry, is that there's a shift towards technology. And so some people are saying, well, we just have to get better at adapting the technology to work with the nurses. But some of the nurses say it's not enough. It takes away from the quality of care that they can present to their patients. And by doing this, it restructures the whole role, and they kind of feel like that profit is being valued over quality of care.
Yeah.
And so obviously plenty of problems pointed out here. Is there a solution that they're calling for? Or, is there a unified voice of here's what nurses want, here's what we think would fix the problem?
No, that's the issue here. I don't think anybody knows what the solution is, at least at this time. It just seems to, right now, they're just kind of calling out the fact that, hey, this industry is trying to shift more towards technology, that, they can't figure out how to cut labor expenses in the healthcare industry without affecting nurses and how they enjoy their job. So I think it's about finding that balance.
I mean, when we talk about all this too, though, healthcare seems to be one of those sectors that is showing job growth. I mean, that's kind of just the overall demand on the healthcare system, very large in general, but I guess nurses caught up in that as well, as more people need care with an aging population base.
Yeah, so there's also the retiring as well. So one of the questions in the survey was about, retiring, because baby boomers are aging out of the workforce. And so this is going to create even more of that shortage, however you want to define that. But yeah, there's since 2012, an average of 60,000 nurses have been retiring each year. And so, these nurses are saying, well, we've been prepared for this for a while, but there's also going to be the point where they have to start taking care of those people as part of society.
Yeah, so maybe not, even though there are job opportunities there, maybe not exactly the most satisfying job, at least as it once was when you talk to a lot of nurses in the industry. But Adriana Belmonte, thank you so much for bringing us that survey.
All right, time now for the Tech Howl with Yahoo Finance tech editor Dan Howley. All right, Apple has, I think, kind of admitted a mistake of sorts, right?
Kind of, yeah.
In not really Apple fashion. They've got a new MacBook Pro out, hitting the market. It's 16 inches. It's heavier. It's thicker, bigger than the old MacBook Pro. But of course, it's really all about the keyboard, which Howley, I imagine, will make its way into subsequent models of the MacBook, the MacBook Air. And I saw, Daring Fireball today. It's Mark Gruber, right?
Yep.
Yeah.
Yep.
Right. I get him and Gurman mixed up. Gruber basically saying it's sort of like it's the un-Johnny Ive decision that Apple would have never made under Johnny Ive's design leadership.
Yeah, they went with a thicker design, thick with two C's. They got a chunky. Let's get every
Low-key
kind
thick,
of.
or?
Yeah. No. Definitely not low key thick. This is it's a 16-inch. This is the regular 15-inch model that's out right now. The new version, you're going to start at around 2,400. Let's see how high up I outfitted this one. I believe I was up to 6,000 for the one that I was outfitting before. So you can really go pretty whole hog on this thing. The idea is that it's a new, larger screen. Yeah, it starts at $27.99. Sorry, that's really where you're going to go with the new Pro. 16-inch display, similar to the 15-inch in body, but really the big changes here are, believe it or not, the speakers are supposed to be dynamite.
Yep.
And changes to the keyboard. Now, you might be able to hear the keyboard on this. This is the older version. It goes, it's super annoying and loud. I don't know if you could hear that, right?
Yep.
You hear us constantly typing on air, and in the newsroom, it's a nightmare.
Well, I believe that people shouldn't be typing on air, but yes.
Hey, I mean, I don't. I just sit here and do this. But what they're doing is they're silencing the keyboards, and they're changing the way they're built. It's now a scissor design rather than the butterfly design. And that's going to not only improve responsiveness, hopefully kill any of those issues where little particles are getting stuck under the keys and people have to replace them, and then silence the keyboard.
Can they really silence the keyboard? You won't hear people tapping?
I mean, look, the thing is, we've all learned a lot about keyboard design. These keyboards are 50% shallower than the old keyboards. I can't get through typing anything on my laptop anymore without double spacing, which creates a period in a lot of applications, double clicking A and stuff. I use an external keyboard now because I can't use this anymore.
I still use
It's a disaster.
There's big changes. They added a physical escape key. They changed the buttons.
And I don't know how you do it because you.
Well, I bang so hard. I mean, I've killed my caps lock key.
Right.
My caps lock key has split in half a number of times, but the nice folks at IT just replace it for me.
Notorious keyboard abusers.
Our typer.
All right, so new, really expensive MacBook coming to all of our lives sometime soon.
God, I can't wait.
And
I'm
hopefully
ready
the
for a
keyboard
new
works.
laptop. I would like one.
That's great. Dan Halley, thanks for stopping by. Talk to you tomorrow. The Bob and Renee Parsons Fund has raised over $160 million the last 7 years for its Double Down for Veterans Match campaign and has a fundraising goal of $20 million just this year. Joining us now to discuss is entrepreneur Bob Parsons, founder of GoDaddy and the founder of Parsons Extreme Golf, among other ventures. So Bob, let's start with the foundation and your work there. Of course, you are working with the Semper Fi Fund to support veterans. Talk to us a little bit about that push.
Well, what we're doing is the Semper Fi Fund was originally called Semper Fi Fund for Injured Marines, and we've since expanded it to cover all branches. And we help with PTSD when a young Marine or young soldier airman is wounded, and usually it's horrifically. We get somebody there, their family, to them, immediately. We get other service people there, and you got to get your ass back in duty, that sort of thing. And so what we do is we work on making the transition back to civilian life better. We help military families, and I tell you, brother, it's a wonderful thing. It's a daunting job.
That's right.
Well, let's talk about PXG, Bob. You're repping your brand here. The golf equipment business has changed so much. I mean, Miles is really the golfer here. I just like following the sport at the pro level. But, Nike got out, Adidas got out, so many, TaylorMade was sold off, and so much has changed for golf equipment. You guys make your clubs. You've got various golfers that are repping the brand. Why did you get in, when you got in, and how is it going?
Well, we got in because, first of all, we weren't going to compete with the other companies in the golf equipment business, tough business. Unit sales are down 23% since 2015. Prices are up a little bit, so revenue's flat. Thank us for that. But we got in because we're an innovation company, technology company, and the whole idea was we would spend whatever it took to make it an outstanding product, and then we'd put a price on it. As opposed to the way the typical golf industry does it, is they engineer to a price point. So we're different play.
So when you look at that strategy, and it's now 5 years since you guys launched, and you're still maintaining that price point. I mean, a set of PXG irons is going to run you more than $2,000, which is going to be, actually, Callaway's kind of catching up with some of the stuff that they're putting out. But when you look at that strategy, have you thought about changing what you want to do in terms of getting PXG into more golfers' hands by coming down the stack, as it were?
Well, no.
Okay.
In a word, and what is happening is other golf companies are trying to go up market to match what we're doing. Yeah. And it's always easier to go down market than it is up market. And so we haven't changed a thing. Now, we are trying to get our clubs in the hands of more golfers every minute, every day.
Absolutely, yeah.
And that's working for us. We just, we're on the Inc. 5000. We debuted as number 123. Our growth rate during the last measured period was 2,800%. So, it's a suggestion that what we're doing is working.
What do you make of the pro level right now? Miles and I are golf geeks, so you've got some guys that rep the brand, also some female golfers. How's that going, and who excites you in the sport?
Well, the people that excite me in the sport are the people that play my clubs. The rest of them I don't pay too much attention to. And we're pretty excited about a young PGA Tour player, Wyndham Clark. He is excellent. We have a guy we just signed. He's not on tour yet. He just came out of the Air Force Academy. His name is Kyle Westmoreland. His average drive is 355 yards.
That matches your veterans' causes as well.
Absolutely. And so, Bob, you obviously, going back with GoDaddy, you've seen a lot of changes in the internet space, and we're talking here about the streaming wars. We're talking about what's happening at Facebook, at Instagram, at Twitter. When you look at the internet landscape right now from a business perspective, what stands out to you in terms of where the puck is moving to? We've seen in the stock market, these SaaS plays have been on fire over the last couple of years. But really, it's like the big entrenched tech giants continue to get bigger and bigger. What stands out when you look back at that space you were part of in the early days?
Well, it is, Google's always formidable. Microsoft is, I think they're coming back, more than they used to be. And Apple, well, still a force to be reckoned with. As for me, I'm building shopping centers. I'm selling golf equipment. I'm low tech these days, brother.
Bob, what is the domain name selling business these days? I mean, is that still a really good business to be in? There are obviously so many that followed GoDaddy's lead.
Well, I think when you sell a product that everybody needs and everybody's going to pay you every year for it, and it doesn't require any inventory, and you get paid in advance, I think that's an excellent business to be in.
Recurring revenue, baby.
Yeah,
the SaaS plays that we talk about.
It all is. All right, Bob Parsons, PXG, founder of GoDaddy. Thanks so much for stopping by. All right, Yahoo Finance is out with a new podcast, A Legal Tender, that dives into the mysteries in the business world. Season 1 focuses on the rise and fall of businessman and energy executive Aubrey McClendon and the eternal question, can fracking actually make any money? Joining us now are the hosts of Legal Tender, Yahoo Finance's Ethan Wolfman and Bethany McLean, Vanity Fair contributing editor. So, Bethany, I guess for folks who don't know McClendon, and I'd be surprised if too many of our viewers haven't heard of him, but when you think of Aubrey McClendon and the legacy he left, to you, where does it stand at this point, from this vantage point, in the fracking kind of revolution?
Well, so Aubrey is one of those great characters that come along every so often in the business world, right? Like a master salesman. I was told this story by a source at the very beginning. He said, I didn't trust Aubrey. I didn't believe in his business model, but I never let him into my office for a meeting, because if I had, we would have bought a ton of stock and it wouldn't have ended well. And Aubrey was the guy who really pioneered one of the critical elements in fracking, which is money, raising capital. He didn't pioneer the technology, but he's the guy who convinced investors around the globe to hand over literally tens of billions of dollars. And that's the key ingredient in fracking, is capital. And so that to me is Aubrey's legacy. He's the guy who brought capital to the
Wall
fracking
Street
industry.
to the business,
Yes,
in a way.
yes, he brought the money.
And then I guess, Ethan, you know, the story of Aubrey McClendon has a tragic ending, and I think there was many things that happened towards the end of his career that people remember before they remember his wildcatter phase. I mean, as you researched this story and developed this story, what to you stands out about the Aubrey legacy as we kind of understand it today?
And what's so interesting is that his whole career in life is this perfect parabolic arc, obviously with a bit of that in the middle. I mean, he failed and then unfailed and then failed again.
Yeah.
But what's so interesting especially is how his personality, I think, kind of drove the entire story. A lot of fracking, and Bethany especially can speak to this, is built potentially on something maybe similar to an Emperor's New Clothes kind of thing. It's not clear whether fracking can even make money, but because he was so charismatic as this individual, and because he gambled his own money anytime that he played one of these games, that to me is probably the most interesting part of this entire story.
There's a great line, right? F. Scott Fitzgerald, there are no second acts in American life. That couldn't be less true in the business world, and Aubrey's one of those characters who proves how untrue it is, because he had a second act and a third act.
And his company, Chesapeake Energy, right? And I want to follow up on that a little bit, because, Bethany, I know this is a point that you're keen on, and it's somewhat controversial, that fracking isn't really all that it's made out to be. Right. I mean, a lot of people think, wow, this is an American energy revolution. This is a great thing.
Look
that's
at gas prices.
Freedom molecules.
Right?
The Trump administration calls them freedom molecules.
Right.
Well, look, it's this whole august idea of American energy independence that politicians on both the left and the right have been talking about since the 1970s. The idea that we don't have to rely on those messy places in the world for our energy needs. But it's not clear how much oil and gas America would be producing if the capital markets dried up, because these companies don't make money. They're dependent on a continued stream of financing. In a way, it's a Ponzi scheme. And so it's just not clear what happens to this much vaunted revolution if the capital goes away. But the second part of it is the whole concept of energy independence is pretty fraudulent when you think through it. Back in the 1970s, when the Texas Railroad Commission set the price of a barrel of oil, it meant something. Now, today, when the price of a barrel of oil is set on global markets, and when our economy is driven by imports from Asia, which depend on the Middle East, there's no such thing as energy independence. It's a meaningless concept.
And I think kind of adding to that, an idea that I think you said came from Charlie Munger, him saying, well, okay, maybe we have a ton of gas and oil, but why would we want to spend all of that first? Wouldn't we want to just use everyone else's and then have ours?
Yes.
I think that's a really interesting point.
Can I ask you guys one thing, too? I mean, I don't know if we want to give this away, but there's this mystery at the end of the story, right? Or maybe you just tell what the mystery
Google
is.
It, so yeah.
Yeah. Well,
Which is his demise.
Yeah.
Right.
I mean, he dies. I think that we can spoil it for everyone that he dies.
But there's some ambiguity, I guess, around the exact cause. I mean, I remember when the story broke, it was like, oh, I can't believe that happened that way. But did it, I guess, is it as clear cut in your mind after the story?
Well, look, on its face, it's hard to argue with, the circumstances. He was driving extremely quickly, not intoxicated, and smashed his car with no, brake marks against the side of a bridge. Now, this comes immediately following him being indicted by a grand jury.
There's that point
So,
too.
I mean, those things have a pretty strong suggestion in there. But I think Bethany convinced me that It's really not clear. I really have no idea. There's a lot of good reasons to think that it could have completely been an accident because this guy was crazy.
Right. The indictment would have cost him everything. It wasn't just an indictment. He'd secured many of his loans with personal guarantees. One of the things I love about Aubrey, and I actually admire in a sort of Titanic kind of way, is that this is not a guy who used other people's money. I mean, he used other people's money, but he used his own too. He risked everything time and time
Skin in the
again
game.
because he was such a believer. And I have, there's an admirable quality to that, right? So he would have lost everything had he been indicted. But on the other hand, he's a guy who lost everything several times before, and that never seemed to stop him. And people who were with him in the days leading up to it said he showed no signs of any kind of stress or any kind of that anything was different. So I don't know. It remains a mystery.
All right, well, you can listen to the full story of a legal tender, Aubrey McClendon, on Apple Podcasts. That's a new product out from Yahoo Finance. Bethany McLean, Ethan Wolfman, thank you both for doing the story and for joining us today.
Sports betting has become big business in the U.S. More than $10 billion has been wagered on sports so far this year alone. And our sister site, Yahoo Sports, is getting in the game. Yahoo Sportsbook launches today. It allows users to see odds for a range of sports. Users in New Jersey will be able to place actual bets online. It's all powered by the BetMGM platform. That's owned by MGM Resorts International. Guru Garapan, Verizon Media CEO, joins us now. Verizon Media, by the way, is the parent company of Yahoo Sports and also of Yahoo Finance. Guru, it's good to see you. Thanks for being here. So it seems like there's a lot of enthusiasm about sports betting with the legalization push nationally, but specifically in New Jersey. Why did it make sense for Yahoo Sports to get in on this business?
Look, I mean, for us, it was a natural transition. When you think about Verizon Media, Yahoo overall, you know, I've said as a mission for us is to connect people and to their passions, but also help them live a better life. When you think about that, take finance, sports, or all the use cases that we have, we were not closing that loop. So today, we are one of the best sports properties in the US. We have an amazing top of the funnel. The natural extension for that was to go into deeper and close the loop into a transactional world. And we said, look, sports betting is something we know our consumers really wanted. And this partnership with MGM was even better for us to go in. And New Jersey, of course, is legalized. So it made a lot of sense for us to go into it. I'm super excited. And I actually placed my first bet last night.
Oh, what was the bet?
It was on the Lakers. And I won.
Yeah.
So that was good.
How do we make money on this?
Look, the way, so first of all, I'll talk about the partnership. So it's with MGM. It's a very deep strategic partnership. Today, if you want to use it, you go to the sports app, go to the scores tab, and you can look at the odds and you go through the format. And it's normally a deeper strategic partnership. I don't want to talk about the rev share and the fees details. It's more confidential. But net of it is you have the overall wagering that comes in, then you have the gross gaming revenue, then you have the net gaming revenue. That's how the flow works. And there is an agreement between us and MGM to get that through.
I guess for sports betting apps, right? First of all, I'm a New Jersey guy, so good job going with New Jersey. Not like there's another choice. But for sports betting apps, I guess where do you see the biggest competition coming from, right? Because sports betting is taking off, especially online, obviously. What gives, I guess, the Yahoo Sports app really the in? This is meant to make the app more sticky for users to really want to go back, continue to go back if they do well, maybe not if they don't do well, but why kind of go with that? And then what's the competition like?
So if you think about the biggest thing you need is consumers and top of the funnel, right? That's what Yahoo Sports has. Today we have 60 million monthly active users on Yahoo Sports. And you think about fantasy, we are the #1 app. When you think about fantasy, getting those users is the hardest thing for betting platforms today. That's the reason MGM and us work well. We needed a good betting platform, and we have the top of the funnel consumer platform. And we've seen them when you do fantasy, when you play through all these things in sports, the natural extension was betting. So that was the easy one because we have the top of the funnel. Acquiring consumers hard, so we bring that advantage to the table. When you look at competition, I think a lot of them have announced, going into the space, but I don't think anybody with this much of a consumer base has come into it. So I think we are playing a very good advantage game right there.
So how does Verizon Media expand this into other states? And then I imagine there are going to be critics who say that this is not the kind of thing that a content producer like Verizon Media should be involved in. So what would you say to them as to why it is something we should be involved in?
On the first one, how we expand, look, this is legalized sports betting, so we follow the states that are legal, mainly where MGM is in, and as they go into states, we'll follow them as a platform. The second thing, there is a natural extension from content to commerce. I've talked about this, which is people are consuming content, but they want to take the next step to either transact, take in commerce to buy things, but also on the digital goods side. So it made for us, that was something we've seen consumers talk about it. I'm sure there will be critics, but the net of it is we know our most engaged consumers want that, and we're following that flow. So it's really closing that loop.
So what's the future plan then? I know it's just been announced, but we just showed the map where legalized sports betting is taking hold. I know some states they've passed the legislation, but are still writing the rules surrounding it. So what kind of growth opportunity do you know how many Yahoo Sports users there are in New Jersey? And then how many folks do you think who are on the Yahoo Sports platform are eventually going to be using this?
Sure. We do know how many users are. That's a model that we went through and we've seen it. I won't share the details around it. I think the next is really working with states, mainly MGM and the states, to see how fast they come up with the rules and how fast we can go in. I think New Jersey has done a great job for us to allow to get into it sooner. So I think it's all going to be how fast the states now follow, create the rule book, and let MGM go through their process, and then we piggyback on it. So, we have an internal roadmap again, but we're watching how, and we're going to help the states and MGM through this process as well. So
and I realize you have to go across the river to do this, but
you do.
So what's your next bet going to be?
There is a game tonight. I think the Mavericks are playing, I'm trying to think, Knicks. So I'm still watching the odds. So the best part about this, you don't have to be in a state to watch the odds. So that's the other thing. Even if you cannot place a bet legally, you're in the state, but at least there is amazing content that comes through. So we share the odds, which we get through the MGM platform, showing that. So I would encourage everybody to go to the Scores tab on Yahoo Sports, watch the odds, pick your teams, and place a bet.
And then you're ready for when it goes live, wherever you are.
Wherever you are.
Guru Gowrappan, thank you very much for being here on The Move.
Thanks for having me.
The business of getting pregnant is attracting a lot of attention from venture capitalists and employers. With 1 in 7 women facing fertility issues, companies including Goldman Sachs are now helping workers pay for fertility treatments. And social networks like Peanut are offering emotional support. I sat down with the app's founder and CEO, Michelle Kennedy, to talk about her latest platform called Trying to Conceive. Michelle, thanks so much for being here.
Thanks for having me.
So first off, just what motivated you to start TTC?
I think that we saw so many conversations happening on Peanut surrounding female gynae health and fertility and the challenges that women might be encountering, particularly around secondary fertility. So we kind of were like, hang on, let's take a beat. If these are women who are experiencing secondary fertility, as in they've already had a child, imagine
trouble getting pregnant again. Okay.
Imagine the number of women who are going through this for the first time, who have no support network, who have no community. And so when we kind of took a step back, we were like, this is affecting 1 in 7 women. 1 in 7 women are going to go through fertility challenges. We have best-in-class learning about how to build a social network for women. Let's open it up to enable women who are going through their trying to conceive journey on Peanut.
Why do you think there does seem to be this taboo surrounding the subject of fertility, of miscarriages? Hilaria Baldwin recently came out and said that she suffered her second miscarriage, and she already has, I believe it's 4 children with Alec Baldwin, and she sort of wants to open up that conversation and use her platform to help do that. Why do you think as a society there seems to be this taboo?
You know, we've been told for the longest time in terms of social construct, don't tell anyone you're pregnant until 12 weeks.
Right.
And that implies that anything where you've encountered loss before 12 weeks is not a loss. Well, of course it's a loss. If it happens in week 11 or week 13, it's still a loss. And so we hope by having a platform like TTC, women can come out and talk about it. 1 in 3 pregnancies will end in miscarriage. And that's such an enormous number. It means that we simply cannot afford to brush conversations which affect women's health under the table. We have to bring it out into the light and talk about it, because women have to feel that this is normal. These aren't fertility problems, this is fertility reality, and we have to therefore talk about it.
Now, Trying to Conceive sort of falls under the umbrella of the Peanut app, which is about 2 years old now. You have 1 million women on the app. How do you hope to monetize that? Because right now, from what I understand, the app is free.
That's right. So it's free to use and free to join. At the moment, we're really focused on the product. We're data obsessive, so we're constantly building the product according to how we see use, which is why TTC is coming. Monetization in the future, we think about a freemium model with premium features that users can pay to unlock certain features, but that's coming in the future. Right now, we're thinking about continuing to build the best-in-class product for women and a social network for women.
When you say collecting data, right away the flag goes up for me, privacy concerns. How are you keeping women's, in many instances, very personal data private?
So we don't share the data. When I say data, we're looking at aggregated data, and we're using that to inform product decisions. So if we see lots of women talking about a topic, it means we can build a specific feature within the product to serve that. So it's not about sharing data with third parties. We don't do it. It's not something we believe in. We are very fortunate and privileged that we host many private conversations that women have, and they have to continue to feel safe, and they have to continue to feel that they can trust Peanut. And that's why we don't believe in sharing with third parties.
Now, you just closed a $5 million funding round, so congratulations.
Thank you.
Bringing the total to about $10 million that you've raised. I'm curious if a lot of the investors are women. Are they from Silicon Valley? Sort of what's the makeup of the investors?
Yeah, we have a good mix. We do have female investors. We equally have male investors. Really, this is about seeing the business opportunity. Women are 50% of the population, and we deserve a product that represents us. And I think that all of our investors see that. We have US-based investors and some from Europe too. So we have a good split. Index did this round with us, and we're really excited to work with them because they really do have global experience of building social.
Now, I saw on the site you had an open letter to Meghan Markle about what she's been going through as a new mom, especially as a new mom in the royal family, very much in the public eye. I'm curious if she saw the letter and got back to you.
She did.
She did?
She did.
In what way? Did she just pick up the phone and say, "Hi, it's Meghan"?
She did.
That's crazy. Share with us, if you can, what she said.
It was amazing. Look, we did that letter to really recognize the fact that she made a very poignant statement that so many of our women will resonate with, which is no one asked how she was doing. Everyone asks about the baby, and no one kind of checked in with her, and it's something that we feel is a very common thread of women talking about on Peanut, no one really recognizing their experience as a woman. And so when we wrote the letter, it was just our kind of sharing with our other women who use Peanut that, you know, she felt the same, but we see all of you. And she did. She contacted to say thank you, and she was appreciative of the sentiment, and it's amazing.
What was it like talking to Meghan Markle on the phone? Wild. Do you think maybe she'll get involved in Peanut in some way?
I hope so. You know, we know that she's a tremendous supporter of women, and we're a tremendous fan of hers, and all of the women who use Peanut talk about her frequently with so much support and admiration.
Pretty cool getting a call from Meghan Markle. Kennedy, by the way, was a key member behind the dating apps Bumble and Badoo.
The Paley International Council Summit kicked off in New York City this morning. The conference features key media, entertainment, and technology executives. And Yahoo Finance's Dan Roberts joins us from there with one of them. Dan.
All right, Julie, thanks so much. We're here at the Paley Media Center event, as you said, and I've got Discovery CEO David Zaslav. You guys know Discovery, owner of so many big channels. David, thanks for being here.
Nice to see you.
It's been exactly a year now since the Scripps acquisition, giant merger for you guys. You gained Food Network, among other big channels. How is that going? Yeah, exactly right. How about that integration?
You know, if you look at it in terms of how we came together, put the IP and the aside, just in terms of synergy, we were generating about $1.4 billion in free cash flow. Scripps was generating about 700. We set a goal, so together we were 2.1. We set a goal of together, if we really reinvent this company, we can drive toward $3 billion in free cash flow. This year, we're on a trailing basis at $2.9 billion in free cash flow. Okay. So it's been a huge transaction in terms of benefit and free cash flow and EBITDA growth for the company. But in addition, Scripps for us wasn't just buying a number of channels and an IP library. It was the fact that they own all their content everywhere in the world, and that we have a chance to take that content and all those characters above the globe, and we can put them on channels everywhere in the world, or we could offer them, broadly direct to consumer. And so when we look at our overall company, Discovery, Animal Planet, ID, Science, Oprah, Travel. You put that together with home and food. And in the US, we're the #1 media company in America for women. And so when people think, who's the biggest media company in America, they'll think, well, maybe it's Time Warner, or maybe it's Disney, or maybe it's CBS. But all of our channels together aggregate a larger group of women in America than anyone else. And so it's the transaction not only gave us real economic growth, and gave us a massive IP library, but it made us the largest player in America for women, which is a great currency for us in the advertising market.
You mentioned direct to consumer. We're sitting down here just 2 days after Disney launched Disney Plus. Everyone is talking about what these giant companies are doing in streaming. Bob Iger a few quarters back said direct to consumer is now our #1 priority at the company. I'm sure you're watching all this and you're thinking about, now that we've gained an additional library of huge channels that have a huge following, especially among women, how we package those and create some kind of streaming offering. You guys haven't given many specifics on that. I know you already have an app that does a lot of Food Network exclusive content. Right. What are you thinking about in terms of an OTT subscription app? How do you go about pricing something like that, choosing what to put on that, and is that in the works?
Well, first, the good thing for us is that all the great media companies in the business have all gravitated toward scripted series and scripted movies. So you have Netflix, Disney Plus, HBO and HBO Max, Amazon Prime, Showtime, Starz. You have 6 or 7 or 8 players trying to be the dominant player in the entertainment pie.
It's a lot.
It's a lot. And there's going to be a lot of carnage. There'll probably be 3 or 4 that are left, and the rest of them will tip over because they're fighting for talent, they're fighting on price, they're fighting for the person that wants entertainment content. Which one are they going to go to? What we're excited about is we're not in that street fight. We own all of our content, but we own different kinds of content. We're not in the scripted series and scripted movie business. We own home, food, Oprah, Chip and Joanna Gaines, science.
Do you call that
natural history.
reality, by the way?
I'd call it, we look at it this way. People go to those entertainment products, they shut the lights, and they go there to lose themselves, to watch a great series and to forget about the world. People come to our content to find themselves. How do I fix up my house? What do I do with what do I do to make a great new kitchen? How do I make a great dinner for my family? I want to learn about science. What's going on with the environment? What's happening with animal extinction? With Oprah, how do I go and further my journey for a better life? With Chip and Jo, family values, core values. And so, for us, we think not only do we own all of our content, but we have content that's different. And when people turn the TV set on in the US, they could watch anything. And 50% of the time, they're watching scripted series and scripted movies. That's the pie that all those great companies are fighting over. But the other half of the time, they're watching our stuff. And it was awakening for us when we put Scripps together with Discovery. We were surprised when we emerged as the number 2 or 3 media company in America. And when we looked at the data over the last year and the data said we're number 1 for women.
Yeah.
And so we've really leaned into that. So I think we have a very differentiated strategy. And the entertainment players also, in many cases, they don't own their content.
Right.
They are
And
participants.
they're spending a lot to license their own content
Right,
back.
and they got to
sometimes.
license it back.
Yeah.
So one of the things that I think we've done well is we recognize very early that we need to own all of our content globally. And so we really have the flexibility to figure out how do we offer it in different ways.
We're talking about streaming. That's something that all the big players are looking at, testing out, trying. The other thing happening, I feel like when you look around media, especially television, it's all tying up. It's all M&A activity. Scripps was a huge acquisition for you guys. Are you, for the time being, done buying, or are you looking around at what could you buy next?
Well, look, as I said, we're generating close to $3 billion in free cash flow. So for us, and our business is still growing at mid-single digit in terms of EBITDA. So we have a very healthy core business. And that even incorporates the fact that we're spending a couple of $100 million on our direct-to-consumer opportunities. And so one of the issues that we have is over the next 4 or 5 years, we're going to have 10, 12, $15 billion of cash. What do we do with it? And so I think the focus for us is going to be: is there are there other great companies, or is there great IP out there?
Right.
We went out and we did a deal with Chip and Joanna Gaines. That was an investment because we think that could be a very big business with them. We went out and invested to get into business with Oprah. We invested to get into business with the PGA, where we own almost all the golf in the world. We got into business with Formula E because we think owning Formula E over the long term, over the next 10, 20, 30 years, could be very compelling. And so we'll look to invest in IP or sustainable assets to make us stronger. We started buying back a lot of our stock because we think we're undervalued. And we think we're unique in that most media companies are pretty busy. And we got a lot of momentum. We're outperforming our competitors. We got a lot of cash. And I think this could be a very good time for us over the next year or two to build growth and build momentum.
And you own all the content.
We own all of it.
All right, David Zaslav, thanks so much. Really appreciate it. We got to leave it there.
Good morning, everybody. I'm Alexis Christoforous.
And I'm Brian Sozzi, and this is the first trade for Monday, November 18th.
More MAX fallout. The FAA considers changing the way it certifies new planes, and another big airline pushes back its plans for getting the Boeing MAX jet back in the air. What this could all mean for Boeing, Airbus, and the entire aerospace industry.
And what vaping ban? The president reportedly walks back his plan to block the sale of flavored e-cigs as the industry fights back. We have the analysis you need to know.
And Funko goes to Hollywood. We are live at the brand new store celebrating all things pop, and we'll speak to the CEO about what brought Funko to Tinseltown.
Love those toys, Alexis. Let's get a look at the futures here ahead of the opening bell. We are off the highs of the session. Dow futures are indicating an open lower below Dow 28,000. S&P 500 futures slightly in the red. Ditto the NASDAQ.
All right, we'll get a full check of those markets for you in just a little bit, but first to today's big story.
The head of the FAA now says his agency is weighing changes to the way it certifies airplanes. In an interview with the Wall Street Journal, Stephen Dixon shared his thoughts about potential improvements as the FAA looks to and airlines around the world prepare for the Boeing 737 MAX to return to flight. Yahoo Finance's Alexis Keenan joins us now with more. Alexis, what type of changes are we talking about here?
Okay, so what Dixon is saying is, and this is coming from the International Air Show in Dubai, okay, and that's got underway as of yesterday, so we expect that more news will be coming here. Sure. But what he's talking about is the FAA getting involved, and we shouldn't be surprised to hear this, much earlier in the process, right? Holding hands with Boeing in a much different way.
I'm surprised it took them this long to announce this, frankly.
I am too, and you know, we should all have expected that this is coming. There is so much pressure here for this to happen, but at least Dixon is now coming out and saying and getting behind that idea that from the very beginning of the design process for any commercial aircraft, that FAA and Boeing both have to be involved, not checking boxes at the end of the process and Boeing simply, you know, certifying the plane there at the end and meeting the basic requirements. So that's what's going on here.
This is not just for Boeing, though, to be clear. This would be for any aircraft maker, including Airbus, which is in Europe.
Yes, it would be any aircraft that needs to be certified to fly within U.S. jurisdiction. And so, you know, also Boeing has now announced that they have some orders coming on for the MAX out of this air show. So just this morning, the afternoon for Dubai, of course, Boeing saying that they have now confirmed 10 orders of the 737 MAX with an airline called Sun Express. It's a joint venture between Turkish Airlines as well as Lufthansa. Also, we're hearing that Boeing is in talks with another airline. It's an Indian low-cost carrier. It's called SpiceJet. We don't know the numbers on that. So it sounds like they're starting to get some faith in the aircraft going back into service from these carriers. But again, they're probably selling these aircraft for, I would expect, perhaps a lower cost.
A song, maybe, yeah.
Right. If the FAA does start getting involved early in the process, I'm thinking higher costs and slower production schedules for Boeing.
Higher cost, and every single expert that I have talked to who has previously worked for long, decades at the FAA, they all say that the FAA just does not have the money to effectuate this. So it's going to be interesting. There has to be a lot more dollars added to the FAA, to the NTSB, in order for there to be regulators who can go through this kind of process, who are efficient enough at understanding these very, very highly sophisticated computers that all of the airlines are now putting into modern aircraft.
What about getting the MAX back in the air? Have we heard about the timetable for that yet from Boeing?
So Boeing is looking at January. They're saying that they hope to have everything submitted in January. However, Stephen Dixon also sent out video to FAA employees on Friday saying that we stand behind your methodical process and that you have time to do this. We're not on a timeline, says the FAA. And
the FAA, they need more money. For years, they have outsourced a lot of these responsibilities to contractors.
Yes, and that's been going on ever since the airlines were deregulated in 1978. And, they definitely are going to need more money in order to do what Dixon is proposing here.
All right, Alexis Keenan, we know you've been on top of the story from the beginning. Thanks for the update.
You're welcome.
Time now to head down to the New York Stock Exchange, check in with Yahoo Finance's Inez Ferre for an early look at what is happening there. And Inez, I thought the Dow was set to continue its record run after closing above 28,000 Friday for the first time ever, but it looks like we're losing a little bit of steam here this morning.
Yeah, that's right. We are losing a little bit of steam with the futures after a report that Beijing was a little pessimistic on the U.S.-China trade deal. So that's why you're seeing futures losing some steam this morning. I do want to mention T-Mobile, some news out of that company. CEO John Legere will be stepping down, and Mike Sievert, their COO, will take over as CEO starting in May of 2020, succeeding John Legere. And Legere tweeted out that this has been in the works for a while, that he hired Sievert back in 2012 and has been his mentee. And also, this move, though, does reopen the speculation as to where John Legere will go, since last week we did hear reports that WeWork was perhaps considering Legere for the CEO position, even though later on there were reports that he would not be going to WeWork. Then we also are watching HP this morning. This is after HP's board unanimously rejected Xerox's takeover offer at $22 a share, saying that undervalues their company. And also in a letter from executives from HP to Xerox, they cited concern over Xerox declining revenues since 2018, even though they did leave the door open for exploring a deal. And Deutsche Bank actually came out with a note saying that a combination of the two companies would make sense, but one in which HP would be the acquirer and not the target. Brian, Alexis.
Inez Ferre, thank you. Coming up here on The First Trade, Dear Mr. President, the open letter our editor-in-chief Andy Serwer wrote to the commander-in-chief. That's next.
Let's take a look at what's moving the European markets on this Monday. Mixed bag there. We've got the FTSE 100 up 7, the CAC 40 down 25, and the DAX over in Germany off 63 points. Yahoo Finance's Edmund Heafy joining us from London today. And Edmund, UK Prime Minister Boris Johnson has unexpectedly postponed his plan to cut corporate taxes. What's the latest?
Yes, Alexis. So Boris Johnson had up until now signalled that his government would in 2020 cut the UK corporate tax rate from 19% to 17%. But he told a conference here in London this morning that he would postpone the plan, something that he said would free up around £6 billion for public spending, including on the National Health Service. The Conservative Party has actually already dramatically cut the country's corporate tax rate. It's gone from 28% in 2010 to 19% now. And this was actually a previous pledge from Johnson's predecessor, Theresa May. And it's also likely to prove a popular one. Very few, even in business, had been calling for this cut.
And Edmund, how's the pound looking to kick off the week?
Well, Brian, the pound is up almost 0.5% against the dollar at the moment, and that's largely on the back of a series of very positive polls for Boris Johnson's Conservative Party. The currency is actually edging towards the $1.30 mark, though analysts don't think that it will be able to stay above that level if it ends up reaching it. This is all Brexit related at the moment. Obviously, so a Conservative Party win by Boris Johnson had been priced in, but these polls are suggesting that actually he could be going for a much larger majority in the House of Commons, which would give a surefire certainty to the whole Brexit process. The latest polls basically suggest that Johnson's party will get around 45% of the vote, which compares to the 30% that the Labour Party is getting. That would really pave the way for the UK to leave the European Union on January 31st, as is the current plan.
Edmund Heafy, thank you. It's been 3 years since President Trump's election, and while the economy is humming along, there could be some storm clouds on the horizon. Our editor-in-chief, Andy Serwer, is out with an open letter to the president and joins us now. Andy, your second open letter to the president. What made you write this one?
Well, I wrote him after he first got elected 3 years ago. And so what happened is that Facebook actually resurfaced the letter in my news feed, reminding me, this happened 3 years ago.
Yep.
And there's that. And then, of course, the election's coming up. There's impeachment going on. And then I also happened to see the president last week at the New York Economic Club. So all those things put together sort of said, maybe this is the right time to write the president again and let him know what's on my mind, also to give him an update on some of the things that I wrote him about 3 years ago.
And one of the things you said in that letter is you said he actually does deserve credit where credit is due, that he deserves some credit for at least sustaining economic growth.
Yeah, at the very least, Alexis, and I know Democrats don't like to hear this and even acknowledge it, but I mean, if you take a look at these things on the screen right there, the stock market, tax reform, regulations, unemployment, consumer confidence, all those things are sky high right now, are in really great shape. When you start to scratch below the surface, though, things may be not quite so rosy because economic and wealth inequality are still very, very strong. And that's part of what's dividing this country up.
Andy, you watched President Trump give his speech at the Economic Club last week, and you note in your story, you didn't feel much love in the room.
It's interesting, Brian, because, on the one hand, it's New York, not so friendly to President Trump, but these are business people, and there are also a lot of friends of his and acquaintances on the dais, Steve Schwartzman and people like that, Larry Kudlow right to his left. So they're business people, so they would be fairly friendly, especially given all those economic barometers I just talked about. On the other hand, I think that the people in the city who know him really well, they've kind of like acknowledge that he's done an okay job, but they don't have a personal bond with the president. And I think that a lot of his behavior is something they find distasteful, quite honestly.
What about his legacy? I mean, we don't know what's going to happen with the impeachment. We don't know what's going to happen with the elections. But what do you think, as it stands right now, what would President Trump's legacy be?
Well, I think he has not brought the country together. And I don't think he's really tried to do that. That's something he hasn't really sought to do. So I think that's a problem. But when you look at some of the things he said he wanted to do, which is things like immigration, like building the wall, he hasn't really accomplished that. And then there's infrastructure as well, something that I think really needs to be undertaken in this country for a variety of reasons, to spur the economy and also to create jobs for those people who are sort of chronically unemployed. And then there's the trade war. I mean, if he leaves without that being resolved, that would be like going into the China shop and breaking everything and then just walking out. I mean, Henry Kissinger the other day said that not resolving this could be incredibly destructive to the global economy for years and decades even to come.
All right. Well, it's a great letter. If you have a chance, do check it out on our website. Thanks for joining us, Andy.
Thank you.
Coming up here on The First Trade, violence escalates in Hong Kong as demonstrators face off against police at a university campus. Your news bites are next. Let's take a look at today's News Bites. Police and protesters are battling again this morning on the streets of Hong Kong. Hundreds of demonstrators are trapped on a university campus where police are trying to arrest them and using tear gas and rubber bullets to try to pin them down. Protesters responded with gas bombs. The demonstrators did win a legal fight, though, with the territory's highest court striking down a ban on face masks. 4 people were killed and 6 others injured in a shooting at a football watch party in Fresno, California. Police say around 35 to 40 people were attending the backyard gathering when a gunman approached and opened fire. The shooter is still on the loose. Police say there is no indication the gunman knew the victims. Staff at the Walter Reed National Military Medical Center in Maryland were not given notice before President Donald Trump's visit on Saturday. A source familiar with the situation described the president's unannounced visit as unusual. The White House press secretary says that the president decided to go on Saturday since it was a down day and denied that the 73-year-old Trump had any health issue. The Baltimore Museum of Art will begin adding work to its permanent collection only from female artists starting in 2020. Currently, just 4% of the museum's 95,000 permanent works were created by women. The museum says it is working to mend the gender imbalance throughout the history of art. Coming up, backtracking on e-cigarettes, why President Trump is reversing course on a ban for flavored vaping products.
Vaping-related illnesses and deaths continue to surface. President Trump has walked back his decision to ban the sale of flavored e-cigarettes. The president is now saying he wants more research and is reportedly wary of a ban because it might lead to job losses. But it has been reported that more than 5 million teenagers are caught up in vaping sweet-smelling smoke. Joining us now from Santa Monica, California, to talk about what some are calling a vaping epidemic is Dr. Roger Crystal, CEO of Opioid. Dr. Crystal, thank you for joining us. Are we looking at, with regards to vaping, is that the next opioid crisis?
I think it's broader than even just vaping. For us, we see real concerns around the widespread use of cannabinoids. And vaping is a huge part of that. The dangers of vaping in itself are concerning. And when you combine that with the inserting THC, which is quite common, it just makes things even more alarming.
Dr. Crystal, of course, you are the inventor of Narcan, the nasal spray used to keep people from overdosing on opioids. Are you in the process of coming up with something that could help with vaping overdoses?
Well, yes. Specifically, we are developing a medicine to treat overdoses from acute cannabinoid overdose. And acute cannabinoid overdose is a really serious condition where people end up in the ER. We think there's over 1 million of these every year in the United States. The issue with vaping is this increases the likelihood of an acute cannabinoid overdose. We believe that if you compare the amount of THC, which is the harmful substance in cannabinoids, then if you consider the amount that you're putting into your body with vaping, it's much, much higher than if regular cannabis is smoked as it has been in the past.
Would this be a spray that you're coming up with? Is it an injectable?
This is an injectable. We actually acquired this drug last year from Sanofi, the large French pharmaceutical company. And there's some really encouraging data on this product already. They did an evaluation of it in the Netherlands where they gave people this compound first and then told them to try and get high. And it blocked the effects of them getting high. They couldn't get high whether they felt they were high or others assessed them as being high. This did not stop them doing so. So we have this data. We're now developing this into an injection, and we're planning to enter the clinic after that. So really exciting drug. There's no other company doing this. And if we continue in the path we're going, we could be very well first to market in this huge epidemic.
Dr. Krystal, what's your take on President Trump's action or lack of action on the vaping crisis?
It's difficult to comment exactly because I don't have all the information at hand that perhaps the president has. The concern around vaping is that vaping might be beneficial for existing smokers. So if you are already smoking cigarettes and damaging your lungs, your heart, and your brain, we know that conclusively, then vaping may provide a more suitable alternative. And that's where there is a role for this. Anything beyond that, I find very challenging to justify, especially when people aren't making decisions with the full information at hand. We're still learning more and more about the dangers ourselves as time goes by. So that's my position on this.
Doctor, you say there are clearly inherent problems with vaping, even if THC is not part of the mix. So I have to ask, should vaping products even be on the market?
That's a great question. I say, armed with the information I have, it's difficult to make an absolute conclusion. I will say that there's very little to support them being on the market for people who aren't already smokers. So I do think there's a role for them on the market for people who smoke and want to stop smoking, because vaping probably provides a more suitable alternative. But for anyone else, I don't believe it should be widely available. Absolutely not at all.
All right, Dr. Roger Krystal, thanks as always. Good to speak with you this morning.
Good to speak.
The opening bell is coming up next here on The First Trade. Here's a look at the overseas markets action, and we'll be right back. Welcome back to the first trade. We're about 4 minutes away from the opening bell now, and stock futures losing some of that early momentum. They are mixed right now. Dow futures up just 3 points. We'll see if it can recapture that 28,000 level that it did on Friday for the first time ever. Let's go around the bell with Brian Levitt, global market strategist at Invesco, along with Yahoo Finance's Jared Blickery at the Wi-Fi Interactive Board. And I'm going to start with you, Brian Levitt, here at the desk. How much higher is this Dow going to go?
I think the markets are going to continue to go higher. This is a secular bull market. It began in March '09. You don't see the usual trappings of the end of an elongated bull market. We don't have extreme investor optimism. We don't have very heightened valuation. So I think this goes higher. The market right now is just looking for another catalyst. It got it from the Fed with lower rates, and now the Fed's saying, okay, we're sort of gonna keep rates kind of stable here. We had some incremental progress on trade, and then that got backed off a bit. So ultimately, I think these markets go higher. Cyclically, it's just looking for another catalyst.
Dow 30,000, first half of 2020?
Yeah, absolutely. And I think what's important for investors is we shouldn't be over impressed by large numbers. I mean, these indices are not mean reverting.
It's fun to talk about.
It's fun to talk about, right? I think what's the line? Only small minds are impressed by big numbers, something like that. So these markets are going to go higher. They're not mean reverting. Indices over our lives will go higher. Obviously you need a denominator. The denominator, whether it's earnings or sales or cash flow, will tell you whether the markets are significantly overvalued. They're modestly overvalued, but given the interest rate and inflation environment, nothing to be particularly worried about.
Could the next catalyst be that December 15th date if those China tariffs, the next round, get put into effect and there is no phase one trade deal?
Well, yeah. I mean, I think the longer there's any type of uncertainty or concern about what growth is going to look like around trade, you'll get volatility in markets and maybe some drawdowns. But ultimately, I believe 2019 was a year of working through some tough policy, and we've gotten to a better place. I believe 2020, 2021 are going to be policymakers making incremental steps to continue to support this cycle. And so, yeah, you may have short-term blips. We're going to have volatility. That's all going to be around policy uncertainty. But I suspect our policymakers will work to make the incremental steps to ease financial conditions and support the market.
Hasn't this market priced in too much in terms of a growth reacceleration early next year?
Well, look, we were at a pretty ominous state. The market was very spooked. We have to remember it wasn't that long ago that we were at 150 on the 10-year and the yield curve had inverted. So we needed to rebound from that. Better policy mix enabled us to rebound from that. Rates from 150 up to 190 something. The yield curve is no longer inverted, and the market should applaud that. So now you're at this place where rates bouncing between 180 and 190. Are we really getting back to a better growth mix, a better policy mix? And I suspect we are, and I think that'll take us up, back to trend growth and rates up above 2%. And the market should continue to applaud that. You're in a little bit of a pause right now, waiting for the next catalyst.
Jared, it looks like the world is a mixed bag at the moment.
Yes, it is. Asia as well. Shanghai Composite and Tokyo, the Nikkei, were up about 0.5%. Hong Kong, the Hang Seng, is up 1.35%. And then in Europe, the DAX and the CAC 40 both down about 5%. London up just barely. And a mixed picture in the U.S. Dow Jones 0. And the S&P off just a fraction, about 6 basis points. Something interesting overnight, still moving on trade expectations and headlines. This spike up was just before the European Open, and we might have opened up at record highs, but then we saw the Chinese throw some cold water on trade once again, and we're down not too far from where we closed on Friday. But another thing is analysts are increasing their expectations for the 2020 S&P 500 targets. Even Morgan Stanley is now bullish, and they're looking at 3250 as a base case in 2020. Could be higher. Guys.
Even Morgan Stanley. Yeah. All right, there we have the opening bell at the New York Stock Exchange and the NASDAQ to kick off a new work week on Wall Street. Dow Industrial is going to start the day down 30 points. In terms of that catalyst we were talking about, Brian, which sectors are going to have a leadership position as we head into 2020?
I think it's too late to be defensive. So the defensives was when you were going from rates at 325 down to 150, right? That period has passed. So where you've wanted to be is the more cyclical parts of the market. The question, I think, for most investors is, do you want to be in the more value-oriented part, cyclicals, or do you want to be in the growthier part? And we debate this a lot internally. as the economy recovers off of that really ominous environment in the middle of the summer, you want to be in the more value-oriented parts of the cycle. So those are things like financials and materials and energy and even industrials. I suspect that this improving mix of growth doesn't get us to a new higher sustained level of growth, more a trend growth environment. To me, that gets us back to more of the growth cyclicals. That would be things like technology, consumer discretionary, the names that have led throughout most of this cycle. I think in order to get a true value-oriented cyclical rally, you would need either a new higher sustained level of growth or a rollover of this cycle into a recovery.
How do you think about election risk next year in terms of picking sectors and stocks?
I mean, the thing about, I've always told people hating the government is not an investment strategy. So we have to remember that we don't elect dictators or autocrats.
It's a good thing.
Yeah, which is a good thing. Yeah, I think a lot of people in 2008 were concerned about a more left-wing agenda and what that was going to mean for the markets. Far more interesting at that point to know that the Fed funds rate was at 0 and stocks were as cheap as they've been in 40 years. And then in 2016, the idea was, well, if Trump wins, the deregulation and the tax cuts will get us to a new higher sustained level of growth. So buy the more value-oriented parts of the market, and growth outperformed. So what is my message there? My message there is people probably overstate it. Now, in some sectors or industries, there might be winners or losers, but we don't even know who the nominee is yet, right? We don't know what the polling is going to look like for that nominee versus Donald Trump. And remember, we're electing a leader of the executive branch. You also have to know what the Senate's going to look like. You want to know what Fed policy is going to be. So I wouldn't put too much emphasis into it.
President Trump reelected, good or bad for stocks?
And I think the market would be fine with a continuation of these policies. They're going to be the market's going to be far more interested, as always, in what the Fed is doing. What type of improvements we can make in trade rhetoric. But I don't think the market is going to view a Trump presidency or a Pete Buttigieg presidency or an Elizabeth Warren presidency and say, well, it's very short-sighted to say this result is going to take us to a new higher sustained level of growth or is going to take us to a lower level of growth. I mean, we're already at full employment. We're already with Fed easing. I mean, to me, those are far more interesting. And remember, presidents get, 100 days to have a signature accomplishment, and then they lose the House 2 years later anyway. So I wouldn't overstate it.
Oh, is that how that goes? Okay.
Seems to be how it goes.
Hey, Jared, looks like the Dow pulling back from that record high. What's happening?
Just a little bit. And we don't have a lot of movement, a few standouts here, but Apple and Microsoft both down just nominally. 10-year yield is down a little bit, so we're seeing JP Morgan about flatline, Goldman Sachs down 0.4%. Healthcare had a huge day on Friday afternoon after Elizabeth Warren dialed back some of her plans for Medicaid for all, made him look more like Joe Biden's. That's that surge we saw here. Now up 11%. It's up 2.9% today. Nike is up 0.5%. If we look at the sectors that are leading right now, we can see healthcare is up again solidly 1/3%. And this is something that's been lagging all year long, has had kind of a resurgence since we saw this factor and sector rotation over the last couple of months. Real estate, interesting play there, up about 16 basis points. The worst sector is energy. That is down 0.9%.
Yeah, Brian, this market seems to be being held hostage by these trade talks.
Yeah, of course. And I think the concern, the way this happens is anytime you get some uncertainty around trade, you get a little bit of a flight to quality, which strengthens the dollar, which slows down U.S. economic activity, which slows down earnings growth. And we kind of rinse and repeat these rolling policy concerns that we're dealing, whether it's the Fed or whether it's trade. What investors really should be watching is watch the dollar, watch financial conditions, and assess whether things are starting to get better or worse.
You also have to watch December 15th if those new tariffs come into effect.
Yeah, I mean, the reality is, though, what this market is looking for is just some certainty on this, right? So tell us the rules and let us assess as investors and as business leaders what we want to do within those rules. It's the ongoing uncertainty that's problematic. So yeah, if you get to December 15th and you have the increased tariffs, that's not good for economic outcomes. It leads to less efficient economic outcomes. But less efficient economic outcomes doesn't necessarily mean a recession. What's most important is some certainty that we know the rules of the game so that businesses can start to invest again.
What about your allocations right now? now? How much are equities? Are you holding on to some cash? And if so, how much?
Well, I'm invested for growth. I've got, as I've told you before, I've got 2 kids. I got to get through college at some point. So,
I hear you, Brian.
So I'm investing for growth. I don't think that this cycle is ending anytime soon, and I think growth assets are still going to outperform. I also think that a better policy mix in the U.S. can start to unlock some value outside the United States. So you're right, there is the risk that this trade uncertainty persists. I think you'll see incremental improvements that starts to unlock some value in the emerging markets. So I'm favoring equities over bonds, credit over treasuries, and within equities, I'm favoring true growth sectors in the U.S. and starting to think about the emerging markets.
Does China's economy reaccelerate next year?
Well, what China needs to do is stabilize their economy. And so you've seen them lower rates, you've seen some fixed investment, and a better policy mix in the U.S. You're starting to see some hints of leading indicators stabilizing, and that's a good sign for the emerging markets and the global economy.
All right, well, here comes Dow 30,000. Here first, Brian Levitt. Always good to see you.
Good to see you, too.
Jared Blickery, thank you. Coming up here on the first trade, oil drama. The roadblock Saudi Arabia is hitting over Aramco's unprecedented IPO. Let's head down to the New York Stock Exchange and check in with Yahoo Finance's Inez Ferre. Inez?
Brian, right now we're looking at the Dow that's just up 6 points. It's relatively flat right now. We are watching Okta. This is after Okta was cut to a hold at Canaccord with a price target of $120. The analyst note says that Okta is the market leader, but by a large margin, but the competition really is getting tighter and that the stock is fully priced. We're also watching Tyson Foods. This is after Tyson has announced that that facility in Kansas, which had caught fire back in August, will reopen in December and it will reach normal capacity by the beginning of January. Remember that in their latest earnings report, Tyson Foods had noted that beef volume was down because of that facility that had been closed. And then we're also watching Estee Lauder this morning. This is after the company announced that it's acquiring the remaining stake in Have & Be. This is a Seoul-based skincare company. They own Dr. Jart Plus, and they acquired part of this company back in 2015. Well, now they're acquiring the rest of this company as they continue to push into Asia. And remember that for a lot of these beauty companies, skincare has been a top performer, outperforming cosmetics. Brian, Alexis?
All right, thanks so much, Inez. We'll see you a little later on. Oil on our radar today after closing at its highest level in 2 months on Friday. Yahoo Finance's Jared Blickery is back at the Wi-Fi Interactive Board with our commodities report today. Jared?
Yeah, we have oil down about 0.75%, but it had been up earlier, and it did peak just above 58, which would be a 6-week high. And I can't see it here because of the granularity, but it did do it briefly. And again, we'll look at our 3-month chart here in a candlestick form and see what the support and resistance levels are. And here we can see just barely eked out that 6-week high, but the trend is still up here. Could pull back to say 55 or so, but overall it is intact. We got to talk Saudi Aramco, guys, because that could be a big factor in another month or 3 weeks.
Come on, Jared, I was going to tee that up for you. What's the latest on Aramco?
Well, okay, so they're going to probably publicly list on their own exchange, the Tadawul exchange, on December 5th. That's right around the time of the next OPEC Plus talks. They want to get that valuation up. They're looking at $1.6 to $1.7 trillion, but they had to cancel the roadshow. They're not going to London or the rest of the European countries on that list because there's simply not demand. Investors want to see $1.5 trillion. They want a better deal. Based on current oil prices, that's not entirely out of line, but it's still going to be almost or the biggest IPO ever. They would raise $24 to about $27 billion. Remember, Alibaba raised $25 billion. Now, at the time, they were only worth about $250 billion. So we're talking about a company in Aramco that's about 5 or 6 times the size of Alibaba when it went public. In terms of dividend yield, they're going to be looking at a little bit below the market average for energy companies, 4.4 to 4.7%. By way of reference, Exxon is 5%. Chevron is all the way up at 6.5%. So they got some competition out there, and they're going to dial for dollars. They're going to get most of their investment money from the local market. They decided they can't hit the investors in the international market, although they might get some signpost investors. And let's not forget, this is Prince Mohammed. He executed a palace coup 2 years ago, and he's dialing the same people, some of them who were locked in the Ritz-Carlton, for money. So I think he'll raise it.
Womp, womp, Aramco. Jared Blickery, good to see you. With trade war optimism and falling interest rates running rampant on Wall Street, gold prices are seeing a bit of a downturn. Here with us is Mobius Capital Partners founding partner, Dr. Mark Mobius, to talk future of gold in this market. Dr. Mobius, good to see you here. Gold prices have come down a little bit. We've seen them come off the highs, but I'm looking towards next year. I see a lot of low interest rates. I'm seeing some slow growth. What's your outlook for gold next year?
I think gold will continue to do very well simply because interest rates being so low and money supply increasing so dramatically globally. And now, of course, you have cryptocurrencies coming into the fore. So nobody really knows what is the money supply, and therefore they have to retreat to something which tends to be a little bit more solid, and that's gold. So I think gold will continue to do well.
Dr. Mobius, not only do you want people to hold gold, you say they should hold 10% of their portfolio in physical gold bars. Why is it important to have physical gold?
Simply because, as you know, if you look at history, governments tend to take over the gold holdings of anyone if they have them in a listed vehicle or in some storehouse which the government can get a hold of. And don't forget, I'm talking to not only to U.S. investors, but investors globally. And of course, as you know, in India and China, traditionally, they've always had physical gold, simply because there have been many cases in the past where the government took over all the gold that they had.
Dr. Mobius, you have made a career on studying and investing in emerging markets. What's your outlook for next year? Can emerging markets still do well with China growth slowing down and all the unrest we're seeing in Hong Kong?
I think finally emerging markets are beginning to match the incredible U.S. market. If you look at the statistics recently, you'll see emerging markets index has done pretty well. I think next year will be even better because people are going to realize they've got to diversify away from the U.S., not give up on the U.S., but use some of that money to get into other markets. And of course, as you know, emerging markets are continuing to grow at double the rate of the developed countries. So I think it's a good time to be in emerging markets, and there'll be good growth, despite the fact what's happening in China. But even in China, if you look at the index, the Chinese stock index is doing pretty well.
Given that you like the emerging markets and gold so much, I'm guessing you are betting that the dollar is going to remain weak for some time, are you?
Well, the U.S. dollar index, if you look at it, has done very, very well. And most of these emerging market currencies in the past 2 years, 3 years, have underperformed. Now you're beginning to see a change. Many of these emerging market currencies are beginning to outperform the U.S. index, the U.S. dollar index. So I think next year will be good for some of these currencies in emerging markets. Doesn't mean the U.S. dollar is going to get dramatically weaker, but it's not going to match the growth of some of these emerging market currencies.
Are you surprised the Dow has eclipsed 28,000 this year? Given everything that's going on in the world, a lot of uncertainty, especially within corporate America.
No, because if you look at the incredible U.S. economy, how well it's done, it's certainly reflective of what's happening in the stock market. And interestingly enough, stock markets tend to precede the economy. So what the stock market is telling us is that the U.S. economy will continue to do well.
So how much further do you think the Dow can run? Do you see Dow 30,000 in the first half of next year, Dr. Mobius?
I think it's quite possible. You could see that happening, barring any major incident in the administration. Assuming that Trump stays in the U.S. presidency, I think the stock market will do very well, and the economy will do well.
Conversely, if Warren gets in there or Biden, what happens to the stock market?
we're going to be in trouble. There'll be a real problem.
All right, we're going to leave it there and let history play out. We'll talk to you again, Dr. Mark Mobius. Thanks so much for joining us.
Thank you.
Coming up on The First Trade, putting pressure on Tesla. Ford unveils its all-electric Mustang SUV. Your companies to watch are next. Now for a look at some of the companies and stocks the Yahoo Finance team is watching for you today. HP is keeping the door open to a merger deal with Xerox even after rejecting a $33 billion offer. HP's board said the unsolicited offer of $22 a share was too low and they worried about combined debt. Still, they said they are open to talking. Activist investor Carl Icahn holds stakes in both companies and has been pushing for that merger. Google's cloud gaming service called Stadia just doubled the number of games that will be available to users on launch day. Gamers will have access to 22 games when Stadia goes live tomorrow. Titles include NBA 2K20, Final Fantasy 15, and more, with a slate of additional games arriving before the end of the year, of course, just in time for the holidays. And Apple is finding some success in China. The company shipped 10 million iPhones in China during September and October. That's according to Bloomberg, and that is up 6% from the same time last year. CEO Tim Cook credits the iPhone 11's performance in China to trade-in offers and a new monthly pricing program. And WeWork is reportedly making plans to cut at least 4,000 jobs. The New York Times says those cuts could be announced as early as this week, with some 2,500 positions slashed in its core office space business. Another 1,000 people are expected to be let go as WeWork shuts down non-core businesses like a private school. The report comes days after WeWork reportedly told investors it lost $1.25 billion last quarter. And Ford has unveiled its first ever all-electric SUV. The automaker introduced the Mustang Mach-E last night in Los Angeles. The 2021 model will roll into dealerships late next year. Drivers can snag the car starting at about $44,000. And stay with us, because coming up next hour on Wi-Fi AM, we'll speak with Joe Hinrichs, Ford's president of automotive. And those are your companies to watch for this Monday, November 18th. Still to come on The First Trade, open for business. We are live at the new Funko store in Hollywood, California. We're going to talk to the CEO straight ahead.
Toy maker Funko is opening a brand new mega store in Hollywood today. The 400,000 square foot store features lifelike Funko characters and sets inspired by pop culture favorites. Funko CEO Brian Mariotti joins us now from that store. Brian, always good to see you. I thought retail stores were dead. Why are you opening this big giant store?
Yeah, I think, that might be a little bit over exaggerated, but, retail times entertainment, we call it retailtainment, isn't. We did phenomenal with our flagship store up in Everett, Washington, which is a very small little town, and it greatly exceeded all expectations. Doing this on Hollywood Boulevard and being so close to all of our content providers, our licensors, made a ton of sense, and we are excited. We have 2 days worth of people slotted in just to attend the store. That's how much demand there is. So we're off to a great start, and we're super excited about today.
But also, Brian, to be fair, this is not just a brick and mortar store. You are really taking it to the next level and making it experiential, right?
Yeah, I think what we're seeing here is everybody's got a camera in their pocket, and the idea of providing a store where you can come in and shop all of pop culture and entertainment, yet sit on the dragon from Game of Thrones and crawl inside a Rick and Morty spaceship, or visit a Wakanda set from Black Panther, or go to the Guardians of the Galaxy, or climb in a ship from Ariel in The Little Mermaid. The idea of this Instagram meets retail environment is something we were very excited about, and we know that this generation is all about selfies and posting and fear of missing out, and we think we've captured this in 40,000 square feet on Hollywood Boulevard like nobody else has done in North America.
So very true. It is the selfie generation, Brian. Switching gears, Disney Plus looks like it has started pretty strongly for Disney. What content, what toys do you have for Disney Plus this holiday season?
Yeah, I think, we're excited about 2020's content slate. Obviously, a much larger relationship with Pokemon. We're excited about the Marvel's Eternal in the fall, and obviously the Wonder Woman sequel and the Harley Quinn sequel for Suicide Squad. Tons of TV shows. Real excited about the start with Disney Plus and our demand for The Mandalorian. through the roof. So I think, it's not an A+ content year like 19, but there is tons of stuff to keep us busy. And again, no one monetizes evergreen content like we do. So we're excited about what 2020 is going to bring.
I like that you mentioned The Mandalorian. That might have to be on
Love that show.
On my Christmas list. I know it's only 2 episodes so far, but is there I know you get this question all the time, but I am curious. Best-selling Funko at the moment, Brian?
Right now, believe it or not, this is what's so interesting about us. Harry Potter's been our #1 license for the last 2.5 years. The Office, the NBC sitcom, is absolutely killing it. Pokemon, Dragon Ball Z, these are all things. We're still selling Avengers Endgame stuff hand over fist. So it's always been a nice balance of all the different licenses we do, and but to see some of these whimsical licenses like The Office really excel is really cool.
Brian, not to be a downer here, but December 15th, we could have a fresh set of tariffs go into effect. Are you prepared from a business perspective for those tariffs?
Yeah, absolutely. I mean, I think we're ahead of the curve. I mean, 70% of our products are produced outside of China. The remaining 30% gets distributed all over the world. If they are enacted, we have a plan to either lower cost of goods in China, move products out of China, or pass some of that on to our North American retailers. We're in a phenomenal position ahead of if the tariffs are truly enacted. So there isn't any concern for us, and we don't think it's going to affect business.
Brian, when are we going to get one of those big mega stores here in New York City?
Hey, we're looking. I can tell you right now, it's an interesting time, and we'll use this as a larger proof case like we did with Everett, Washington. But we're pretty sure this is going to be phenomenal. People are flying all over the world to attend today's opening. I wouldn't be surprised if another one of these pops up somewhere, somehow, soon.
We wouldn't be either. Brian Mariotti, good luck today with the grand opening, and thanks for joining us. And that's going to do it for the first trade for this morning. I'm Alexis Christoforous.
And I'm Bryce Sazi. Now let's get one more check of the markets with Inez Ferre down at the New York Stock Exchange. Inez?
Brian, Alexis, the Dow is hovering around that 28,000 mark after it closed at a record on Friday above 28,000. We're watching Workday this morning. This is after Workday was cut to equal weight at Morgan Stanley with a price target of $180, down from $219, with the analyst note there citing a slowing HCM segment for the company and also a spending backdrop. And we're also watching T-Mobile. This is after T-Mobile announced that CEO John Legere will be stepping down in May of 2020. Mike Sievert, their COO, will take over as CEO, succeeding Legere in May. And Legere tweeted that this has been in the works for a while, that Legere hired him back in 2012, and Sievert has been his mentee. Make sure to stay with us because Wi-Fi AM starts right after the break, and Yahoo Finance will interview Ford's president of automotive. You don't want to miss it. Stay with us.
morning. Welcome to Wi-Fi AM here at Yahoo Finance, the start of a new week. I'm Dan Roberts. We've got Brian Chung and Julie LaRoche here on the couches. Let's see what the markets are doing. It's kind of a mixed picture right now. Not too much doing. The Dow, close to the flat line. It's in the green just barely. NASDAQ is down 20 points, and the S&P is basically flat as well. We will keep monitoring the markets. We are starting the day talking about Boeing. Amid the worldwide grounding of those Boeing 737 MAX jets, the head of the FAA is now considering major changes to the way the FAA certifies airplanes. FAA Administrator Stephen Dickson, who is a former commercial airline pilot himself, talked about these potential changes in an interview with the Wall Street Journal. And this comes just after Boeing said that it's now up to regulators to determine when the Boeing 737 MAX can return to flight. And everyone is waiting to see whether those planes will return to the air this calendar year. Yahoo Finance's Alexis Keenan is here with more. Hey, Alexis.
Hi, good morning.
So what can we make of this? The FAA potentially being the one to regulate, I mean, it already regulates, but the idea that the FAA would determine changes to planes, that seems strange to me. I mean, wouldn't that be kind of a change?
It wouldn't be so strange if you went all the way back to pre-1978, before air deregulation. And so it used to be this way, and what the FAA is saying, and you know, they're under tons of pressure to do this. They almost have to at some point. It's just, when was the FAA going to emerge and say something about it? When were we going to hear what it's going to do? And we're just hearing a little bit of detail from the Wall Street Journal saying that what they want to do is get involved at the beginning, at the design phase of designing aircraft. And it's not just for Boeing, it's for all aircraft that would be flying within U.S. jurisdiction. So they want to be in there from the beginning. Certainly would make a lot more sense, especially given that no matter who you talk to in this industry who's been in it for decades, experts say that as the planes have become more technologically advanced, that they're operating with a lot of software, less manual, that this needs to happen because there needs to be more sophistication at the FAA so that they can ask the right questions. And right now, though, problem is the FAA does not have the funding in order to do this. So I've been told from those who have been prior FAAers.
That's interesting. Oh, no, you go ahead. I was just going to ask, I mean, what does that look like if the FAA gets involved in the process earlier on? Does that mean as Boeing is trying to develop, maybe even before they start assembling anything in terms of the parts, they actually have to get approval from the FAA? What would that look like?
It sounds that way from what Dickson is saying. It sounds like it's from the very beginning, you know, blueprint time. So I don't know. There are the details he says they'll announce after the MAX is return to service, though you also have to ask at the same time whether, well, you know, if they want this to be the new process, why not apply it to the MAX? So maybe there are elements of what the FAA is looking to do that are part of this. Now, Dickson did give a video address to the FAA employees that went out on Thursday, kind of surfaced on Friday. Here's what he told his own employees at the FAA. Take a listen.
I am not going to sign off on this aircraft until I fly it myself. It will return to service only when we deem it safe to do so. Now, I know there's a lot of pressure to return this aircraft to service quickly, but I want you to know that I want you to take the time you need and focus solely on safety. I've got your back.
So perhaps a little bit of dissent there. You know, we had thought that there was some disagreement between the FAA and Boeing, a little feathers ruffled, and this sounds like, on one hand, Boeing is trying to, you know, give a timeline. Last week, they actually published the steps that they're taking and how far along in the timeline they are. On the other hand, we're hearing this message from Dickson, very different.
I gotta say, though, as someone who, you know, I'm a common air passenger, I'd say, it makes me feel a lot better from a consumer perspective, and I wonder if the 737 MAX would ultimately be safer in the long run because of this.
Well, you would hope, right?
Yeah, I think this will probably be the most scrutinized commercial aircraft in history. So I would think that in the end it will be safe. Now, Boeing has announced some news today. Also, we should mention that at the Dubai International Air Show, they have Turkish Airlines in partnership with Lufthansa firming a deal for 10 of these 737 MAX. So getting some credibility there, perhaps, from the international community. It's the first firm order. There have been others. There was a business jet order. There have been some conversions of folks who had other planes slated and then converted to the MAX. And then you had a British Airways deal for about 200 planes. That was a big deal back at the Paris Air Show in June, but that one we have not confirmed is fully, you know, a sealed deal.
All right. Encouraging sign. Alexis, thanks so much.
You're welcome.
Well, the CEO of Chinese tech company ByteDance, which is the parent company of TikTok, is pushing to diversify the app's audience outside of the U.S. That is according to an internal memo obtained by Reuters. And this comes as the U.S. continues to scrutinize ByteDance over security concerns. Now, the 2-year-old app TikTok has quickly gained a lot of popularity in the U.S. It has 1.5 billion downloads. And as the app has gained favor with teens in America, tensions between Washington and Beijing have escalated. I think ByteDance has kind of become part of the trade war in a sense. I mean, it's not Huawei level, but it is a casualty of everything going on. It's, wait a minute, a popular app in America that suddenly everyone is using that is owned by the Chinese? Wait a minute. Yeah. So a lot of this, I feel like, is timing.
1.5 billion downloads, that is unfathomable. I don't know about you guys. I'm not a TikTok user. I guess I'm an older millennial. I'm an elder now. But
yeah, you're old.
do you guys
old.
use TikTok?
He's young.
I mean, because like on the Piper Jaffray survey from this fall, it was like one of the most popular apps, and it increased tremendously in popularity in the last year.
It kind of came out of nowhere.
Yeah.
I don't have the app on my phone, although I wouldn't be surprised if I finally give in soon, but I just feel like I can't do one more thing. But when I see TikTok videos in my Twitter feed, I think they're great and funny, and it looks like it's a great app.
Yeah, I mean, which is funny to me because it seems extremely similar to Vine, which is something that we had many years ago, but I guess that the way that TikTok is packaged, where it's not limited to, I think Vine was 7 seconds or so, has made it more popular so that people can be more creative with it. But I think it underscores what's kind of a good, interesting, but relevant flip of a narrative that we've heard so much about U.S. companies, which is that China is such an important market. Well, here's a Chinese company saying that the U.S. is an important market for them and that they actually maybe need to rebrand the product in the United States so that it doesn't have the stigma associated with the negativity around Chinese companies to try to get more uptake in the United States. I mean, it's not just TikTok thinking that. It's probably a lot of other Chinese companies as well.
Maybe they should sell it off, but then keep a stake in it or quickly buy a majority stake. Remember, Alibaba spun off Ant Financial, and it was a part of Baba, and then quickly bought a 33% stake. So it's its own separate thing.
I guess the concern, though, is the data, right? You're talking about you have teenage users. What kind of data do they have? Yeah, and you have the whole political backdrop, the tensions between the U.S. and China in the background. But I think a lot of the questions would sit around privacy concerns, teenagers mainly using the app.
Also, when it came out that, hey, by the way, TikTok is Chinese-owned, I feel like there was a little bit of, but then people who like it,
yeah,
they don't care.
It's like the Face app. Everyone was taking their picture.
And then they found out that it's like everything's got to be ruined.
I did not do the grandma shot. So.
Everything gets ruined.
Yeah, no, but I mean, just quickly, I think that when we talk about the difference between Huawei and then TikTok, I mean, TikTok, as far as revenues, is probably far smaller, not even close to the size of Huawei.
I don't know what revenues
so
it has.
This is definitely more of a privacy concern than I think a business story.
I bet it's not profitable either.
Right.
I mean, it's brand new. It's been around 3 years and launched internationally 2 years ago.
Right.
Wild. All right, coming up here on Wi-Fi AM, more layoffs coming to WeWork, and Johnson & Johnson has test results, but not many answers about asbestos in its baby powder. Welcome back to Wi-Fi AM at Yahoo Finance. Let's check in with Inez Ferre, live on the floor of the New York Stock Exchange, to get a sense of what markets are doing. Hi, Inez.
Hi, Dan. Yeah, you're looking at the Dow that's relatively flat right now. The S&P's slightly lower. You've got a little bit of pressure on energy stocks. Let me show you, though, what's happening with Splunk this morning. This is the big data software company. It's seeing a bit of a pop on the heels of an upgrade at Morgan Stanley to overweight from equal weight with a price target of 169. The analyst note there is citing the company's free cash flow and also a shift into a reoccurring revenue model. The company has been trying to get away from these long-term software subscriptions and going more towards subscription products. And just last month, they rolled out some updates for some of their products to be able to compete better with the likes of Microsoft, Oracle, Workday, Salesforce. And by the way, this upgrade comes just ahead of their earnings, which are expected this Thursday after the market closes. Dan.
Ines, do we know much about what does Splunk do? I want to make sure we tell viewers. That's a software company?
It's a big data software company, exactly. So they work with big data, and it's all software.
Okay. Thanks,
and
Ines.
they compete with, by the way, Microsoft, with Salesforce. They've also got competition with Workday. So those are some of their competitors.
Got it. Okay, thanks, Ines. We'll check back in with you very soon.
Thank you.
Well, the bad news keeps coming for WeWork. Remember that company once valued at $47 billion that canceled its IPO recently? The company is now reportedly planning to lay off 4,000 people from its global workforce. WeWork's main office subletting space business would lay off 2,000 to 2,500 employees. Another 1,000 employees would leave as WeWork shuts down its non-core businesses. It is selling off some businesses that it only recently acquired. And an additional 1,000 building maintenance workers are going to have to be cut. That is all according to the New York Times. The cuts are part of a 5-year plan to resurrect the company because this company loses quite a lot of money. Emily McCormick is here with more. Hi, Emily.
Hi, guys. Yeah, that $47 billion sounds like a very long time ago. WeWork now valued at around $8 billion after that $9.5 billion bailout from SoftBank. But the bad news just keeps coming. I mean, that 4,000 would be the floor on those layoffs. It could be as much as 6,000, according to the New York Times. I did reach out to WeWork, and they are declining to comment, as they have typically been with a lot of the news coming out of the company. But just endemic of this company, its turnaround, still looking for a CEO. Apparently, John Ledger not taking the job, even though we did get some news from him stepping down from T-Mobile once his contract ends. So we'll have to see what comes next for this company.
Jeez, they almost need a name change at this point. I mean, they're just bad optics from the get-go. And, you know, I talked to Alan Patrikoff, the CEO of Greycroft. He's one of the pioneers in venture capital. And he made the case that this is going to be the bottom of the IPO market. There'll be a lot more scrutiny going forward. So maybe there's a silver lining here to this whole debacle with WeWork.
Yeah, I think there is. Maybe we finally expect companies to be profitable, or at least have a plan.
Yeah, no more goofball adjusted EBITDA in your S1.
I think that this story, though, is humanizing because it's, you know, everyone's just stepped away from that WeWork story. Oh, they didn't IPO, but there's still employees that are kind of
story,
right. Yeah. So I mean, I'm wondering how substantial is that of a number, the 4,000 number, relative to their current size, and are there other maybe downsizing efforts that could be coming down the line as well after
Right.
this?
It's enormous. So as of June 30th, WeWork employed more than 12,500 people. So 4,000 to 6,000, that could be half of the global workforce. I mean, this company is, you know, in hundreds of locations, really enormous, really paring back those expansion plans, though, and trying to divest some of those non-core businesses. So that's things like Meetup, managed by Q, Conductor, some of these businesses, like a private school in Manhattan, that really have nothing to do with the office leasing space and that core functionality, really just trying to streamline this focus.
Imagine what that was like to have this idea of, like, what if you had equity and you're thinking, oh, the company's going public,
People might have
and you
made
have
big
these fantasies in your mind of, oh, my life could be like this or this and that, and you make plans, even though you don't act on those plans. Wow, that's so painful.
Well, and that's just one part of it. I mean, the thing about acquiring all these different companies and businesses and even one-off real estate deals, it's like, it was heady days for a minute, and then look, you flew too close to the sun.
Right, some of these acquisitions took place this year, and now saying, well, now you're being sold and potentially laid off.
Goodness gracious, they went on a buying spree when they really shouldn't have.
Right.
I mean, hello.
Quick 180. Quick 180.
All right, we'll keep monitoring. I'm sure there'll be an update soon. Emily, thanks so much.
Thanks, guys.
Johnson & Johnson hurried to test its baby powder after traces of asbestos were found in a bottle last month, and it quickly recalled the product. Now, 11 days later, the company announced it found no trace of asbestos in its independent testing, but those results were complicated and are now being re-scrutinized based on a review of lab reports that was released by the company. Yahoo Finance's Anjali Kamlani here with more. Hey, Anj.
Hey.
So what does this mean? I mean, basically, Johnson & Johnson came out and said, no, it's okay. And people said, oh, okay, good. And now it's like, was it okay?
Was it okay? So it basically goes back to the lab, and that's where this report came from the Wall Street Journal, where they were talking about how the lab itself was prepping for this test to test the batch that they were looking at, and the room that they had put in it may have been contaminated, may have had some air conditioning issues. Who knows what the real story is, but they did say that the lab investigated the results that did show a trace of asbestos and then went back around, did a retest, and it came clear. So they're still standing by the free and clear. They are still investigating. They haven't finished the investigation. That announcement was actually sort of like a preliminary, like, here's the first round of results. We're still looking at what happened, where it came from, et cetera, et cetera.
I guess the question is, I've been reading a lot more about talc and how it's mined, and that sometimes it's mined near asbestos, and then there's different standards. I was reading on the American Cancer Society's website about this. So just broadly, though, even if there is no asbestos found in the results and it's clean and it's pure or whatever, how do you recover from the brand side of this if you're thinking about parents and you're putting that on your infant or it's going on your body?
Have sales dipped?
Yeah.
Have sales suffered?
I haven't seen anything about that, but what I do know is that you're right. This is absolutely the reason behind the rush. They actually sent us a statement that kind of alleges that, you know, it's such a strong brand from and such an important part of their reputation that they, you know, it's the reason why. The quote that they sent us was that given the serious questions raised by the FDA, you know, this is the reason why they asked for the results to be rushed from the labs. So that's where they're at right now.
Is there something to be spoken to that this is actually part of Johnson & Johnson's DNA? If we recall the Tylenol recall that they had after, I think it was, 6 or 7 deaths, they quickly recalled it, and within a month and a half, the CEO was going out doing a press conference saying, we've actually recalled all the bottles, we're going to issue a new version of Tylenol. I mean, is there any sort of parallel to the situation here with the baby powder?
I imagine that once the results come in, once the full investigation is done, that they'll probably be taking some course of action like that. Let's remember that when they came out with the preliminary results, it was very dramatic, right? They stopped trading on the day of, and then it was like, well, what's going on? What is the big announcement? And this was the big announcement for the whole company. So it really indicates how strong, you know, the product is. It may just be 1% of sales overall for the company, but the brand is the reputation worldwide.
The baby powder is only 1% of sales?
Yeah. But that's like, when I think of Johnson & Johnson, I think of baby powder,
baby oil. Yeah.
Really?
Exactly.
Only 1%?
They're such a huge conglomerate.
It still goes back to the bigger theme that I keep harping on, and that is trust. And they have the playbook from the Tylenol incident, so can they regain consumer trust?
Although my favorite theme also, these little scandals, I think a lot of consumers just don't even notice.
I agree with that.
They don't know. They're reaching for the They're reaching for the baby powder. They haven't even seen the news stories about this.
I think moms are paying attention.
I think they would be. Yeah, I think they might know. But.
All right, Anjali, thanks so much. Of course. Coming up here on Wi-Fi AM, we'll tell you what stocks are trending right now on Yahoo Finance, including Kylie Jenner.
Time for today's trending tickers. The first one is Coty. Coty Incorporated agreed to pay $600 million for a majority stake in Kylie Jenner's cosmetics line. Coty is the latest beauty company to acquire a brand that appeals to a younger audience. In a statement, the company said the fragrance and cosmetics giant will have overall responsibility for the portfolio, and Jenner will actually lead the communications and creative efforts despite having sold that pretty substantial stake. Guys, I mean, this just crossed, and I'm doing the math in my head, but $600 million for a majority stake, let's assume it was maybe just over 50%. That means that the valuation of that thing is more than $1 billion.
It's her company, guys, and she's a billionaire, although some people argue that she's not a self-made billionaire. I don't know. Let's not get into that.
Right.
But the fact of the matter is, she's really created a massive empire when it comes to her own brand. So it's no surprise that she's going to be leading the communications, the direction of the brand because, yeah, lit kits.
Remember when Kylie Jenner was on the cover of, wasn't it her, on the Forbes billionaire
yeah.
list? And then everyone came out and said, wait a minute, what's the math here? Oh, they're estimating that Forbes is saying that her company is, her fashion line, or her cosmetics line is worth $1 billion. Right. And people came out and said, there's no way, Forbes is fudging it to get her onto the billionaire list. Then the criticism moved to, well, maybe it's $1 billion, but she's not self-made because she was helped and she was famous thanks to her parents. And it's like, people will look for whatever reason
they're all
to knock it down. But
how old is she, like 20?
Right. And I'm ready to admit, give
impressive.
these people some credit. I mean, the power and influence of each of these individuals is enormous.
I mean,
you may not like it.
Yeah, well,
I'm not really so interested in just like the personality and whether or not, whether or not they were self-made. I think what's more interesting is that cosmetics is mostly about the branding. It's mostly about the name that's behind it. And I think that when we talk about Kylie Jenner here, you can make the argument that if you took the exact same cosmetics line and it wasn't Kylie Jenner, if it was just some generic brand, it would not be the same. Yep. It's not about the materials. It's not about the colors. It's not about it's really about her brand. And that is what's so powerful. That gives us an over $1 billion valuation. That is insane to me, but I think it speaks to the fact that this is what the cosmetics industry is all about, especially in this social media.
Now, even though it is all about brand and it's really all about just her imprimatur, if the products suck or there's some kind of problem, then that's a problem. I mean, I don't think the products can be garbage. I mean,
have you used it, Julia?
And still do well just because it's Kylie Jenner.
I've never used it. I have friends who've used it. I mean, there was the whole viral thing around the lip fillers and like, you guys remember that from a few years ago?
No, I do not remember that.
Okay, well, whatever. It's become a huge thing on Instagram, and you know what? I got to give her credit.
Yep.
She
I think
started
she
Empire.
deserves a lot of credit. Worth mentioning, Coty was already on a ride this year. It's up 88%.
Right. And for a company that's acquiring an asset to be going up, that's pretty remarkable. But moving on to our second trending ticker of the day, it is T-Mobile, on the news that the eclectic head of the telecom company, that's John Legere, will step down next year on April 30. Not too much movement in the stock, down by about 1/3%. The day after that, on May 1st, next year, he'll be replaced by Mike Sievert, who is currently president and COO of the company. Not entirely unexpected, as Legere's contract was actually set to expire on April 30th, and it was actually rumored and reported earlier that Sievert might take over once the T-Mobile merger with Sprint was closed. So I guess not a surprise here, but I mean, interesting to see that this is the same person who was being rumored and maybe taking on the WeWork role, which was actually kind of swatted down at the end of last week.
Well, we'll see. I'm not 100% convinced that that's untrue, that he's not going to be the CEO of WeWork.
Well, it'd be funny because the former Sprint CEO is currently at WeWork trying to clean up the mess there. So it'd be like a weird T-Mobile Sprint merger of sorts if he were to end up going to that company. But Legere's well respected for the turnaround that he's been able to engineer at T-Mobile. So.
He's also really into Twitter, and I'm hoping that him stepping down as CEO means that we will no longer see all the John Legere promoted tweets because they're so common. He did tweet already about the news. Yeah, he said, I've got some important news. On May 1, I'll be handing the Magenta CEO reins over to Sievert Mike as my successor. This move has been under development for a long time, and I couldn't be more confident in the future of T-Mobile under his leadership.
Now, guys, I checked out the conference call that he hosted earlier this morning, and he was taking some shots at the competitors. You know who they are.
Who are they?
Well, Verizon and AT&T
Which is our parent
on the
company,
call.
by the way.
Yeah, it was like, you know how you're not supposed to like talk about the competition? Well, he talked about, I think the first opening was just ripping into the competition. Right. He also did talk about the Sprint T-Mobile merger and how that's taking longer than they expected, but they think they've made some incredible progress there. And then I didn't listen to the rest of the call, so. Yeah.
I appreciate when they just come out and talk directly about the competition. Why pretend? I always think that's good. And
it's kind of
I feel
funny
like we're
covering
seeing more
business,
of it.
and certain businesses won't talk about the competition in public, but then privately they'll be like, oh yeah, this one.
Of course. I think we're seeing more of it in this space of telecom and kind of streaming and cable, because just last week also, Ted Sarandos of Netflix was really going right after Disney, although I thought his criticism was kind of stupid. But he said, you know, at Netflix, we're not bound by a few universes. Disney's really bound and limited by their universes.
What does that even mean?
Well, he meant Marvel and Star Wars.
A galaxy
like,
far,
trust me,
far away.
any other company would be delighted to have those universes.
Yeah.
Please. Okay, coming up here on Wi-Fi AM, Google Stadia launches tomorrow. It's the company's big cloud gaming service. We will have a full preview. Welcome back to Wi-Fi AM here at Yahoo Finance. Google's cloud gaming service Stadia launches tomorrow, and it just doubled the number of games that will be available on launch day. Gamers will have access to 22 games when it goes live, and the games include NBA 2K20, Final Fantasy 15, and more, with more games coming before the end of the year. And our tech editor, Dan Howley, has more. Hey, Dan.
What's up?
Is this thing going to be huge?
I think it's going to do a lot for the gaming industry, and I don't think it's necessarily going to move the needle really for Google, just because a lot of people are expecting this to fail right away. There's not a lot of high hopes in the industry, at least, just because Google isn't an established player in the gaming industry, and it's getting into a space that is still very, very new. There's no streaming services out there right now that are public that allow you to stream games. Now, there are smaller ones, but no major offerings. Microsoft is coming up with something. They're working on their Project xCloud, and it's exactly this kind of technology, streaming games through the internet, where you don't need a console or PC. You can play on like your 15-year-old, crappy laptop that's been sitting there, collecting dust, and play games that look incredible.
Well, Google's not making the games, at least, so I don't
They're
see
not
why.
yet.
I mean, they're sticking to their own tech capabilities. It's cloud.
So they're going to eventually, they have a studio that they're working to build games with. So it's a Stadia studio, and they want to become a player.
So is that what's going to ultimately move the needle for Google, is if you have this game that just becomes this cultural phenomenon? I'm not a gamer, but we've seen in the past games to just become this huge thing. Is that what you think would move the needle?
If they can get something that's able to really draw in crowds, similar to like a Fortnite or something like that, right? If they're capable of doing that, then it could really move the needle for them. As far as Stadia itself, it's $9.99 a month. It's $130 to get in at the very launch. There's going to be a free version, though, that's going to launch in 2020, the very start of the year. That might actually do very well. And so, just to give you an idea, it's been referred to as the Netflix of video games, but it's not. You have to pay for the game still.
Right.
So you pay for the service to be able to play anywhere, which is fine, because usually you drop, anywhere from 200 to 200 to upwards of 400 sometimes when they're brand new. For a PC, that can go anywhere from like 1,000 to 2,000 to play these kinds of games. And what you're going to be able to do is unlock them. So instead of downloading them, you just enter a code, and
because you're paying
it's there
for them.
right there.
It's such a smart business model. If gamers willing to spend, why not charge
And
them?
quickly though, is the hardware different though? We keep showing the VO of this controller. Does that come with it? What else is like?
So the controller comes with it. That's what you pay for when you get the $139. You use any device that is Google capable right now. So you would do a Chromecast, Pixel phone, Chromebook.
Roku?
No Roku yet. No iPhone
Apple
yet.
TV? No, I can't have it.
So it's going to be tough sell at first with those restrictions, but eventually they want to bring on more devices.
So quickly, it sounds like Nintendo, Sony, those guys don't really need to be scared yet.
Not yet. Sony's working on something of their own, and so is Nintendo, believe it or not. And Nintendo has
Everyone's got something.
But Nintendo has no idea what they're doing when it comes to online.
That
never been
I'd be
good.
interested in.
I mean, yeah.
If
So
Nintendo could figure it out, that's the one thing I would be interested in. Love Nintendo. Okay, Hallie, thanks so much.
Thank you.
We'll see what happens tomorrow. Every Monday for the next few weeks here on Wi-Fi AM, we'll be taking a quick break from Wall Street to look at Main Street. It's a chance for us to see how small business owners are doing all around the country. So today we are talking to Soapbox, a Washington, D.C. based maker of soap, shampoo, and conditioner. And joining us now is David Simnick, the co-founder and CEO of Soapbox. Hey, David.
Hey, Dan.
Thanks for coming on.
Thanks for having me.
Let's talk about the company. I know you are mission-driven, so there's a social conscience element. Tell us about that first, especially because we hear so much about, ESG and CSR and all these buzzwords. But I feel like a lot of companies say, we give, it's buy one, give this, or, the Tom's model. But then a lot of companies are kind of faking ESG.
Yeah, well, I think a lot of it comes down to authenticity. And I think especially this generation, as well as the preceding generations, can sniff that out. So for us, we started with our mission at our core. I used to be a subcontractor for the United States Agency for International Development. I wanted to change the way that we were doing a lot of our health and hygiene work around the world. So called up my best friend back in 2010. I was like, we're going to start a soap company. And he was like, what's wrong with you? Like, have you been watching too much Fight Club? Like, where in the world do you think that this is a good idea? And have you heard of these small companies called P&G or Unilever or Colgate-Palmolive or any of these people in this? Like, so we were just like, hey, we're gonna start making soap in my kitchen. We'll see how far it gets. And we wanted to be a non-for-profit at first. One of our friends was in law school. Was like, you're gonna get audited every year. If you're a company and you sell like a company and you basically operate as a company, be a great company. And that was it. We started in like farmers markets. We then got into one retailer, and then one retailer went to another one, and we kept on growing and expanding.
What was the big tipping point? Was there like one chain? Because I know sometimes as a small brand, it's like, then we got into Target and we took off, or then we got into Whole Foods.
So our story is almost kind of like a cautionary tale of all the things you don't want to do in consumer product goods. So we launched with a large retailer. We had awful branding. Our price point was like completely off market. We thought we were like the moguls of the soap industry. And it wasn't until we started getting bigger and bigger in drug, food, mass, club that we were like, oh, we have to switch our branding. So that happened in 2017. There was multiple times in which we should have failed. We probably could have failed. But we then launched in Sally Beauty this year, which was a huge win for us. We launched in Rite Aid a couple years ago, and they've been like fantastic, phenomenal partners of sticking with us through all the packaging changes. But then next year is, I mean, basically the laundry list of all the people who really can move the dial. No pun intended.
Okay, I want to know how you're thinking about your customer acquisition strategy. I've been using the same soap for over 10 years.
Yep, me too.
So how do you get someone like myself to switch? Because I'm a creature of habit.
Yeah, you're way off in the spectrum on that. And like, so good that you're loyal, but actually, yeah, that's...
Dr. Bronner's.
Yeah, right? So that's awesome, especially they have like these foam parties that roam the country, which is their version of like their promotional marketing. Yeah, right? It's just like, imagine like, come to a Dr. Bronner's foam party. Yeah. But there's actually a huge switching rate within personal care brands. Loyalty in like food, drug, club, mass is about 20%. So the barriers to switching are really, really low. And it's mostly promotional driven. What we've seen, because we've started with that mission, because on the back of each one of our bottles is something called this Hope Code, where someone can take to our website, punch it in and see exactly where the other 1-for-1 went. Because that's the whole thing. I kind of missed that earlier, but every time someone buys one of our products, we donate a bar of soap. We've donated 7.1 million. We'll hit about 9.5 at the end of this year. There'll be 500 million samples of our products in the US market in 2020. That's because of our partnerships with Marriott and Lifetime Fitness and WeWork and a bunch of other
And quickly, which countries do you donate to? Just
65. So there's a lot of them that we work with. We actually work with those NGOs. So we actually ship, we don't ship, we actually work within the countries that we have the privilege to serve to source that soap from there.
All right, interesting stuff. I'm going to check it out because I'm a bar soap guy. I like bar soap, not body wash.
Might be time to switch.
Yep.
I mean, another one of the spectrum things, right? Like people love body wash, and I like bar too.
No, I like bar. All right, David, thanks so much. Soapbox, good stuff.
Thank you.
Coming up here on Wi-Fi AM, we will have a special interview with the president of Ford Automotive, live from the floor of the New York Stock Exchange.
Welcome back. I'm Ines Ferre here with Tim Anderson from TJM Investments. Tim, 28,000 on the Dow. What's it going to take to get to another 1,000 up?
I just think continual improvement on the macroeconomic picture and some positive guidance from companies going into next year. We've just had 3 very difficult quarterly year-over-year earnings comparisons. Starting in Q4, which we will get reports not for a couple of months, obviously in January, but those earnings comparisons will start to get easier.
It's a little bit of a different picture from last year, right?
Completely
As we go into the holiday.
Yes, it's amazing. Last year we were worried about the recession narrative was really starting to percolate, and the Fed was in the middle of both hiking rates and tightening through unwinding their balance sheet. And now we're just in a completely different picture. I really doubt we're going to hear many fears about recession as we get into the end of the year. In fact, I think recession's totally off the table for 2020. We've got positive things going on with rates and possibly even with the housing sector, where we've got some important data this week.
The housing sector. So we actually, home builder confidence came out this morning. It was a little bit down, but what do you?
I mean, it was down maybe, it was pretty much in line, really. We're going to have housing starts and building permits tomorrow. Building permits have been trending higher. They're trying to break out to get to their highest level since like 06, 07. We're going to have existing home sales on Thursday. And I think with prices of homes coming down, making affordability a much easier issue for first-time buyers, rates staying very, very low, and people's income increasing, we're going to start to see some very positive macro data on housing and home building going into 2020.
And Target earnings this week as well. We had Walmart last week.
That'll give us another snapshot of the consumer going into the holidays after we heard from Walmart on Thursday and a very solid retail sales number on Friday.
So is this market basically also, as far as China-U.S. negotiations are concerned, is this market sort of still hanging tight despite the uncertainty of when, where this deal will be signed?
Obviously, any good news we can get on signing the first stage of the U.S.-China trade talks will be good, but the market does seem to be shrugging off the negative headlines on that story more than it used to. I look even this morning, the Chinese said, well, we're very frustrated with progress on the, of course, because the Chinese want all the tariffs off before we sign stage 1. Trump is not going to do that. The market was maybe up a little bit before the opening. Now we're down maybe not even 0.25%.
Thanks, Tim. Make sure to stay with us. Wi-Fi AM continues after the break.
Welcome back to Wi-Fi AM here at Yahoo Finance. Markets right now are in the red. The Dow is down 25 points, the Nasdaq down about the same. All 3 major indices in the red, but not by too much, and we will keep monitoring. Let's talk now about scooters. Lyft is pulling its e-scooters from 7 different cities starting next week. The company will pull its scooters from Nashville, San Antonio, Dallas, Columbus, Ohio, and Phoenix next week. Then it will pull its scooters from Atlanta on November 23rd. Lyft said in the message to Atlanta customers that already went out, "We are choosing to focus on the markets where we can have the biggest impact." Hard to tell exactly what is happening here, but I have to believe that it is because of overcrowding. The scooter market is just so extremely crowded and competitive. I'll give you an example. In a place like Nashville, you see on every corner there's Bird, Lime, Lyft, and Jump. Jump is the Uber-branded scooters. And these scooters have also proven difficult for cities to regulate. just like Airbnb, there's been a lot of regulatory concerns. They also come, of course, with safety concerns. There have been a lot of injuries because people ride these things right on the street with big cars and they're weaving in and out and they're not wearing helmets. They're dangerous. They're dangerous for both the riders and then they're dangerous for people who are driving because sometimes people just dump them in the street and then you're backing up and you're parallel parking and crunch and you drove over a scooter. It's a real problem. These things don't have docking stations. That's the biggest problem. Of course, those would be very expensive to set those up. But I think they could instantly make all the scooters safer if, like City Bike, they had docking stations.
Well, I think cities might not be happy about that because as we even saw with the City Bike implementation in New York, I think this was 6 or 7 years ago, there were enormous concerns about whether or not that would block up lanes or parking and whatnot.
But it all worked out.
The scooters, I used to live in Washington, D.C., where similarly there were 4 or 5 different companies, and these scooters were just all over the place. And I was always wondering, like, the supply of scooters was dramatically outnumbering the amount of people that actually wanted to use them.
Well,
and
it's interesting because my buddy in Denver lives on these things. He swears by them. And when I went to visit him, I found actually that we couldn't get one. Like you'd see one from far away and then you'd go up to it and, oh, the battery's dead. Or you would see on the app, there's one around the corner and you say, okay, I'm going to go to that one. And then as you walk toward it, oh, it's been taken. So I do think there's some inefficiencies and I don't know, it depends on the market, right?
I have a great solution. It's called walk and get some exercise.
Well, actually, I think that the scooters have a greater use case in the cities that don't have a rail system or a subway system, and the sprawl of the city, I think, is a big factor too. I truly do not believe that these types of e-scooters would work in a city like Atlanta or Dallas or Houston, these kind of large cities that don't have a lot of density. So it's actually, you can get on the scooter, but you still gotta go a mile or a mile and a half to get from one side of the city to the other because it's so spread out. Los Angeles is very similar to that too. But in a city like Chicago, Washington, D.C., I think Nashville is a place like that too.
They're great in Nashville.
They're great.
They
I
work
mean,
great.
Austin,
hit the bars on Broadway.
I don't think you should be drinking and riding a scooter, though.
NYC.
I don't think people should drink and ride scooters
I think
ever.
they are
I think
doing
it's a bad idea.
I mean, I don't think you can be on one holding the drink while you're doing it because it's
yeah,
a two-hand
well, are you
thing.
going to get a SUI scooting under the influence?
I like that. But these things would never work in New York City. That is
absolutely not. Yeah,
please
too
don't.
dangerous.
Please don't bring them here.
Yeah.
All right, Disney Plus launched last week, you might remember. And although Disney said that it got 10 million signups on day one, there were some hiccups. There were outages on launch day. And then fans of The Simpsons discovered a real problem. The aspect ratio had been changed from its intended viewing format of 4:3 to 16:9, and that cut off parts of certain scenes. You're seeing some B-roll of The Simpsons. Everyone's a fan of The Simpsons, come on. And of course, it was a big get for Disney that via the Fox acquisition, it acquired the rights to The Simpsons. Now, Disney has quickly responded, and it says it will fix the problem in early 2020 by making the first 19 seasons of the show available in the intended viewing format. But clearly, this stuff takes time. And by the way, the first 19 seasons, well, there's been far more than 19 seasons of this show. So it's not going to be able to just flip a switch and suddenly it's all fixed.
Sure. I think this is what we call a champagne problem. You're talking about a tremendous number of subscribers. And nerd alert, I didn't know about 4:3 aspect dimension and 16. And then even like looking at the tweets, I'm like, well, I don't see the difference. Well, now I do. Okay,
well,
they're
you
like
see it when,
studying
like,
very carefully.
yeah,
you can
characters
see
cut off.
funny little gags, jokes. I get it, but like the fact that people are complaining about this, that's a good problem to have.
And I think it's funny because it's just like the whole problem this stems from is the fact that the rectangles that we look at stuff on now are now different shaped rectangles than what they used to be on. And what's important to note is that I think our own iPhones are not 16:9 either. So when you watch any sort of video, unless it's letterboxed, you have to kind of choose, right? You can double tap to zoom in or to zoom out, right? When you watch videos on your iPhone. I don't understand why that couldn't have just been an option for Disney Plus to say, do you want to watch this in 4:3? If you want to watch it in 16:9, go ahead.
Well, and speaking of the phone size, I mean, I've noticed, I just finally went from iPhone 7 to 11, and Instagram photos that are longer and taller, that are vertical, on my old phone, I'd have to scroll just to see the rest of a photo. Like one single photo could fill my whole screen, but now with my nice big phone, bigger, taller photos, photos that aren't in square, look great, and they fit on my phone screen. So you're right, it's sort of like, I think more problems like this are going to arise.
Good problems to
devices
have.
get better.
Good
I mean, Instagram used to pigeonhole you to just a square
exactly
photo.
Right.
So,
right.
It's just different rectangles. Rectangles change shape over time.
Yeah, there you go. Now I agree, it's a good problem to have. And I said the same thing about the outages on day one, honestly. I mean, yeah, you don't want outages, but the outages were due to extremely high demand. And then Disney Plus was able to kind of take a mistake, a bad situation, and turn it into a humble brag by tweeting out, "We're sorry about the outages. The demand has exceeded even our high
so many people
expectations.
signing up.
We're so popular
Well, did you
that
sign
things
up
aren't
yet? 'Cause
working."
I signed up. Brian Chung signed up. He watched Lilo and Stitch. I watched Little Mermaid and Mulan. I cried.
Oh, this is so
Great
refreshing
nostalgia.
because I'm used to having our colleague Miles Udland here on the couches, and anytime we talk about Disney, he says, "Nope, no interest. It's all stupid."
Yeah.
So good, 2 people who signed up. I didn't sign up yet. There's no rush, but I certainly plan to. And I don't like that we're already seeing spoilers about The Mandalorian.
Well,
so
that's
now I feel like
time
I
to
better
sign
hurry
up.
up and
But it's
sign up
not
soon
really a
and
true
start
spoiler
watching.
because they haven't released all the episodes. So you couldn't have only been spoiled on 1 or 2 episodes at this point in time. It's a different model than Netflix.
Yeah, and you know it's past 24-hour rule, so time to talk about it.
Fair game.
Our editor-in-chief, Andy Serwer, is very interested in the fact that Disney is doing only 1 episode a week, like a traditional show, as opposed to Netflix, which just drops the whole season all at once.
Well, you could argue HBO is doing the same thing.
Yeah, totally, they are. Okay, we'll be right back here at Wi-Fi AM after a quick break. Welcome back to Wi-Fi AM at Yahoo Finance. Let's talk about Gen Z, people born between 1996 and 2010. That's the next big key target demographic for brands. It's not about millennials anymore. Millennials are old news. And Piper Jaffray has a new survey on what Gen Zers want for holiday gifts. Yahoo Finance's Reggie Wade is in the newsroom with more. Reggie, what can we learn from the list?
Yes, basically money, clothing, and cars. You know, I'm not a Gen Zer, but I guess I'm young at heart because this looks a lot like my holiday list. Yes, teens are loving Apple. They're loving Nike, luxury brands like Louis Vuitton and Gucci. So it's a very expensive wish list this year for teens. And you know what? That's not surprising. Piper Jaffray has seen this trend continuing, starting throughout the summer and coming on. And it looks like teens now have very expensive tastes, at least more expensive than when we were teens.
Yeah, Reggie, I'm approaching this list with a healthy dose of skepticism. Louis Vuitton and Gucci. Really? Does that fit? I understand. I want the new Adidas kicks. I want a new Apple device. But kids who are maybe 12, some of these kids, 13, they want Louis V.
Well, yes. Well, actually, they want those brands more than they did last year. So even though it's still a small amount of teens that want these brands, the numbers are steadily increasing. But Apple is still head and shoulders above the rest. A little more than 10% of teens said they wanted Apple products. Apple AirPods having healthy growth, and we're seeing the iPad and MacBook staying flat among teens.
Hey, Reggie, so when we talk about Nike and Adidas, is it mostly footwear or is it other type of clothing as well? I mean, is it these hot Yeezys that are coming out or the new Jordan brands, or is it other types of things that they're trying to buy?
It's a mix of footwear and apparel, but we know especially when it comes to Nike, footwear has been where it's at. They've been innovating, and also the brand, how it's been socially conscious. We've seen the ads with Colin Kaepernick, and he's in the news again. And young people really see Nike as a brand that speaks to them, not only what they want to wear on their feet or wear on their bodies, but the type of things that they want to take a stand for.
All right, so Reggie, as you helped us report last week, any of those Gen Zers who want Nike stuff are just going to have to get it not from Amazon.
Yes, yes. Amazon and Nike, their pilot program is done, and Nike's going to a more consumer direct approach. So bad news for Amazon, but in the long term, many analysts believe that that's going to be good news for Nike.
Right. All right, Reg, thanks so much.
Thank you.
And we'll be right back here at Wi-Fi AM to talk about the new Ford electronic vehicle. Welcome back to Wi-Fi AM at Yahoo Finance. Ford just unveiled its brand new all-electric Mustang SUV. It's the Mach-E, and it's the first addition to the Mustang line in 55 years. Joining us live from the New York Stock Exchange to discuss is Ford's president of automotive, Joe Henricks, and we have Yahoo Finance's Pras Subramanian, our car guy, here on the couch as well. Joe, tell us about the vehicle.
Good morning. Great to be here. Thanks for having us.
Let's hear about the Mach-E, Joe.
Well, there's so many great things to say. First of all, as you said, after 55 years of just selling sports coupes and convertibles, 10 million of them, world's best-selling sports car, we're expanding the Mustang name to take it to a brand new battery electric SUV. Up to 300-mile range. The GT version is going to have 0 to 60 time in 3.5 seconds, 5-passenger, all kinds of great technology, over-the-air updates. Really excited about it. And really, when you see the vehicle, you understand how we can make the connection and expand the brand of the Mustang to a battery electric SUV.
Hey, Joe, Pras here. So, attaching that Mustang name to the Mach-E, and the Mach-E it's a crossover SUV. Is there some danger there with kind of diluting the brand name? Because everyone thinks a Mustang, it's got that power, that coupe, that fastback look. Why go with that here?
Well, Mustang has historically stood for fast, fun, and affordable. And certainly with this vehicle, you get the fast and fun part for sure. And for a battery electric SUV, starting below $44,000, then with a $7,000 500 federal tax credit, you're talking mid-30s for a battery electric SUV. It's also affordable in that range. So it really is true to the heritage. You look at the design, of course, you get the design cues. But importantly, when you drive the vehicle, I drove it about a week and a half ago, you can tell it has the soul of a Mustang. It may not sound like a throaty exhaust like a Mustang coupe does, but we're going to keep building those vehicles, love those vehicles, including the Shelby versions and all limited edition versions of those. But it's time to expand and bring battery electric into the Mustang portfolio.
Hey, Brian here. So when we talk about electric vehicles, it seems interesting to watch the pivot from car manufacturers from kind of this environmental sustainability to these things can be really fast. So when we talk about the numbers 0 to 60 on the Mach-E, I think it clocks in around 4 seconds, pretty fast. I'm wondering what kind of market research have you done that show that there's an appetite for these types of electric vehicles as opposed to maybe the types of electric cars we saw, 6, 7, 10 years ago?
Sure. Well, one of the great things about battery electric vehicles, of course, they do have that instantaneous acceleration, that great torque, because the motors are at the wheels. You don't have all that transfer function going on like internal combustion engines. It is actually, even though people don't think they buy the vehicles for that, they do tend to like it because it gives them that ability to drive the vehicle very aggressively if they want to. But importantly, the smoothness of the propulsion, the quietness, the roominess you get inside. There are a number of factors that once people get in battery electric vehicles, they realize there's a lot more here than just their propulsion system.
Hey, Joe, it's Pras again. So do you kind of see, we're talking about performance, we're talking about SUVs, is the Tesla Model Y the performance benchmark for the Mustang Mach-E?
Well, we welcome all competition. Clearly, we recognize there'll be more competition when we launch in the fall of next year. We think our vehicle stacks up very nicely to the Model Y from what we know of it. And of course, other competitors as well. We get, of course, the Mustang DNA from a brand standpoint. We have access to over 12,000 charging locations with over 30-some thousand charging stations around the country, more than twice what Tesla has. And we have our service network, our dealer network, which can provide all kinds of accessibility to our dealers. We're taking reservations online right now for the vehicle, so we're trying some new things as well. But we think the total package, Ford has a lot to offer that some of our competitors don't give you.
Joe, Pras brought up Tesla, and of course, Elon Musk tweeted about your new vehicle. He tweeted out, "Congratulations on the Mach-E, sustainable electric cars of the future. Excited to see this announcement from Ford as it will encourage other car makers to go electric too." Obviously, Tesla a competitor, and I'm just curious what you make of the tweet.
Well, we appreciate the tweet. He actually tweeted a couple of weeks ago about how much respect he has for big manufacturers making large volume things. You know how he felt about manufacturing. So, I mean, Elon's always been supportive of the industry going to electrification. He thinks it's great for the climate, as do we. And he's always been supportive of trying to get more and more companies to build battery electric vehicles. So this is consistent with that, and we respect that a lot. And we think that that's true, that the more battery electric vehicles that come out, the more acceptance there'll be for consumers in this domain, and we think customers will get more and more acclimated to the charging networks and everything else that goes with it. So everybody wins if we get more acceptance in the battery electric vehicles.
Hey, Joe, so aside from the Mach-E and the upcoming electric Ford F-150, what's next from electrification from Ford's end? I mean, is there going to be an actual Mustang Fastback E-Coupe too?
Well, we don't have any plans for that in the near future. Someday maybe, but not anytime soon. Our next generation Mustang will be an internal combustion engine vehicle. We may do a hybrid version. We've talked about possibly doing that, which gives you a little bit more electric torque at the wheels, but it also has an internal combustion engine. For us, we have 40 vehicles in the works right now with some form of electrification. Hybrids, plug-in hybrids, battery electrics. We're launching a number of SUVs with plug-in hybrid or hybrid versions. For example, Explorer Hybrid just launched. We have a hybrid Escape that just launched. We have a plug-in hybrid Escape next year. A number of other products like that coming throughout the market. But on battery electric side, we talked about an F-150 battery electric. Very excited about that truck. And of course, we're doing a battery electric vehicle with the with the Volkswagen MEB platform in Europe we're working on. We're investors in Rivian. There's a number of projects we have going on, but the core volume from Ford battery electric vehicles will be designed by us and will be built by us.
All right, Joe Hinrichs, Ford Automotive. Really appreciate you joining Yahoo Finance today. Good stuff.
Yep.
Thanks.
Thanks for having me live from the New York Stock Exchange. Thanks.
That's right. Guys, I want to just discuss here amongst ourselves, for a long time, the story about electric vehicles was this chicken and egg problem where a lot of people were hesitant to get one because there aren't enough charging stations. But there weren't enough charging stations because not enough people have one. And, my brother has a Tesla now. He loves it, but he's always worried everywhere we go, like, well, I have to look up and see if there's a charging station nearby. And for me, that's still my hesitation is, if I'm driving around the East Coast, I do a lot of driving from Connecticut to Massachusetts to, New Hampshire to Vermont. I'm not ready to buy one of these things because I worry about running out.
You know where they're putting the charging stations? Walmart parking lots. There's a Walmart within 10%, 90% of the U.S. population lives within 10 miles of a Walmart. So.
Well, it's funny. I was testing a hybrid plug-in car this weekend. I was in New Hope, Pennsylvania, and I'm looking for a place to charge. Couldn't find one. Found a Tesla spot, but you can't use non-Tesla cars with Tesla superchargers. So
see, that's a drawback.
I mean, you bring up a good point, Dan, which is that there's a supply and demand here, right? I mean, the demand for electric cars is going up. The supply of chargers should go up as well.
But it's a smart move for retailers to do it because then you go in the store while you're charging.
That's right. All right, thanks so much, Pras. Really good to have the Ford exec. That is Wi-Fi AM for today. Thanks for watching. Stay right here for On the Move. That show starts next.
Happy Monday, 11 a.m. here in New York City, 90 minutes into the trading day, and stocks are trading down, not by much, but we're going to jump into that. Thanks, but no thanks. HP rejects Xerox's takeover offer, but it doesn't close the door yet on a deal. Turbulent times ahead. The head of the FAA considers bringing major changes to the plane approval process in the wake of those two deadly Boeing 737 MAX 8 crashes. And founder Adam Neumann got paid, but plenty of others won't. The latest as WeWork reportedly considers laying off thousands of its employees. Welcome to On the Move. I'm Adam Shapiro.
And I'm Julie Hyman. Thanks for joining us. We have some breaking news coming out of Washington, D.C. Fed Chair Jay Powell has met with President Trump. Trump taking to Twitter, saying in part that it was a very good and cordial meeting. With us now with more is Yahoo Finance's Brian Chung, along with our panel for the hour, Yahoo Finance's editor-in-chief, Andy Serwer, and Yahoo Finance's editor-at-large and co-host of The First Trade, Brian Sozzi. Brian Chung, let's start with you. This is, I mean, we do tend to see Fed chairs meet with administrations, but this administration, of course, has been uniquely critical of this Fed chair.
Yeah, and this isn't even the first time that Jay Powell has met with President Trump. They actually met earlier this year. But what was interesting about this meeting was that it was unscheduled. It was completely impromptu. Actually, in many ways, kind of similar to that last meeting before Jay Powell met with President Trump on the eve of the State of the Union address. But what the Federal Reserve readout, which kind of disclosed, this meeting, said was that they discussed a number of things like the economy, like employment and inflation, but said that nothing was really new beyond what Chairman Powell shared with Congress when he testified on Capitol Hill Tuesday and Wednesday last week. Interestingly, they did also note that Chairman Powell insisted that actually all decisions on monetary policy are based on, quote, careful, objective, and non-political analysis. President Trump's tweet actually disclosed a number of different things that apparently were discussed in that meeting, like negative interest rates, which calls into question the commentary that President Trump had at the Economic Club in New York last week when he said he wanted the Federal Reserve to put in negative interest rates, saying, give me some of that money, using that type of rhetoric. So it's hard to tell what is kind of going on in those closed-door meetings. I'm trying to reach out to some sources to see if there's any sort of detail beyond that. But from what the readouts and the tweets say, it seems like it's just kind of a cordial conversation.
Cordial? Really? Because the president said, they talked about dollar strength. This is from the tweet. Dollar strength and its effect on manufacturing, which we know has been contracting in the United States. Trade with China. I mean, come on.
Of course. And the way, when I say cordial, I think that's the way that the administration, that the Federal Reserve especially, would like the optics of this to look like. But you raise up a good point. Trade is definitely something that the Trump administration is worried about heading into this next election, in 2020. But when it comes to the Federal Reserve, they've made a clear point that, yes, we're watching trade. We're trying to lever monetary policy to make sure that those headwinds don't adversely affect the U.S. economy. But they do have to acknowledge that inherently the trade negotiations themselves are a political game. So it's kind of a very weird, we have to acknowledge the political nature of this without also acknowledging the political nature of this.
Well, it has an economic effect, so that's the problem with them trying to negotiate that. Just one small note. When the president is tweeting about what they talked about, he's not the most reliable narrator when it comes to closed-door meetings. So he says this is what they discussed. The Fed characterizes it cordial.
Well, the tone thing, if it's heated and there's yelling, which is not really Powell's MO,
right.
I think at some point maybe, Brian, we'd probably hear about it. I would think.
Right. And I would say that at this point, truly, I think the president has cooled off on the Federal Reserve now that they have cut interest rates by 75 basis points. Before they went about those three decisions, the president was going after the Federal Reserve fairly frequently. Actually, the amount of tweets that he's fired off about the Federal Reserve has dramatically decreased.
He was still bragging on him a little bit, though.
At the ECNY.
Yeah, right, the ECNY, saying the market would be even higher if we got more from him, that kind of thing. And the negative rate thing, and people in the crowd, this is sophisticated business people, basically the reaction was like, be careful what you wish for, sir.
Yes.
With negative interest rates.
Right. Very weird, kind of tepid, clapping, not clapping.
It was a weird moment.
Little tep clap.
For sure. All right. Thanks. A little tip clap.
Little tip clap.
A hearty round of applause.
Oh, right,
for Brian
exactly.
Chung.
Thank you.
Yeah.
Thank you.
All right, let's take a look at what's going on in the markets right now as we see little change, slight downside bias. Inez Ferre is on the floor of the New York Stock Exchange. And as we do have some news coming out on T-Mobile on its succession planning, what's the latest?
Yeah, Julie.
T-Mobile.
And Mike Sievert, president and COO of T-Mobile, he will be the successor for John Legere. He will be stepping down next year. This will take place on May 1st of 2020 when Sievert will take place as CEO of the company. And Legere tweeted out that this has been in the works for a while, that he hired Sievert back in 2012 and that Sievert has been his mentee. Remember that T-Mobile has this pending merger with Sprint, which they hope to close. And also Ledger's name had briefly been floated in the media for possibly if he were to go to WeWork, although then there were reports last week that he did not plan to go there. And we're also watching HP this morning. This is after HP's board unanimously voted against Xerox's takeover offer of $22 a share, saying that that offer was too low. Also, an interesting note from Deutsche Bank, which came out saying that a combination of HP and Xerox would make sense, but for HP to be the acquirer and not the target. Julie, Adam.
All right, Inez, thank you. Diving into our big story about HP and Xerox. HP is keeping the door open to a potential merger with Xerox, even after it rejected that $33 billion offer. Now, HP's board said the unsolicited offer, $22 a share, was too low, and they're worried about combined debt. You'll remember that Xerox began discussing buying HP earlier this month, despite HP being 3 times its size. Joining us to discuss how this is all going to play out, Russell Hawley, senior editor of Android Central. It's good to see you again, Russell. We should point out, too, that Carl Icahn is one of the forces behind trying to get these two giants together. So how do they benefit if they really do come together? Because we have an analyst coming on who says nobody cares about these companies. They're last year's news.
Yeah, I mean, if you take a look at the financial records for both companies, they've not had spectacular years on either front. Both companies have posted losses in places where it's kind of unusual compared to some of their competition. And joining the two of them together, it's going to make a lot of sense in kind of an enterprise play where you're dealing with a lot of corporate America. But I think retail outlets, which is something that HP very much still sees itself as a retail competitor, there's not really an upside to that side of the business. So it really just depends on where HP sees itself positioning over the next couple of years.
It seems like, though, that this deal is likelier than not to get done. It's just a matter of where it's going to get done, at what price it's going to get done, right? I mean, there's nothing in the recent reporting that suggests that HP, from a sort of philosophical or strategy level, is opposed.
Yeah, that's correct. You know, the unanimous rejection today was entirely based on the amount, the dollar amount per share, and it didn't really have anything else associated with it. The comment that was made about debt, curiously, it doesn't really matter what the value is there. That's still going to be the same. So it's clear that HP still has a solid interest in this merger happening. It's really just going to be this kind of very public and probably awkward negotiation.
Yeah, so these businesses, what about the underlying business itself, Russell? I mean, in this age of cloud, how much demand really is there for copying and printing going forward over the next couple decades?
Well, it's important to keep in mind that that's probably why Xerox has such an interest here. You know, while cloud infrastructure is definitely something that you hear from luminaries like HP or Amazon rather, and Google and things like that, HP provides a lot of hardware on the enterprise side for that kind of equipment. You know, the server side equipment that makes all of the things that we consider the cloud work, HP is a pretty solid, provider of. So that's a big investment there for Xerox to have, kind of this single unified brand to approach these other companies with.
Russell, clearly several people think HP's business is undervalued. Xerox, you have Carl Icahn. What other merger partner would make sense for an HP?
That's a really good question. I honestly can't think of an individual where it would be kind of a merger situation. There's definitely been some talk in the office here about just kind of an acquisition entirely by a company like Dell, for example, where it would make sense for that kind of thing to happen. But as a merger, I think that's a very different situation that I'm not sure there is another company that would be appropriate.
What does Xerox do, though, with the computer part of HP? Because they're still one of the world's largest manufacturers of computers. Does Xerox really want that?
I think diversification is a huge part of growth in our market right now. And a big part of, kind of consolidation involves being able to offer services in as many different places as possible. And Xerox has to be aware of that as its enterprise business continues to lose money.
Russell Hawley, senior editor of Android Central, thank you for being here on The Move.
Thanks.
Turning to the skies now, the head of the FAA, Stephen Dickson, now says his agency is weighing changes to the way it certifies airplanes as the agency continues its oversight of Boeing 737 MAX return to service. Yahoo Finance's Alexis Keenan joins us from the newsroom. So, Alexis, what critiques does he have about the current approval process and what changes might we see?
So Dixon here, Julie, is kind of acquiescing to a lot of the suggestions that have been made by the international aviation community, saying that there needs to be a different type of relationship between Boeing and the FAA. If we go all the way back to 1978, when the U.S. Congress decided to deregulate the airlines, giving a lot of authority to make certification determinations to both manufacturers and to airlines, that's when things really changed. And it sounds like there's going to be some sort of reversion if it were up to Dickinson, which it ultimately is not. Congress will make this decision whether to allocate enough funds in order to get the FAA involved sooner. What he's proposing is that the FAA be involved at the design process right when that starts, alongside the airlines, not just Boeing as a manufacturer, but others as well. This would apply to flights that need to be, airlines that need to be, aircraft that need to be certified in U.S. jurisdiction. Now, meanwhile, today we're getting some news from the International Air Show in Dubai. Today, Boeing has confirmed that they have a new MAX order from a joint venture between Turkish Airlines and Lufthansa. It's called Sun Express. They will have a firm order for 10 737 MAX aircraft. That is a list price of about $1.2 billion there. So getting a vote of confidence for the 737 MAX. And maybe that's a hint of whether or not this timeline that Boeing has presented as of last week, that they will submit for the certification in December and hope to get those planes back in the air in January.
Want to talk about the video to Boeing employees. What did Dixon actually say? Do we have a verbate? Have we seen the video?
Yeah, we can actually take a listen to that. This is a video that he prepared. It's called, he titled it Straight from Steve, and he issued this to FAA employees, and this is about his commitment to giving them the time that they really need in order to get the certification in order. Take a listen.
I am not going to sign off on this aircraft until I fly it myself. It will return to service only when we deem it safe to do so. Now, I know there's a lot of pressure to return this aircraft to service quickly, but I want you to know that I want you to take the time you need and focus solely on safety. I've got your back.
Now, meanwhile, Adam, the airlines in the U.S. that do fly the 737 MAX, that's United, American, and Southwest, they have all delayed the 737 MAX from their schedule all the way into March of next year.
Thanks, Alexis. Appreciate it. Let's turn to our panel quickly for more on this. I mean, this seems like kind of an obvious change, or that the FAA needs to make some sort of changes, right?
Yeah, I mean, I got confidence in Stephen Dixon. I mean, this guy not only was an Air Force pilot, but he's flown all manner of Boeing planes and Airbus planes, including 737. And, I think that this is a guy, I like the fact that he said he wants to fly it himself.
And he was in also safety at Delta Airlines.
Yeah.
But they're not, these changes he's talking about are after we get past the 737 MAX and after it's back in the air.
Yeah, from my takeaway from this is, yes, it would happen next year. But if you're an investor in Boeing, you're investing in the airplanes too, this has to happen, but it will raise your cost of production, I think, pretty dramatically.
More regulation.
Yes.
Well, it's warranted.
Yeah, 300 plus people were killed.
The other thing about it too is that he talked about having more pilot oversight, more ability for pilots to actually be able to control the algorithm. To which I respond, you think? I mean, it's like this is like algorithms run, amok again.
Will Congress fund the FAA so it can have the necessary people in the future process? Because it's been about FAA cuts for several years.
Right, and then then they get strung out to dry by Ted Cruz, who says you're too cozy with the industry. So you're too small, you're too cozy. Which one is it, right? And I think that we need to make sure they're fully empowered, and they have the resources to actually make sure people aren't getting killed.
They will need billions. Just looking at that journal story, if not more than $10 billion.
Yeah, but what's it worth to our society?
Yeah,
I mean, it's people's lives. It's the lifeblood of our society.
All right, let's move to WeWork, because WeWork is still in troubled waters. The company reportedly preparing to slash at least 4,000 jobs. It's the company's latest bid to stabilize after its massive growth racked up serious losses, leading the company to the edge of complete collapse. Now, those layoffs could be announced as soon as this week. We want to turn to the panel for more on this one. I want to start with you. They're saying 4,000, but it could be as high over the next year or two as 6,000. That's half of WeWork's workforce.
I don't think it would be that far to go out on the ledge saying if it may be more than 6,000. This company's losing billions of dollars. They just came out last week, so they lost $1.25 billion. Clearly, there is a lot of waste, and I've told you this, guys, before, but I've gone to their headquarters before. There's just a lot of waste in that business. They have a deli. They have 10 tap machines with coffees and beers. That's just not how you run a normal company nowadays. It may work for Google and Facebook. It doesn't work for a company like WeWork.
Do they close down the pre-K? And
They
the
did.
elementary
They're
schools?
closing down the
Rebecca
private
schools,
schools. Yes.
Rebecca Paltrow schools, that whole thing.
I mean, the question is now, and I know Adam wonders this frequently, what happens to all that real estate, right? Because in many cases, right, Adam Neumann himself, or not in many cases, I don't know in how many cases, his entity is the owner of some of the real estate, and WeWork has leased some of that real estate. So then it becomes available. Is there actual demand, real demand for that real estate in the various marketplaces where they are? Yes, he got his $1.7 billion payday, but what happens if he now can't lease that office space? How long are WeWork's leases? Can they get out of the leases?
Does
if
it
they're in
depress
financial
prices?
trouble? There are a lot of questions about what happens.
I mean,
to all of it.
you make it sound, and I don't think you're wrong, Julie, Ponzi-esque. I won't say it's a Ponzi scheme, but when you start to pull, what is it, one of those things where you have the tower?
Oh, Jenga.
Yeah, little Jenga tower situation, right?
But then you have to ask the question again. SoftBank has put in far more money into this company than the value of this company. It's they're up to about $14-15 billion investment at this point in a company that's valued at maybe $7 or $8 billion.
Yeah, if not even lower too. But you're also looking at a company that is unlikely to go public next year, or maybe even 2021.
And then there's the Vision Fund connection. Yeah. I mean, you've got a lot of things at play here, a lot of balls in the air, and it's like MBS is not happy, right? Masayoshi Son's not happy. Adam Neumann's not happy. The employees are not happy. Brian, I got to ask you, who's happy here?
I don't know, but he's getting a big fat paycheck.
Yeah, right.
He's about to buy a $45 million
Do you think
penthouse.
he's going to get to keep all that money?
I do.
Oh, well, it could be clawback. The SEC, no, the SEC,
Clawbacks or
SEC is looking at the
litigation.
paperwork that was
But
filed.
it would have to be litigation from private investors, which is tricky, right? So in other words, will the Sand Hill Road gang turn on him enough to actually want some of that money back? Could be. Could happen.
Could happen. All right, I just want to mention some breaking news, pardon my distraction. Coming out of Oklahoma, police have confirmed 3 people have been shot and killed at a Walmart in Duncan, Oklahoma. This is according to the local Fox affiliate station in that area. This is a town that's about 80 miles south of Oklahoma City, Oklahoma. This, of course, would be another shooting at a Walmart following the one in El Paso, Texas. We will try to gather some more details on this and bring them to you as we do get them. But again, a report that 3 people have been shot and killed at a Walmart in Duncan, Oklahoma. We'll bring you more updates as we have them, and we'll be right back.
Welcome back to On the Move. I'm Jared Blickery. We got the Dow at a record high, but it hit it early. It's only down about 8 points right now. S&P 500 off 12 basis points. NASDAQ doubled that at 24 basis points, but still muted moves here. The action's going to be in the bond market, which we will take a look at in a minute. We can see the S&P has yet to be in the green for the day, spent most of the day underwater, but again, just testing some very, very minor support levels. The Russell 2000 is off the most, up down about 0.4%, and we can see it's currently trending lower, hitting new session lows on each push lower. And then we have the 10-year T-note yield. I said bonds are the story today. They've been the story a lot of days, not Friday when we had those record highs, but they are down 3 3 basis points. And when we see bonds down, we see is factor and sector rotation at play. So here we have, this is S&P low volatility, that is up. That is because those are largely bond proxies. They're stuffed with utilities and markets that respond to lower bond yields. Then we have the Spider Home Builder ETF, XHB. That is up as mortgage refi or mortgage rates are lower. Then we have the Philly Semiconductor. That is strong, tends to be no matter what. That is at or near another record high. And let's take a look at momentum, because that got clobbered when bond yields were heading up. Now that they're down, it's getting a little bit of a bid. And to the downside, we're going to see that we have the regional banking index, and we also have Dow Transports. Those are underperforming, as well as the Spider S&P Retail ETF, XRT. If we look at the sector action today, we're going to see that the Spider Consumer Staples ETF, that is XLP, doing the best. That is defensive posture because we have utilities and real estate up there at 2. And to the downside, we did have energy, and it's still there at the bottom, up 1.3%. We will be back in a couple minutes.
Constructive is the word Chinese officials are using to describe a phone conversation between Steve Mnuchin, Robert Lighthizer, and China's Vice Premier Liu He over the weekend. But reports suggest the president is reluctant, our president, to roll back tariffs. And that's still vexing the chances of a resolution. Joining us with more, Jess Smith, who is in Washington for us. And it almost seems like whiplash back and forth on all of this.
Right. It's another day, another comment on trade to try and dissect. China, as you mentioned, said that the call over the weekend was constructive and that the two sides will remain in close contact. But CNBC reports that a source close to the Chinese government says that the mood is pessimistic about the Phase 1 trade deal. Tariffs are a key area of concern here. The Chinese thought that there was an agreement to lift tariffs as part of the Phase 1 deal, but President Trump has not signed off on that. CNBC also says that the Chinese are looking carefully at impeachment and the election in the U.S. and that their strategy may be shifting to wait and see what happens, keep talking, but wait and see what happens in the U.S. We do know that President Trump talked about China trade with Fed Chair Powell this morning at a White House meeting, but we'll be watching to see if we hear any more from the Trump administration about where negotiations stand. Adam and Julie.
Thanks, Jess. And as Jess has just been talking about, trade negotiations remain ongoing. The lack of a deal continues to plague an otherwise robust market as investors await some type of resolution. Joining us now with more is Will Ryan, Granite Share CEO. Will, when you look at your suite of ETFs that you guys manage, it does seem like there's been some diminishing effect of the trade back and forth. But nonetheless, it still remains unresolved. What's your view on the situation?
Yeah, I mean, it's funny. I mean, I suppose this is the first time in history we've had, something like this played out in real time, and that's, I think, what the market, really kind of fundamentally struggles to deal with. And so before, in history, we'd always have things like trade, major political decisions being done behind closed doors. And obviously nowadays, that's very much in the public eye on a kind of minute play-by-play basis. And,
tweet by tweet.
Tweet by tweet, and that's what I think the market struggles with.
One of the things that you've just done, you launched in October X-Out. Did I pronounce it correctly?
Yes,
it's a
exactly
U.S.
right.
large cap ETF.
Yeah.
But here's the deal. You are Xing out roughly, 250 companies, and among those were, when I was reading the notes that you sent, Disney. You X'd out Disney. I think you X'd out our parent company as well, Verizon. I'm not sure about Verizon, but Disney's out. How do you determine who's in and who's out?
Yeah, so we have a multi-metric sort of fundamental scoring system that basically scores every company, so the 500 largest companies in the US, and gives them a score 1 to 5. And so the 250 names which perform poorest get excluded from that index. And so we rebalance on a quarterly basis. And obviously, if a company is excluded, it doesn't mean they're permanently excluded. They can come back in if they sort of turn things around according to the model. But that's the basic idea, is that the whole philosophy of investing has always been based around picking winners. And as we know, that's just fundamentally extremely hard to do. And so what we think is there's a good amount of research done that it's actually easier to spot companies that are in decline or most likely to underperform than it is to pick winners.
But doesn't that sort of defeat the whole point of an ETF? I mean, you're sort of like saying we're passive, but no, wait a minute, we're actually active? Are you kind of a hybrid or a push me, pull you, or how do you characterize yourself?
No, it's a great question. Look, I've been involved in ETFs for 20 years, and I think one of the things that in my mind is most important is the ETF is just a wrapper, right? It's just a vehicle to provide an investment that could be anything from physical gold to a specific basket of bonds. And so to me, the wrapper itself, the technology of the ETF is the important thing. What's in it is actually less important.
Fair enough.
And so one of the things that we've tried to do is take what you're talking about, passive investing's arguably biggest flaw, which is buying every company in a market indiscriminately, whether it's a good company or a bad company. And we're trying to X out those that are bad. And we think that's a better way for
get
investors.
The cost savings.
But how do you, why is it any easier to pick the losers than it is to pick the winners? If you look at some of those that you have X'd out, you've got Schwab, you've got Disney, as Adam mentioned. Wells Fargo might be a more obvious.
GE. It'll make Brian's. You wrote GE scores quite horrendously.
Stocks. You buy them when they're down.
So what? But what are the? How do you just look at historical performance? What are you looking for?
So like I said, we look at a number of different fundamental metrics. So we look at things like, is a company growing its revenues? Is a company hiring or firing its employees? Is it reinvesting in the business from an R&D perspective? There are things that you could argue that many active managers use in part of their process to evaluate whether a company is kind of good or bad or going in the right direction. And this is what we use. And I think what's kind of interesting is if you look at the market more broadly, the market's pretty good at identifying a company that's in trouble. It's just a lot harder to pick out of all of these securities what's the next Google. I mean, that's just a difficult thing to do.
Within your model, what are your expectations on interest rates?
So we don't have, it's not a valuation-based model, so it's purely fundamental. So we don't have expectations on things like interest rates. All we're trying to do is identify good companies and bad companies and exclude the bad ones.
And we should point out your track record, barely 2 months, not even two months old yet.
Exactly.
You're outperforming the large cap index, but the S&P 500, you're outperforming if someone were to compare.
Correct.
But it's only a month and a half out. So.
Exactly, yeah. No, it's early days. I should say that this strategy was run in a private fund beforehand, so it does have a longer history, but has now been commercialized into an ETF because a lot more people can access the ETF and want that as the vehicle of choice. So although the fund itself has been live for a very short amount of time, there is a broader history behind it.
Hope we can get you back in about 6 months and see how this is all progressing against.
We'll be watching, Will.
Thank you.
Will Ryan, Granite Shares, thank you for being here.
Thank you so much.
Coming up, addressing the student debt crisis, presidential candidate Pete Buttigieg reveals his plan to make public college free for some Americans. Plus, before we go to break, take a look at some of the top trending tickers on Yahoo Finance today. Ford, as it rolls out a new electronic Mustang. is 11:30 a.m. here in New York City, 2 hours into the trading day. Now we've got a mixed picture for stocks, although let's just call it little changed. Oil prices have been trending lower in today's session. You can see down about 1.5%, 56.87 the barrel. In fact, energy stocks are the worst performing group today. Reason for concern, President Trump's physical over the weekend raises questions, despite the White House calling the hospital visit routine. Tackling student debt, we'll talk to one company who thinks they have an answer to the growing crisis. And reining in electric, Ford's new Mustang impresses everyone from consumers to even Elon Musk. Welcome back to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. We're heading across the Atlantic. The pound is seeing a 6-month high after a series of polls gave Boris Johnson a lead in the December election. This comes as the Prime Minister unexpectedly shelved his plan to provide tax breaks for UK businesses. Joining us now from London is Yahoo Finance's Edmund Heafy. And Edmund, so why is he backtracking? Why the holdup?
Well, up until now, Adam, Johnson had signals that his government would be willing to cut the corporate tax rate from 19% to 17% in 2020. It's important to note that this was actually a pledge from previous Prime Minister Theresa May. He told a conference this morning that he would shelve the plans, for now at least, in order to save around £6 billion that can be used instead for public spending. And he specifically pointed to the country's National Health Service. It's also important to note that the Conservative Party has already cut the country's corporate tax rate dramatically. It was 28% in 2010 and it's now 19%. But this still is probably the biggest U-turn of the election so far from Boris Johnson. But I think it probably makes sense. The UK's corporate tax rate at 19% is already well below the EU and OECD average. And Johnson is facing kind of a battle with the opposition Labour Party, who are alleging that the Conservatives have undermined the National Health Service and also that they are too close to big business. So this seems like a smart kind of policy move that would allow Johnson to counter and fight back against those claims. And then it comes separately, but not unrelatedly, as the pound is up around 0.4% on the back of a series of polls which point to Johnson getting a big majority in next month's general election. Up to now, a win by Johnson had kind of been priced into the currency, but these polls put his party much further ahead than had been predicted even recently. Around 45% of the vote is what polls are suggesting he will get, which compares to only 30% that the Labour Party will get. And that paves the way then for an exit from the EU in January.
I, as always, will not be holding my breath, but that is very interesting developments. Thank you so much, Edmund. Democratic presidential candidate Pete Buttigieg is out with a new college affordability plan. It provides all U.S. families with a total income of up to $100,000 with free public college tuition. And for families who earn up to $150,000, they will receive what he calls substantial tuition subsidies. David Klein is CEO and co-founder of Common Bond. He joins us now. You're in the student debt refinancing business. When you hear proposals like Pete Buttigieg's or Elizabeth Warren's or Bernie Sanders, what do you think? Having been in this business, which do you think is the best way to tackle it?
So there's really two types of proposals coming out of the Democratic field. One is what I like to call the free ride. The other is what I like to call the fair ride. Bernie Sanders has the only free ride proposal, actually, where he essentially is eliminating debt and making college free for everybody. The fair ride camp essentially says, free college for some, wipe out debt for some. And the only difference between the candidates is simply to what extent they go, where they calibrate to cost and coverage. And so Buttigieg coming out with this today puts him in the mix and gives some specific proposals for him to talk about.
1.5 trillion, that's the Federal Reserve dollar amount on how much outstanding student loan debt there is, with roughly about a 10% default, I believe. I might have that number wrong, but let's get to the baseline here as I cough. You've got Bond Ignite. How does this help somebody? And if I were to do this with a bank, do I lose the ability to defer my monthly payment when I'm doing a student loan, essentially if I refinance?
So we're going to announce something soon called Common Bond Ignite. And what Common Bond Ignite allows for is tech integration with large financial institutions who want to solve their millennial customer gap with a student loan product gap that
Okay,
they
but
currently
let me get right to the point. Is it refinancing, and do you lose the ability to defer? Because that's a big issue for a lot of people with student loan debt.
So the real quick answer is no ability to defer is lost. Nothing like that. We've already piloted this with a number of companies, or certainly we've announced partnerships with companies in the last year or so as a precursor to launching Common Bond Ignite more nationally. It's effectively going to be everything from refinance student loan to a whole suite of student loan focused solutions to help end users, customers reduce their debt faster and save money along the way.
David, you got free ride, you got fair ride. What's the best ride? What's the right ride?
So I come from the generation that has a lot of student debt. I started the company because in order to go back to school, grad school in my case, I needed to pay my way 100% with student loans. And coming from that generation, I still have student loans, by the way. I'm still paying them off.
Wow.
But I refinanced with Common Bond, so I saved a lot of money. That being said, I don't think my generation is looking for a free ride. I think we're actually looking for a fair ride. And there are a number of folks in this country who have sold a bill of goods, who went to a college and university, who didn't prepare them to be placed in an appropriate job relative to the cost of their education,
Right.
6-12 months after educating, and they're left with debt that their careers won't allow them to pay back.
Would a free ride put you out of business, though?
A free ride would create a lot more problems than I think it's trying to solve writ large across the economy and even within social fabric. I do think there are a lot of people in this country who suffer from student debt in a way that they shouldn't, and we should help those people. And I do believe it does take public policy in order to do that. And I think there are a lot of proposals out there that have a lot of strong provisions in them that will go a long way in solving the problem for a lot of people who need most help.
You said you've been doing this pilot with the banks that you're now going to expand upon. It's for refinancing, not for the initiating of these student loans, because the government still controls, the federal government still has the enormous bulk of initiating student loans. From what you're hearing from the bank, is there, because we've had some guests come on and say, turn that over to the private sector, let them deal with this business, they would do a better job. Do banks want to do that? Is there demand on the banking side to initiate student loans?
So this takes us to some of the recent headlines we've seen: Goldman Sachs, Apple Card, Google, Citi. There's a reason that big finance and big tech are coming together. Big tech is seeking attention, consumer attention, and big banks are seeking relevance. And if you think about why big banks are working with us, and it's not just banks, it's insurance companies, it's larger financial institutions, more generally speaking, it's because they're looking to win their customers' attention. And when you have the student loan affect so many people in this country, 45 million, when it's at 1.6 trillion in outstanding, and so many people need this debt solved, this is the first financial product that so many people in this country have ever really had to deal with. A lot of people are calling it the new mortgage. And so it's a way to get in front of, win the attention of a relatively young consumer at the beginning of their customer life cycle to provide a broader financial relationship over time.
All right, David, thank you for coming in. We hope to have you back as all of these various plans, fair, free, whatever they may be, develop. David Klein is CEO and co-founder of Common Bond. Appreciate it.
Coming up, Ford challenges Tesla in the race for electric domination, how the new Mustang Mach-E puts Ford in the driver's seat. Plus, fresh optimism on Wall Street, why some analysts are calling for the Dow to reach 30,000.
Let's take a look at some stocks on the move in midday trading. One big up mover, one big down. Coty on the upside, the big cosmetics company is buying a $600 million stake in Kylie Jenner's cosmetics brand. It values that brand, by the way, at $1.2 billion. Remember, Kylie Jenner started this as a teenager, just focusing on a lip palette, and has expanded. It's enormously popular. Coty has been struggling with a turnaround to some extent, so trying to become more relevant. We were just talking about relevance among younger people with our last guest. Coty's trying for that as well. The shares trading higher, but as you can see, they've come down pretty sharply from their highs of the session. Going in the opposite direction, a Biomed. Now, apparently at an American Heart Association meeting yesterday, there were some results presented that showed its heart pump Impella was, quote, associated with higher rates of adverse events and costs. So those shares are tumbling today. We'll bring you more movers coming up. We'll be right back. Yahoo Finance's Reggie Wade got a chance to sit down with Nike's direct-to-consumer president to talk about the company's platform and the future of retail.
Now, I read that as an 11-year-old, you saw your first retail pivot. So you've seen a lot in the space. Where are you seeing retail now? What's the future of retail? If you could just get out your crystal ball, what do you think is gonna go down?
That's a good question. Well, it's funny that you know that about me. It's age 11. But in some ways, I think the more things changed, the more things stayed the same. I was a kid, 11, working in a sporting goods store, waxing skis and stringing tennis rackets. And people would come into our little store and just want to connect and be about community. And I was a cross-country skiing coach, as an example, not a running coach, but a cross-country skiing coach. And when you think about it today, those wishes and needs for consumers still exist. And we, though, have an ability to serve them better at scale through tech and through data and through membership. And so I think that's what we're watching closely, is to look where consumers are going, but to make sure we don't lose what is timeless about consumer connections. And I see a more digital future, but more importantly, I see a more digitally connected future so we can serve consumers wherever they are.
Now, I am a sneakerhead. Everyone knows that.
I see that.
Around the office. How is Nike fostering the community of sneakerheads? Because if you look at the community, there's so much love in the community, so much camaraderie. What is Nike doing to push that forward?
Oh, that's great you ask it. Well, you said we're here in Studio 23, and this is home base for our sneakers team. And, one of the reasons we actually acquired Virgin Mega a few years ago was because of their passion for sneakers, but also their passion for bringing community into our experiences. And our best innovation from Nike from a community involvement perspective is happening right here in the studio we're in right now. This is the studio that first brought in consumers in the neighborhoods, in the boroughs, to help us create product and bring their voices into what product we are creating. We have a maker studio right over here, and so there's no experience in Nike that has a stronger community voice than our sneakers experience and our sneakers app. And we actually look at this as an innovation hub to keep building on those community experiences, but also so Nike and other platforms and other applications can learn how to build these really beautiful communities.
Heidi, 2020 is a big year, not just for Nike sports in general. We have the Olympics coming up in Tokyo. What does Nike have in store in 2020?
Yeah, well, we've talked a lot about, our innovation in apps. We've talked about our innovation in stores, and we've talked about our innovation in services. So, and I would take our whole day to talk about what's coming, but let's talk about one in each. When you think about apps, we were just talking about 1111 in China. So we will actually launch the Nike app in China in December, which is a really important play. We found that consumers in China are loyal to China platforms, but they also love connecting with Nike directly. And so that's a really big move in launching December 4th in China. From a store's perspective, you're going to have to come visit us in Paris this spring.
No problem.
Exactly. We'll be launching our third House of Innovation. And super excited about that on Champs-Elysees. And you'll see the same kind of membership tech-powered experience where you'll find one of our biggest stores in the world, the most personal member-centric doors. And then you said Nike Fit. We'll be expanding Nike Fit from a service perspective to other product types and continue to solve the fit challenge for consumers.
Ford released its very first electric vehicle. The new Mustang Mach-E is all new, fully electric. It's a crossover made in various flavors that is set to hit showrooms later next year. Yahoo Finance's Pras Subramanian joins us now to talk more about this.
Why is it in the dark?
Well, they were unveiling it. The LA Auto Show is underway. Real quick, we're about to see the vehicle, but when you think Mustang, this isn't actually the coupe or the Mustang you're thinking of.
Yeah, I mean, it's pretty controversial amongst car fans and even some journalists I spoke to this weekend. But after looking at the reveal last night, I think it's a pretty handsome looking car. I think Ford had to make their first electric release exciting. Yeah. And they thought, what better way than to port on the Mustang name?
And did you see who tweeted it out, though? Yeah, no, it's like an SUV.
Elon Musk.
Right.
Elon Musk congratulated them.
Elon and it actually looked like a sincere congratulations. It wasn't. I thought he was going to snark on them, but he was like, "What did he say here? Congratulations on the Mach-E. Sustainable electric cars are the future. Excited to see this announcement from Ford, as will encourage other car makers to go electric too." He couldn't have possibly tweeted that. It had to be a PR person.
Well, but this thing, okay, so base is what, about $44,000. The trick it out, it's about 60 something.
Yep.
How does it compare, say, to the Tesla offerings? And Ford is going big electric. They got the deal with VW and they got the deal with Rivian. We're going to start seeing electric trucks in the next year.
Yes, I'm waiting for that.
I mean, I wrote a piece today where I compared the Model Y with the various trims with the new Mustang Mach-E, and it's pretty comparable. Now, that $43,000 car is going to get you about 230-mile range and about a 7-second 0 to 60. It's a little bit slower than the Tesla of that sort of ilk, but the Tesla's a bit more money. It's going to be like 40, 45, 48. And they don't get the full tax credit like Ford does still. Tesla's, that's being phased out, the federal tax credit on electric cars. So the Ford has the better pricing here. The cars are similarly in terms of size. But Tesla always has that edge when it comes to their electric battery systems and also the batteries themselves.
Is this? Go
ahead.
Is this profitable? Is this a profitable vehicle?
I don't know.
Not selling it.
I still don't understand how they can call this a Mustang.
Yeah, that's a good point.
I'm confused. To me, it looks like a Porsche Cayenne a little bit.
Yeah, trying to get some
Looks
it's the lights. It's the rear lights.
It's a little bit of styling cues in the front end. You got the lights in the back. Look, you're actually.
And I don't know anything about cars, but when I look at this car, I do not think Mustang.
And that's what a lot of the hardcore fans are saying. Why is there an SUV that looks like a weird Mustang, kind of in the family, the Mustang family?
Ryan, this stock is flat. It's at $8, $9 a share. Is it going to go anywhere?
Well, I think for them, this better be a profitable undertaking for them. They're releasing, 60 more fully electric vehicles by 2021. They have to make money on these things. Can't be Tesla's story here.
And they're making 50,000 of these in the first year. 50,000 of these electric cars. So they're bullish on selling them. The question is who will buy them.
Yeah, I wonder if you can use Tesla's chargers.
You can't, but Ford has their Ford Pass, makes 12,000 charging stations across the country.
Right. So you can use the other ones, not the Tesla.
Tesla can use both, but
Tesla can use both.
Yes.
I know. I've been there.
You did the whole trip,
there.
right?
It's got a light in the glove compartment. What more do you want?
I want.
Coming up, police say a mass shooting in Fresno, California was probably a targeted attack. Plus, Pacific Gas and Electric warns 250,000 customers the lights are about to go off to prevent wildfires. 10 people were shot, 4 of them killed at a family gathering in Fresno, California. Yesterday, police say the attack was probably a targeted shooting. Roughly 40 people had gathered for a football watching party when the shooter broke in through a side entrance. The 10 victims were all grown men. Bankrupt utility PG&E warns 250,000 customers it may cut power in California later this week. PG&E says high winds pose a threat to power lines that could be knocked down, sparking wildfires. The precautionary outages will take place in Northern California around the San Francisco Bay Area. White House Press Secretary Stephanie Grisham says the president remains healthy and energetic without complaints. That's after a surprise physical at Walter Reed National Military Medical Center Saturday. The White House calls the physical routine, even though it was not on the 73-year-old president's schedule. Dunkin' says it will completely phase out foam cups in all of its New England stores by December 1st. Dunkin' employees are wearing pins that say the double cup is breaking up, since customers often double up to hold cups of hot coffee. Dunkin' is now using more eco-friendly paper cups, which are certified to the Sustainable Forestry Initiative standard. We'll be right back. Time for Word on the Street. We're going to check in with the panelists and find out the stories that they're watching. Andy, you wrote a letter to President Trump. It's a follow-up to a previous letter you wrote him.
Yeah, I wrote him a letter when he was first elected 3 years ago, and thanks to Facebook, they reminded me that on the anniversary of the letter, which is actually a positive thing. Reposted, got a lot of response, and I said, well, listen, you got one more year to go. You're facing impeachment. I just saw you speak at the New York Economic Club. Why not write you again? And so I did, and there was actually a lot to write about in that. I looked at what I suggested when he started, and he did some of those things, didn't do some of those things, spoke to some people. I suggested that he take a look at tax reform, minimum wage, and some other things. He says he did tax reform. I say it was kind of a half-baked tax reform.
He was, it was a victory lap in some respects at the Economic Club.
Yeah, it was, but and I think that the audience there was sympathetic, let's just put it that way, because they're business people, and he was trumpeting the strong economy, and the economy is pretty strong. On the other hand, I think the response was, Julie Hammond calls it tepid. I think it was tepid, a little tep clap, as we talked about.
Especially to that negative interest rate.
Right, yeah, I mean, there were a number of things, and I talked to people, and they like where the economy is, they don't like his demeanor. And I spoke to a senior Wall Street executive, had lunch with him last week, and he was telling me, he goes, I love the president, I love what he's done. And then he proceeded to tell me this story about he was playing golf with him in a foursome at a country club in New Jersey, and how the president cheated playing golf with him.
He's infamous for that.
He just said, what do you do with that? What do you do with that? That's what he said to me.
I don't know. You maybe don't.
To
the White House. I don't know. All right, Brian, we got to get some new hats. Dow 30,000?
Yeah, talking to a lot of people on Wall Street, and they're already looking past Dow 28,000 onto Dow 30,000. And when a lot of them are saying it could hit in the first half of 2020. And key to all of this is obviously the impact of the Fed's 3 rate cuts this year filtering its way through the economy. Consumer spending still pretty strong. Fixed asset investment starts to pick up, aka CapEx, and there you go.
Well, I mean, the higher we get on a percentage basis, it makes it a lot easier to get from 28 to 29 to 30. So it's not quite as...
You need a logarithmic scale, Julie Hyman?
Yes, indeed.
You do.
There is, you always see these types of calls going into New Year, a lot of upbeat strategists, but I think what a lot of these people fail to realize, we still have no trade deal, and those tariffs might kick in December 15th.
But phase one is coming, Brian.
Oh, it's always coming. It was coming 6 months ago.
Yes, it was. All right. Brian Sassi, thank you for being here. Andy Serwer, appreciate it. And coming up, HP rejects that acquisition offer, but the company still says it's open, perhaps still, to a potential deal with Xerox. Plus, before we go to break, take a look at some of the biggest losers in the Dow today. Maybe these are holding it back from getting up there to 30,000. Chevron helping lead those oil stocks lower today, along with the price of oil itself. It is noon here in New York City, or almost. We're 2.5 hours into the trading day. Stocks are mixed right now, hovering around the unchanged level. Let's take a look at the 10-year Treasury yield, though, to see if there's any more movement there. Not much, down 2 basis points, 1.81%. Thanks, but no thanks. HP rejects Xerox's takeover offer, but it doesn't close the door completely on a deal. Turbulent times ahead. The head of the FAA considers bringing major changes to the plane approval process in the wake of 2 deadly Boeing MAX 8 crashes. And light them up why President Trump reversed course on his vaping ban. Welcome to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. It's good to have you here. Let's take a look at the markets right now. Ines Ferre is on the floor of the New York Stock Exchange. Big news coming out about Kylie Cosmetics and Coty, and you've got an update for us on this.
Yeah, that's right. Coty stock earlier was up more than 4%. Now it's up just a little bit. This is after the news that Coty is investing $600 million in Kylie Cosmetics. This is the reality star Kylie Jenner's that we're talking about. The deal would give Coty a 51% stake in Kylie Cosmetics. And just to give you an idea of the reach, Kylie Jenner has 151 million Instagram followers, 29 million followers on Twitter. And earlier this year, Coty had announced some management changes in January and also a turnaround plan over the summer. And then we're also watching Peloton. Peloton today, for the first time, surpassed its IPO price of $29 a share since the company went public earlier this year. And in their last quarterly results, their CEO said in the earnings call that they could be profitable if they wanted to, but that then they wouldn't be growing. They have been expanding into Germany and also Canada. And then we're also watching HP. This is after HP's board unanimously rejected Xerox's takeover bid for $22 a share, saying that the offer was too low, and also citing concern about Xerox revenue decline since 2018, but still leaving the door open for a possible negotiation.
All right, thanks, Inez. Appreciate it. Let's dive a little bit more into HP and Xerox. It's our top story of the day. Bringing in our panel for the hour, Yahoo Finance's Heidi Chung and Adam Johnson, Bullseye Brief author and publisher. HP and Xerox, we've been talking about this one. HP is saying now it wants a little more cash for the deal. I know you focus on, as you, yes, indeed. As you always say, you focus on American ingenuity.
Thank you.
This is perhaps American ingenuity that's seen its day.
Oh my God, you just took the words out of my mouth. Yes, if you want to talk American ingenuity, do not talk about Xerox and do not talk about Hewlett. These are two broken companies. This is what happens. You know, broken company number one doesn't know how to save itself, so goes after broken company number two. Heidi mentioned, not Heidi, Inez, thank you, on the floor, just mentioned revenues down since 2017. Well, actually, Xerox has seen falling earnings each of the past 5 years. This year, they're finally seeing some growth. Meanwhile, Hewlett, I actually tried to print out tickets to the Sting concert last night, which I went to in Philly. I used my Hewlett-Packard printer at home, and I thought, isn't it ironic? Apple makes such a beautiful product, and they partner with Hewlett, which makes such a lousy one. They both trade at 10 times. Nobody cares about these companies.
But wouldn't you say, though, that this kind of makes sense because first and foremost, the printer industry itself is just a failing industry, right? So consolidation is expected. But to be fair, if HP and Xerox got together, the risk of cannibalization is low, right? Because we have Xerox, which focuses on corporate, larger printers and copy machines, whereas HP focuses on PCs as well as, ink and the other parts that go with it.
Therein lies the thing, right?
Right.
All they can really do is make money on ink. Selling the printers and the copiers is kind of a lost leader.
Mm-hmm.
And I don't know if selling ink is that exciting.
It's a rough analogy, but there is historic basis for these kinds of things. Failing company, one failing company.
Right.
Studebaker bought Packard in the 1950s.
Right.
They failed. Studebaker Company, by the way, still exists. Doesn't make cars. It's a finance company. Studebaker Worthington.
Really? I didn't even know that.
So they can recreate themselves. Given the fact that there's only the ink as you see it as a business, how do you recreate if these two do come together? Because it looks like they're going.
I kept waiting for Hewlett to become the leader in 3D printing. And they didn't do it, right? It's like when Kodak was actually Kodak and existed, why didn't they go into digital prints? I don't know, but they didn't, and they failed. Why did Dell wait so long to go into laptops? I don't know, but they did, and they had to take the company private as a result. They never even got into iPads. So yes, you can reinvent yourself. Glowworm, GLW, help me, Julie, Corning Glass is what, 142 years old. They've reinvented themselves more times than they can count. And hats off to Corning for doing that, but it's really hard to do. And I just don't see where the growth is at Hewlett. Yeah, Heidi, I'm with you. Bring them together and they won't at least fight each other.
Right.
But where's the growth?
Sure, there's not tons of growth in the future, but I don't necessarily see the printing business going out of business anytime soon, right? Companies are still going to need to print things. We're not going to see a huge growth in people adopting printers, but at the end of the day, it's still a business that's going to be around for a while, right? And we just saw with the 13F filings, Carl Icahn, activist investor, is all about this. He has a 4% stake in HP, 10% stake in Xerox. He says, hey, this could be a valuable deal for shareholders.
Well, with both companies trading at 10 times, you could argue that maybe they get a 12 or 13 multiple, and then he's made 20 or 30%.
And then he's...
Yep, exactly. And then he exits.
And to your point about the printers, I can still never get my inkjet to
so
work
bad.
at HP.
So bad.
All right, turning to the skies, the head of the FAA, Stephen Dickson, now says his agency is weighing changes to the way it certifies aircraft as it continues its oversight of Boeing 737 MAX return to service. Now, this move comes after the FAA has faced a lot of criticism on the way it approves new aircraft and what some lawmakers see as the too close relationship with the industry. Back to the panel on this one. Let me start with you, Heidi. There is a benefit to having people who know what they're doing involved in the process, and the people in the industry would be part of that process. On the other hand, when you let them run it, you get a disaster. So what could the FAA do to turn this around?
I feel like this is something that was kind of I think a lot of people are assuming that this was going to be the case, right? FAA kind of messed up here. They were too cozy with Boeing, and thus the certification process was kind of loose. So at this point, they need to overhaul the certification process regardless. And so I don't know if necessarily people were saying, oh, hooray, this is something, new out there necessarily, right? But in terms of, I think, going forward, the question remains, okay, then how long is this going to delay the process? Because if they completely overhaul the current process, which was just, okay, everything on the list checks off, you get the certificate of approval and you can go ahead and fly these planes. But if they're making the process more complicated at this point, sure, we're still producing 42 planes per month, and sure, they're sitting in a hangar, but what happens when we do get that approval? We're 8 months out since we grounded these planes. So as we always mention, the suppliers are affected, the employees at Boeing and the suppliers are affected. And I think there's still contention inside of Boeing's boardroom where we have Dave Calhoun and Muhlenberg kind of not seeing eye to eye when it comes to these production numbers. We have Calhoun saying, no, we should produce less because no one's buying them and they're not up in these skies anytime soon. But then you have Muhlenberg, which says, oh, optically, it's not going to look good. It looks like we don't know what we're doing and we have no idea when these planes are going to be back in the air.
Unlike how they're looking now.
Okay, there's so many reasons why this is so upsetting. First of all, the 737 was 2/3 of Boeing's total backlog. I mean, the 737 is Boeing, right? And as a result, it's a disaster for Boeing earnings, but in a larger sense, it's really, I'm not going to say it's a disaster for GDP, but it's arguably 3 to 4% of GDP. For exactly what you just said, Heidi, the multiplier effect here is really big because of all the supply. So it's really upsetting. People keep saying, hey, where would you buy Boeing, right? At the end of the day, I'm a stock picker. Well, I wouldn't buy it now. And last December, it was $292. Right now, it's what, $340, $350? And I can't even put a multiple on it because I don't even know what the earnings are going to be. So it's really upsetting to me.
So the bottom's not in yet?
No.
I think there's more room to go.
I think it's a hope situation. And what if, by the way, and I hate hypotheticals, but that's in part what we have to do. The what if probability, maybe it's 20%, that they say, you know what, we really do need to overhaul the procedures with the FAA. And this thing might be grounded till next June. I mean, what if? That's really
the FAA is saying
troubling.
that the procedures are going to change after they get the 737 back in the air.
Yeah.
I mean, that whole new process will be for new aircraft. They're focused on let's get this thing back in the air. And Dixon sent that video, as Alexis told us in the last hour, to Boeing employees.
Right.
Focus on safety, deal with safety.
Well, you remember the 787 Dreamliner? Amazing airplane. And I actually flew on the first flight, United Flight 001, when they got that thing back in the air. It was awesome. So Boeing does get stuff right, but that thing took a long time. That was like a 3.5-year fix.
Even if the FAA allows and checks off on the certification this time around, it's like, when the software goes into these new planes, it's a manual process. And they have a number of planes continuing to just sit there, and that number is growing. So at this point, at what point is this plane going to be back in the air? I think $1 million question, right?
Yeah.
All right, moving on to this. President Trump is seemingly waving the white flag on vaping. After announcing he was moving to ban the sale of most flavored e-cigarettes just 2 months ago, he has walked back that plan after being warned there could be backlash from voters. Joining us now is Greg Conley, president of the American Vaping Association, which is a pro-vaping advocacy group. Thank you for joining us. So,
Thank you.
According to this report, he was concerned about the optics of potential job losses. How many people are employed by the vaping industry, and how much would that change as a result of just changing the regulations around flavored e-cigs?
Sure. So an economic impact firm did an analysis about a year ago estimating 80,000 direct jobs and around 70,000 indirect jobs. And so the Department of Labor, their own statistics, the Washington Post reported this, show that since the recession, the fastest growing retail sector has been vape shops and tobacco shops. And so virtually all of those jobs were threatened by a flavor ban because the vast, vast majority of adult users of vaping products, particularly those who have made the switch to vaping, they are using flavors that would have been senselessly banned under this proposal.
Greg, pardon me, because I'm not familiar with that specific study, but 80,000 jobs sounds like a lot of jobs. Are we talking about just shops that are exclusively vape shops? Are we talking about the corner bodega that also sells flavored e-cigs? Are e-cigarettes manufactured in the United States or are they manufactured abroad? Give me some more details on that, please.
So that economic impact study was looking at vape shops, vape manufacturers, distributors, people who specialize in vaping products and need them to be around to stay in business. So they're not including corner bodegas. The actual devices, like most technology products, are manufactured in China, but there is a large e-liquid manufacturing industry here in America with entrepreneurs, with sound clean rooms and actual businesses and real employees that are reliant upon flavored vaping products to stay in business.
Greg, we had you on not too long ago when there was the protest outside the White House about the banning of some of these flavored vaping products. And I wanted to ask you, at the end of the day, before there was the concern over, what the CDC is looking into and the people who've become ill from all kinds of issues that are perhaps not related to this product, before all of that, the FDA was looking at banning flavored vaping products. That's still in play, though, even though the president slowed it down. What case can you make that this is, I don't know how to phrase it, but healthy or something good, that you'd want your kids doing this?
Well, no, we do not want youth or non-smokers using this product. And we've been arguing from the start that there are regulations that could have been put in place to reduce youth access, but not completely eliminate the ability of adults to switch away from deadly combustible cigarettes. And our mission is to make the American public, particularly smokers and their loved ones, aware that Royal College of Physicians, Public Health England, Cancer Research UK have all stated and estimated that vaping's at least 95% less hazardous than smoking. And even here in the US, both the FDA and the American Cancer Society have stated that if a smoker can make the complete switch to vaping, that is a great benefit to their health.
Okay, so hang on, Greg. This is AJ right here. So it's okay if adults make the switch and kill themselves. I guess that's less bad than if young kids vape and kill themselves. Is that the way you interpret that?
Sir, what is killing people? Is it illicit THC cartridges filled and sold by drug dealers?
I don't know. You tell me, Greg. You're the
vaping
spokesman. You think vaping is okay. What's wrong with you, Greg? I mean, why do you think that's okay?
The CDC has come out and stated that they are clearly focusing on illicit THC products sold and filled by drug dealers, not the store-bought nicotine vaping products. There's a reason why. The FDA came out in September with a very explicit warning about not vaping THC products until the product supply is safe.
So let me ask you this, Greg. Let me ask you
please.
this. Which is okay or less bad? 80,000 jobs potentially lost if we stopped selling vaping products, or another few hundred young kids hospitalized and maybe a couple dozen of them killed?
Banning flavored nicotine vaping products will do nothing to stop teenagers from buying illicit THC cartridges off the street from drug dealers, period. That is what is making people sick, not store-bought nicotine vaping products. We need to do more to prevent and make youth access much, much harder. But that does not require complete prohibition, shutting down an American industry, and potentially either sending ex-smokers to the black market or back to cigarettes, which we know are killing about 1,300 people every day in this country. We need to have rational policy, not just prohibition, which we know has failed miserably with marijuana and alcohol in this country.
Greg Conley is president of the American Vaping Association. Thank you for joining us here. I know that was a bit tough.
Oh, thank you. Always glad to come on.
Coming up, change at the top. T-Mobile CEO John Legere, however you want to take it, you common spelling, announces plans to step down next year, what it means for the future of the carrier ahead. Let's take a look at some of today's winners on Wall Street.
Welcome back to On the Move. I'm Jared Blickery. We still got the Dow hitting record highs here and two more friends joining the party, S&P 500 and NASDAQ Composite. So let's take a look at how we've developed over the last hour since our last visit to the Wi-Fi Interactive. Just barely a little bit of green here, but it is enough for a record high because we closed right at the highs, the session highs on Friday. It was an amazing run in the last, say, 30 minutes of price action there. Russell 2000 still underwater here, still underperforming, not probably going to catch up until we get a significant surge in bond yields. But speaking of bond yields, those are still depressed here. Those are down 3 basis points, and we went over all the leaders and all the pairs trades and rotation that happens when this occurs, but we didn't touch on gold, and gold futures are up, capitalizing on this move lower in bond yields. And if we take a look at the 3-month price action here, we can see we're just getting a little bit of a bounce here, but not much. It is at the bottom of a trend channel that we've been looking at, but we need to see a meaningful rise higher here to get those gold bears out of the way. We're going to take a check out at the NASDAQ 100 heat map. We can see NVIDIA, AMD, those are at the top, up 3.7, about 3% respectively. Chip stocks doing well today, as they generally do under just about any bond market conditions. Also seeing Netflix up about 3%. To the bottom, we have Mercado Libre, one of the top performers earlier in the year. It's down another 3%, along with Mylan and Gilead. And then we have the cannabis stocks here. We're going to take a look at what's happened since the beginning of last week. Had a bunch of earnings in Canada. We can see CGC, Canopy Growth, that's down 32%. Aurora's down 38%. Tilray down 15%. Crona's 28%. Only Truly is just barely in the green today. And on that note, we're going to be back in a minute.
Our next guest says a key driver of strength in equity markets is semiconductors, and that as go semi, so goes the broader market. Joining us now is Dan Russo, Chief Market Strategist for Chaikin Analytics. So, Dan, this is sort of a traditional view, right, that semiconductors tend to lead, and we've seen some strength there recently. We've seen some strong earnings reports. Does that mean you're bullish as a result?
Bullish on the market, and continue to be bullish on semiconductors. And a lot of that is driven by our model, our 20-factor model that looks at over 4,000 U.S. listed equities. If I drill down on the semiconductors, SMH, the ETF that we use to track the semiconductors, has a very bullish rating within our model. And if I drill down on the individual holdings, I can see that there's roughly 12 stocks that are rated bullish or very bullish based on our model, and only 3 that are bearish. So semiconductors, number one, have momentum behind them. And number two, I think there's scope for that momentum to stay in place because of our model and what we're seeing within the fund itself at the individual holding level.
When you talk about the model, you're talking about the Chaikin money flow indicator, right?
No, actually, the Chaikin 20-factor model that we use to rate over 4,000 U.S. listed equities. Part of my process when I look at individual stocks or ETFs is to incorporate analysis using Chaikin money flow, which is a proxy for accumulation and distribution within the market. But with the model itself is 20 factors across financials, earnings, technicals, and sentiment that we use to drill down on individual stocks.
But the money flow indicator tells you what? Because you've got some stocks that you're picking, for instance, Intel, that you think, I think the indicator shows you that it's undervalued right now, that perhaps it's a good time to buy in.
Well, the model is bullish on Intel. the stock itself. And then when I look at how Intel is performing relative to the market, it's been outperforming the market with the semiconductor space, which we would expect, right? Intel's pretty much a bellwether within the semiconductor space. But when I look at the Chaikin Money Flow Indicator, I can see that with Intel on the verge of breaking to new all-time highs, it's still under accumulation. So a lot of times people see stocks that are trading near all-time highs, they want to use that as an opportunity to maybe take some profits. But I don't think we're seeing that with Intel right now. Chaikin Money Flow is telling us that the stock is still under accumulation. So to me, that increases the odds that we're going to see a continuation higher and a break to new highs for Intel.
So in addition to Intel, what other semi names here have more room to run, and which ones are you sort of like stepping back away from?
Well, Lam Research still looks good. Applied Materials reported last week, beat estimates, raised guidance. Gapped higher, was up about 9% on Friday. That still continues to look good within our model. Some of the names that I would avoid, Xilinx comes to mind. It doesn't screen that well within our model, right? You still have to be a stock picker. So as much as I like semiconductors and think that as goes semis, so go to the market, you still want to drill down to the individual stock level. You know, our mantra is own leading stocks and leading areas of the market and buy them right. So semiconductors are a leading area of the market. The stocks that are outperforming within that space are names like Intel, Lam Research, Applied Materials, Qorvo.
How about NXPI, Lumentum, NVIDIA, some of the kind of specialty chips? I'm long them, that's why I'm asking.
You're long them.
Yeah.
You know, so, I mean, I drill down them on a stock-by-stock basis, starting to see some activity within some of those names. But for me, I just drill down, try to take the emotion out of it as much as I possibly can. Focus on the model. The model's quantitative in nature. So it allows me to take that emotion out and really take an unbiased view.
Yeah, I actually recently sold Qorvo, which was up like 24%. It was crazy on one day. Applied Materials, I probably sold it too soon. And Intel, you talk about Intel, I have a target of $60, and I feel like, I don't know, listening to you, maybe I should hold it a little longer.
I think, listen, I think there's scope for a breakout in Intel, just based on what I'm looking at, based on relative strength, based on the accumulation that we've seen. So yeah, I can't argue with that. I'm not a big price target person.
Right.
I adhere to the trend following discipline, and a trend in motion tends to stay in motion. So I feel like having price targets could potentially limit your upside. I'd rather ride the trend for as long as possible until I see evidence that the trend is changing.
How effective is the model? How's it done for you guys?
The model is effective. Our bullish and very bullish stocks tend to outperform the market over a 3 to 6 month time frame, while our bearish and very bearish stocks tend to underperform the market over a 3 to 6 month time frame. So if you're trying to split up over 4,000 stocks and really whittle down the universe, it's beneficial to be focused on the bullish and very bullish stocks within the model. Citigroup is. A lot of the big banks, and it's interesting. We're talking about rates have been starting to move higher of late. Right, bottomed out at about 1.5% on the 10-year yield, kind of trading around 1.8% now. But as rates have gone higher, it's been interesting because financials have been bullish within our model for a while, but they couldn't really get going from a relative performance perspective because they were being held in check by declining rates, both in the U.S. and globally. Now, as we've started to see rates back up, the bullish fundamentals within financials are starting to be appreciated by investors. So names like Citi and Bank of America are really screening well within our model right now.
Dan, really quickly, semis, great indicator, but also I want to get your thoughts on the small caps and transport, seeing a little bit of underperformance. Classic Dow theory, so goes the transport, so goes the Dow. Is that the case, in your opinion?
Yes, to a degree. I'm more focused on small caps right now. I think small caps, the IWM, the Russell 2000 ETF, I think if that could break above 160, that would be a bullish breath confirmation for the strength that we've seen here in the market. But small caps have been underperforming. It's no surprise. We've been lukewarm to bearish on the small caps. You're starting to see a little bit of an increase in their relative performance, but we're not there yet. What I would love to see is for the IWM to break through 160 and actually start to outperform the market to give us the next leg of the bull higher.
Dan, thanks. Dan Russo, Chaikin Analytics. Appreciate it.
The highly anticipated Google Stadia launches tomorrow. The company's cloud gaming service is going to offer 22 games to start. That's more than double the number they originally planned. Despite that, Google is not without critics. Joining us with more is Dan Halley. Dan, so what are people finding fault with surrounding the launch? And is it true they're scrambling to add more games? Dan Halley's walking in as we speak. I thought Dan was going to be up on the ninth floor. Have a seat, Dan.
Oh,
Join
look,
us here at the
he's
table.
got show and tell.
Dan looks a little
That's why he
shocked.
had to be here.
Yes. I have toys. I have toys. So
I like toys.
This is Google Stadia. I could pass this around. Basically, what this is the streaming platform that allows you to stream games to any device that you own, as long as it's a Google device. So, for instance, this is a Google Pixel phone. You can use it on the Chromebooks. Let's see, Google's trying to communicate with me now. But basically, you could just jump in and play whatever you want from this device.
It's got to be on
there.
Not an Apple device.
Fits right in the hand nicely.
I know, it's a good controller. That's the one problem, is there's not a lot of support for outside third-party devices. Now, I have over here, you can run it as well on your MacBook if you have something like that. And it's basically, the gist of it is, Google is the first mover in this space to be publicly available as a subscription service, this kind of game streaming revolution that's going to come. And it's going to be similar to what we saw with Netflix almost for video and shows. What this is going to do, though, is allow you to purchase games. So it's not a true Netflix. It's a way for you to buy your games and then not have to pay for an expensive console or an expensive PC. And here, I could just play Mortal Kombat 11 on my computer here at work and then get away with it because this is my job and it makes no sense. And then you can also do it on the phone if you want with the controller. There's a couple of problems with this, though. Now, the technology works great. You could stream it. I haven't had any issues with streaming, and we're on the company Wi-Fi, which in the office can be really finicky at times. At home, it's great. I was playing on my big screen TV with just a Chromecast. So that you're able to do this across multiple devices easily is really, really cool. But I think the issues are that the experience isn't fully fleshed out yet. Now, when Google originally discussed it, they said that you could go on YouTube and there are people that would be streaming games and hey, you can just jump right in by clicking into the YouTube app. That's not available yet. This is supposed to be wireless, this whole experience here, but you can see I have a wire. That's not here yet. You're supposed to be able to do it wirelessly with your computer. That's not here yet. You're supposed to be able to do it across multiple devices that aren't Google devices. Not here.
Do you like it? At the end of the day, do you like it?
At the end of the day, I would not buy this right now. I think for most gamers, you're going to be disappointed out of the gate. There's 22 games. That's cool. Google just dumped basically on Sunday night 11 more games. They were originally going to launch with 12. Now we have 22. A lot of good games. There's Red Dead Redemption 2, which is out now for PC. That's big. You have Assassin's Creed Odyssey, Destiny, Mortal Kombat. So these are big name titles. But usually when you launch a console like this, you want something of your own, some kind of exclusive that's going to really get gamers to go out and sign up for this. And that's not there.
But I feel like this is the future of gaming, right? Because when we take a look at Microsoft, the gaming segment continues to drag the company down, and Xbox is continuing to do so badly.
That's Mortal Kombat. I was just going to show you. We have Mortal Kombat playing right here. It's streaming right now, and it's it's impressive that it's able to do this. And as far as Microsoft goes, so they're right now towards the end of the life cycle for their system. So that's really why they're not getting as many sales. Not as many people are buying those. But this is the problem for Google, is that Microsoft has its next console coming out this year, the 2020. Same thing with Sony. And both Sony and Microsoft are working on their own streaming services. Microsoft, by the way, has Project xCloud, which is going to be their streaming service. That's in beta right now, and it's doing very well. They also have a service called Game Pass, which gives you unlimited access to 100+ games for one flat fee. So that, when they combine it with xCloud, is going to be Netflix for games. And that's going to take, I think, Google Stadia just and blow it away.
And keeping track of all of this is a game unto itself, Dan Halley.
It really is,
Thank you for, which explains why you're so good at it. Thanks, Dan Halley. Coming up, did Colin Kaepernick blow his chance at an NFL comeback? What a last-minute change to his tryout means for his future in the league. Plus, take a look at some of today's trending tickers on Yahoo Finance. We've got Karuna Therapeutics more than tripling today. I'll explain why in a moment.
It's 12:32 in New York City. We're 3 hours into the trading day, and stocks a little bit of a mixed picture here. The Dow has gone positive. S&P 500 was positive. It's fallen back a little bit. It's down almost 1.5 points. And Nasdaq's also trading down. Gold right now trading a little bit higher, but still about $27 off of $1,500 an ounce. Reigning in electric, Ford's new Mustang impresses everybody from consumers to even Elon Musk. Controversial weekend, the fallout after Colin Kaepernick's NFL tryout does not go as planned. And Gen Z wish list, the top products younger consumers hope they get this holiday season. Welcome to On the Move. I'm Adam Shapiro.
And I'm Julie Hyman. Thanks for sticking with us. The race to zero. Charles Schwab, TD Ameritrade, Fidelity, amongst just some of the companies to offer commission-free trading now. But how are these companies going to make money by doing this? Martin Boyd is FIS President of Capital Market Solutions. He joins us now. Thank you for being here. FIS is effectively sort of back office for a lot of these operations we're talking about, right? At these,
that's correct.
At these companies. So when you look at these changes that they're making, what do you think the strategy is? Is it just to push through more volume and push people to other products as well?
Well, I mean, certainly when you think about the stresses that the industry has been under, with fee pressure driven not only by offering, I think product at a low cost, but also I think with institutional investors sort of picking up their eyes and understanding where the fees and expenses are going, I think the industry has undergone and is undergoing a transformation. And a lot of that is a transition towards lower cost funds, so passive funds. And a lot of it is also just by providing more transparency, people take more time and care about the assets they've got and figure out where they want to put them.
But what's the outlook for, say, a TD Ameritrade or even a Fidelity? I mean, I don't think they're going anywhere anytime soon. Are they going to make money?
Well, I mean, they've been making money because the assets under management have continued to grow. And those assets under management have clearly grown because the market's grown, but also there has been a net inflow of funds. Now, admittedly, a lot of that is going towards more passive investments, which are lower cost and lower fee, but there's still growth in actively managed funds. And I think what you're seeing is a little bit of a rebalancing in the market where, institutional managers are looking to have a mix of those, but have the sophistication to be able to spot great returns from actively managed. Whereas more retail investors want a mix of those and want to be able to trade them more actively through portals and be able to understand what the cost of those are.
Yeah, so Schwab is one of the companies that I've been looking at, trying to figure out if I want to buy it. And the day the announcement was made, free trading for all, right? I thought that is the craziest thing I've ever heard. And as it turns out, only 93% of their revenues come from fees totally unrelated to commissions. So then what I figured out, and I think the market did actually before I could figure it out, which is why the stock rallied so quickly from the initial decline, was that Charles Schwab, as you just pointed out, Martin, is bringing in $20 billion per month of new assets. Well, the interest, even at 2.5% on $20 billion, is over the course of the year $400 million. And guess what? That's what they were making on commissions. So 1 month's worth of inflows into Schwab Asset Management makes up for over the course of the year, makes up for all the lost commissions at Schwab, the brokerage firm.
Well, and I think that's right. I think also what you will see over time is that there are sophisticated investments on offer, and more frequently those are becoming and being opened up to more retail-orientated investors. So alternative funds, private equity, and things like that. Now, admittedly, regulation has to catch up and ensure that those are, of a sound nature. But I think from a business standpoint, you can see that those which yield much higher returns also, though, generate a fee associated with them. And so you'll see a good mix, I think, from the larger asset managers. You'll see that mix of investment types and styles.
The other part of all of this is that costs have been going down for some of these companies. And that is also partially where you come in, because you help with automation and AI and machine learning. How much more efficiency do these brokers have to sort of wring out of back office?
Well, as you can imagine, that between someone executing an investment or wanting to make an investment through to the middle office, the execution of the trade, the back office, the custodian, there's a substantial, I think, opportunity from front to back to identify ways to save and to improve processing efficiency. And I think when larger institutions make the investment into that technology, they yield a much better return. We produce an annual survey called the Readiness Report, and we survey the top 2,000 financial institutions, and a good proportion of them on the buy side as asset managers. And what was startling about that is that those institutions at the top end of the range in terms of their ability to execute on machine learning and AI were actually growing their revenues at twice the rate.
Interesting.
So that's an amazing thought, that the more you invest in this technology, the greater your ability to drive an outcome.
Right. And also doesn't hurt your sales pitch.
Thank you.
Martin, we got to leave it there. Martin Boyd, FIS President of Capital Market Solutions. Thanks for coming in.
Thank you very much.
All right, coming up, to infinity and beyond, we're going to talk to one of the astronauts set to take the inaugural flight aboard Richard Branson's Virgin Galactic spaceship. Plus, take a look at some of today's most actively traded stocks by volume.
Got some trending tickers for you from yahoofinance.com. Karuna Therapeutics, I mentioned this one earlier. Now, this is a company whose stock, as you can see, up 265% today, so catapulting it to above $1 billion in market cap. We're also seeing huge surge in trading volume today. This is a biopharmaceutical company that came out with the phase 2 trial of its schizophrenia treatment. The results of that met the primary endpoint. This stock just went public. This company just went public back in June at $16 a share. You can see it wasn't doing much until today. Now it's at $64 a share. Now, some of the other stocks that we're watching today include Yandex, which is Russia's largest technology company. You're looking at a year-to-date chart here, and the surge that we're seeing in today's session, that's after it did some restructuring. It looks like at the bequest of the Russian government, it's created a public interest foundation to help oversee it. Apparently, there was some concern on the part of the Russian government about foreign ownership in the company. So we have been watching that company in today's session. Then I was going to talk about AMD, if I can find it on the list here, but I'm not seeing it. So we'll skip it for now. But AMD shares are trading higher as well. If you're following today's trending tickers, make sure you're watching the ticker. It's right here at 2 p.m. on Yahoo Finance.
Our next guest plans to become among the first South Asian space tourists to break out of the stratosphere. Namira Salim plans that voyage next year aboard Richard Branson's Virgin Galactic spaceship. She joins us now to talk about this and her recent space suit fitting. Thank you for being here on The Move.
Thank you.
So next year, there's going to be quite a bit with Virgin Galactic. We've interviewed Mr. Branson, Sir Richard Branson. That inaugural flight's going to take place within the next 6 months. What was it like getting fitted for the spacesuit? Because you're going to be on one of those flights soon after he goes.
It was an amazing experience. We spent 2 days with Under Armour, who are the partners, and they are the ones who made the spacesuit. So it was incredible because they gave us a whole fitness plan, like a diet plan, and the spacesuit just needs a little bit of tweaks. We have some official photos which will be coming out, and it was just amazing, just the excitement building up and the whole plan about, how it's going to happen at the spaceport. We had a lot of discussions about that.
So what kind of training or what do you have to do in preparation? What have you found the most challenging about that preparation?
Actually, these flights are not ground up. They're very easy on the body. So the spaceship would go up to 50,000 feet and detach from the mothership and go to space from there. So you just have to be reasonably fit. It's not very hard on the body or requires a lot of fitness. But yes, I did train for a suborbital spaceflight training in 2007 in the world's most high-performance centrifuge. And we experienced 6 Gs, which are much more than what we will experience in the flight. So the flight will be maybe 3-4 Gs. It's not that bad. Fighter pilots normally experience up to 9 Gs.
Wow. When we talk about this, and we're looking at the video of the spacecraft now, it doesn't actually go into orbit around the Earth. It's suborbital. So there's no worry about re-entry or any of those issues.
Well, there is an exit and entry from, the atmosphere because we do go up in space. So we do float in zero gravity for 4 or 5 minutes, and we are in outer space, and then we do re-enter. So the re-entry mechanism is very, very nice in the spaceship. It's very innovative. It comes back like a shuttlecock in a very light fashion back into the atmosphere.
Does it have to have, forgive me for getting technical, I'm a bit of a geek here, does it have to have, though, the kind of tiles or protective underbody, like a heat shield, if it's re-entering?
It has all that it needs. And, there was only one thing that was changed when we had a little problem in 2014. Right. There was a mechanism that has now been turned into an autopilot thing, which is about sort of at the time of the rocket motor ignition, there's also a feathering mechanism, which is a braking system. So that has been fixed. And that is what you need to apply when you go to space, float there, come back. So it's really, I think it's just a gentle glide back. It's nothing really much dangerous to worry about.
So I know that you work very closely, obviously, with Virgin Galactic, but the space race is so hot, right? There's a lot of companies and people that want to send people up there. Do you think Virgin Galactic is really poised to start taking tourists up there within the near future? And do you think it's truly safe enough at this point?
It is, because we've had our issues during one of our test flights back in 2014, and that problem has been fixed. And we've had a test flight after that. We've had a test passenger go to space. And at the moment, yes, there has been, competition. There's not really a race because everyone wants to do this safely. But Virgin is ahead of the game, and, they are going to start the operations next year.
That spacecraft has actually gone twice into suborbit.
Two test flights have taken place, and one test passenger was flown in the last flight. So one person has already gone up.
Yeah. How are you getting to do that? How did you get involved with all?
You were selected by the government of Pakistan many years ago, weren't you, to become an astronaut?
No. I applied to Virgin Galactic very early in the game. It was a childhood dream, and I just stumbled upon the news. And Richard actually happened to be in Dubai when I joined. 2 months later, he was coming there with the inaugural flight of Virgin Atlantic, and he decided to launch Virgin Galactic with me because in 2006, I was the only one from there who signed up. I was like an example of consumer confidence. It led to the main stakeholder investing $380 million in the project. So I was involved in a very early stage. And because of my launch with him, the government and the country found out, and then they invited me and they launched me as the first Pakistani astronaut.
Are you nervous?
No. It's a dream come true.
Very cool. Namira Salim, thank you so much for being here.
Thank you.
And Good luck with
Safe
everything.
travels.
Yeah, safe travels. Thank you. Well, Piper Jaffray has released a new survey about what Gen Zers want this holiday season. Apple, along with Nike and Louis Vuitton, made the top of the list for consumer brands. We're joined now by Erin Murphy. She's Piper Jaffray Managing Director. She's joining us over the phone from Houston, Texas, to talk more about this. And we're also joined by Yahoo Finance's Reggie Wade, who covers a lot of these consumer brands, including Nike for us. Erin, it's always good to talk to you about these surveys. I know they're closely watched by the street. I think the interesting headline, before we get to the specific brands, is what people want. The Gen Zers want money, clothing, and car. Money is it's so interesting to me that money is in the top spot. Is it consistently in the top spot?
Thanks for having me on again. It has actually been either the number one or number two if you went back to our holiday teen survey going back over the last several years. So it's either clothing or money, and it kind of flips in that top spot. But it's actually held a pretty stable share. So I guess that's ultimately what teens want.
So let's, Erin, if we can talk about some of the brands, though. This blew me away when I looked at the list of brands that were popular among Gen Z. Louis Vuitton. That was in the top 3, right? Why Louis Vuitton?
Yeah. It's a great question. So I'd say a couple of things just to kind of level set the conversation. So the survey that we've done with teens, it's 2,100 upper income teens. So just one thing to kind of note about the results, the average household income of the teens responding to this is just over $100K. So it's a little bit, it's like almost 2x that of the median in the United States. So you're definitely getting kind of a forward view of an upper income consumer. I'd say in terms of why that brand has become so hot of late, I do think that they have been investing heavily behind millennials and Gen Z in terms of how they're going to market, in terms of, their digital and their social strategies. Logo as a theme has really been back in vogue over the last, I'd say, 12 to 18 months. And I think Louis Vuitton has been, kind of tapping into their heritage and really exploiting that as well. So you've seen that. But it's been a brand that we've seen, even in our standard teen survey, really start to accelerate.
Aaron, Reggie Wade here. One thing that I found really interesting about the survey is that teams are putting more of a premium on experiences like vacations.
Yes.
Do you expect to see that trend to grow?
We do. So it's interesting because, again, this whole survey is unaided. So we're going through line by line to see what they're actually wishing for. And the number of teams that were asking for a vacation, a trip, traveling with their family, it's now, if you looked at that in collaboration with the teams that are saying they want to go to a concert or a sporting event, that would represent the number 9 preferred wish on their wish list. And that has been moving higher. It wasn't even in the top 10 going back a year. So we do think that that's an area that you'll start to see this demographic spend more on over time.
Aaron, we also see that Adidas is number 5 among teens in the top brand. Do you think that's the Yeezy line that's pushing that, or do you think it's Adidas offering as a whole in both apparel and footwear?
Yeah, so it's a good question. We actually combined the results for both Adi as well as Yeezy. In this most recent survey, it was mostly the Adidas brand that was being cited,
Aaron,
more so than Yeezy.
Aaron, just quickly, of the companies that you cover that are mentioned in this study, what findings surprised you the most? Either something that they liked that you didn't expect or something that they did not like and did not want that you didn't expect?
Yeah, so I'd say a couple of things. What surprised me the most was probably the first observation, Louis Vuitton being the number 3. That obviously has been a really strong response and probably greater than we had anticipated. In terms of areas of the wallet that just aren't prioritized during the holiday season, the 2 areas that surprised me were food. You had very few mentions of food, whereas like teens generally, their single largest wallet share component, if you ask them during our standard kind of survey process, it is food. It is going out, whether it's Starbucks or Chick-fil-A, whereas that's not mentioned on the wish list for the holiday season. The other area that surprised me was cosmetics. You don't really see a lot of teens, even just slicing for the female cohort, wishing for cosmetics. So the wish list probably goes up a little bit more to maybe things that they wouldn't naturally buy for themselves. So those are the 2 areas that I thought was kind of surprising we didn't really see in the wish list this season.
Very interesting, especially considering Cody's investment in Kylie Jenner's brand. Thank you so much, Aaron Murphy. Hope to talk to you again soon. Reggie Wade, thanks for stepping in as well.
Thank you.
Coming up, did Cap blow his chance? Why some say the quarterback is no closer to an NFL job following this weekend's workout. Plus, take a look at some of today's losers on Wall Street. Let's take a look at the top trending stories on Yahoo Finance right now. Ford unveiling a new version of its iconic Mustang instead of a two-door sports car. The new vehicle is an all-electric SUV. This is a time when interest in performance cars is waning. SUV sales obviously on the rise. T-Mobile CEO John Legere will step down from his role with the company. Legere was appointed CEO in 2012. He will remain on as a board member. Current president and COO Mike Sievert will take over the helm in May. Cosmetic company Coty will spend $600 million for a majority stake in Kylie Jenner's makeup and skincare business. Coty will acquire 51% ownership of the company, and a deal is expected to close next year. We'll be right back. Buzzer beat around, 3 stories, 1 minute each. We start with this. Did Colin Kaepernick blow his chance? The controversial quarterback's NFL tryout did not go as planned, as he and his team changed the location just hours before it was supposed to start. Uh-oh.
He's blown so many chances, starting off with the big one, which is insulting America in the cathedral of American sport.
Ooh, come on. That was fiery.
That's what this whole thing is all about. And it's why 30 teams haven't signed him. He's been shut out. Look, Nike said, hey, we admire what you did. Okay, fine. Nike put him on a big ad campaign. They paid him millions of dollars. You know what? At this point, Colin, walk away.
He did not insult America, Adam Johnson.
Sure he did.
Of course he didn't.
Sure he did.
Did Martin Luther King insult America? Come on, protesting against something that happens in America by kneeling during the anthem is not insulting
Colin Kaepernick
America.
throws a football. Colin, throw the football. If you're a singer, sing your songs. If you're an actor, go act.
The reason he took the knee, though, was out of respect because a teammate had been in the armed forces.
You have been talking to spin masters. Get rid of the spin, Adam.
This is the man who said what's wrong with you.
A new report from CNBC says some Fitbit users are ditching the wearable after its sale to the tech giant Google because they simply don't trust Google.
I mean, at this point, doesn't Google have everything already? Like all of our information, even our health records? So at this point, I think this is silly. It's impossible to disconnect from these big tech companies at this point, honestly, in my opinion. Facebook, Google, Amazon, whatever it may be. If you have a Google Home device,
So
if
we
you
should
have
just give up?
I have personally given up. I don't know if everyone else wants to take that position, but it's hard out there to really distance yourself from all of this.
I do not have an Alexa. I have no interest in having Alexa. I think having Alexa or any other related device listening to me in my apartment is crazy.
Do you have a smartwatch?
I do not have a smartwatch, and I frequently turn off my iPhone. And by the way, you should always have your PC down because they can actually go through the camera and track you that way. It's insane.
This last one's going to be short. The battle over the thermostat is solved. Men are correct. It should be cooler than hotter.
Okay, first of all, this is one of the most divisive topics in our office, as well as at home.
You like it warmer?
Yeah, I'm the one who likes it cooler.
Really? Yeah. I mean, I just think it's always cold everywhere we are. In our office, it's so cold. It is hot in the morning when you guys get in earlier, but it's so
In the
cold
summer, it's
here.
really hot because they don't turn the air conditioning on until 8 a.m.
This dovetails with my other quest, which is to get men into skirts.
Which is
If
what?
If we all wore the same thing, this would not be a problem.
Are you We're out of time, by the way.
Maybe.
We have 20 seconds to say Julie's
All right,
wrong.
Adam Johnson, thank you very much. Heidi Chung, thank you very much. On this little change day for markets, thanks for bringing some fireworks here, guys.
Wi-Fi PM is going to take you through the next hour of trading without any spin.
It is 1 p.m. in New York City, and the major indices are muted to start the week as investors continue to wait substantive updates to the ever-elusive Phase 1 trade deal with China. On tap for today, President Trump and Fed Chair Jay Powell sitting down in what the president called a, quote, good and cordial meeting. So could it be the olive branch that cools relations with the president's favorite domestic punching bag? Plus, with retail sales rebounding last month, a new survey reveals what teens actually want this holiday season, why Apple could be a big winner yet again, and the streaming wars staying hot after Disney's debut. Workaholic star and comedian Adam Devine will join us to chat his new Dr. Seuss Netflix project, challenging the idea that Netflix can't win kids too. All that and more. This is Wi-Fi PM. Good afternoon and happy Monday. I'm Zach Guzman, and join me on Wi-Fi PM today is Yahoo Finance's Brian Chung, along with retail expert Aaron Sykes in studio with us along for the ride. Aaron, good to see you again.
You too.
Happy Monday, guys. We're checking the market action we're seeing right now, and as I said, a little bit of a muted start to the week here. The Dow up just 23 points, and the NASDAQ, as you can see in the red there, off by about 5. But today, investors are digesting a new surprise White House meeting with Jay Powell and President Trump. The president meeting with the Fed chair to discuss a variety of economic issues, including growth, employment trends, and inflation, according to a statement from the central bank. Treasury Secretary Steven Mnuchin was also present, and following the meeting, Trump tweeted an optimistic recount of that meeting, writing, quote, "Just finished a very good, cordial meeting at the White House with Jay Powell of the Federal Reserve. Everything was discussed, including interest rates, negative interest, low inflation, easing dollar strength, its effect on manufacturing, trade with China, EU, others, etc." Brian, that's a lot of issues to be discussing with the Fed chair there, but we've seen him take repeated shots at Powell. So interesting to see that they could have a cordial meeting together.
Yeah, and for what it's worth, this isn't the first time that this meeting's happened. Trump actually met with Powell also similarly on with seemingly no notice in February of this year, right before the president had his State of the Union address. Basically, the readout from the Federal Reserve was exactly the same in the February meeting and also the meeting today, just saying that the Fed chairman was just reiterating that he's focused on the Fed's dual mandate. It was actually the president's tweet that shed a little bit more light on what they actually talked about, negative interest rates being the most interesting bit of it. If you'll recall, President Trump had that speech at the Economic Club in New York last week where he said, I would really like the Federal Reserve to have negative interest rates. He said, give me that money. I want free money on loans that would pay negative interest rates. The president has applied a lot of pressure on the Federal Reserve, to be fair, over this year. But it actually has lessened. The amount of tweets that he sends about the Federal Reserve have actually lessened since the Fed cut by 25 basis points in 3 consecutive meetings. Yep. That's for a cumulative 75 basis points of cuts. And for what it's worth, it's not even unprecedented for the Fed chair to meet with the president. Actually, Janet Yellen, I was looking up at the archives, met with President Obama once in 2014, once in 2016, also kind of on short notice to talk about the U.S. economy. So it's not unusual, but I think what is unusual is coming during this time that the president's been so harshly critical of the Federal Reserve.
And that certainly is unusual when we talk about President Trump and Jay Powell and the way that they've gone back and forth. I mean, I'm not sure if a Fed chair has ever been asked so many times about what his thoughts are on how the president's repeated attacks might influence the thinking around interest rates and specifically what they do after the president continues to tweet about them.
Yeah, well, I mean, the president is, he tweets about a lot of things, right? So it's not just Jay Powell that gets a lot of criticism from Donald Trump. I think the president has basically become more preoccupied, especially in the past few months with the impeachment proceedings and what's going on with that than the Federal Reserve, especially because the Federal Reserve actually did cut rates a few times this year. But you mentioned the point, Zach, that the president's criticism is unprecedented. Yes, that's definitely the case. We didn't have that type of criticism from President Obama when Yellen was part of his second term, or with Bernanke in the first half of his term then. Although, to be fair, also Twitter wasn't even a thing. So it's not like if Obama had any beef, he would have taken that to Twitter. That wasn't necessarily part of his communication repertoire at the point in time.
Yeah, Twitter might argue they were a thing back then, but for sure. I mean, when we're talking about this, it's interesting because trade has to focus in on both those talks, but then also what investors, what basically everything hinges on right now. When we keep talking about tariffs and what that might mean for retail, we'll get into that later, but also what it might mean for a potential U.S.-China trade deal as well. That could face some new hurdles because Beijing is reportedly pessimistic over a future deal after Chinese officials were troubled by Trump's comment that there was no agreement on phasing out existing tariffs, according to CNBC. China said earlier this month that the two sides had reached an agreement on the tariff rollback. So question marks continuing there.
I'm actually pretty surprised by this. I thought that it would be done by Christmas.
Yeah.
And there's still a chance that that might happen. But I think that the way that things are going right now in retail, that we had an up quarter, it is not as necessary to be done immediately as it might have felt back in Q2 into Q3. So if it comes into 2020, that might be actually an extended boost for the booming economy that we have. So maybe it's actually a bigger win if we wait a bit. That said, it does feel like Groundhog's Day, where we're like having the same conversation again.
Yeah, and especially the fact that the president suspended tariffs before because he was worried about the holiday season. We're quickly approaching December 15th, and we've got another round of tariffs to worry about here. But even more troubling, if you have sides saying that they agreed to something, or at least thought they agreed to something, and then see that roll back.
Yeah, well, I mean, the Chinese saying that they're pessimistic, this, again, as you mentioned, Aaron, this is just Groundhog Day. There really isn't anything qualitatively that we can point to that tells us we're any closer to a phase one trade deal than we were 3 weeks ago or maybe 4 weeks ago.
Yeah.
The original phase one deal did not include more substantial rollbacks on tariffs. Then China went back to the negotiating table, said we would like more tariffs to be rolled back. Then that became part of the phase one deal. But since that point in time, we haven't heard any developments substantively about whether or not the IP issues or the forced technology transfers have gotten really resolved, which is the main sticking point for why we're in this negotiation.
Yeah, that might be more resolved in a phase two, but interesting wrinkle, just one more to tell you about when we talk about phase one. New update today, the Trump administration issuing a new 90-day extension allowing U.S. companies to continue doing business with China's tech giant Huawei. That's one of those sticking points, too, that we saw before we got to this point where we're thinking about a phase one deal, was what exactly the administration would be saying about national security threats and extending the ability for U.S. companies to work with Huawei. That could potentially be one of the signs that you might point to and say, okay, maybe there is some reason for optimism back in this direction, extending Huawei's license here a little bit more.
Well, I think there's not too much to read from this because it wouldn't make any sense for the United States to allow the license extension to expire while they're still negotiating the phase one trade deal. It would be very discordant. It would anger the Chinese, definitely. And I bet that was part of the informal discussion that we need to keep that extension going while we still have these negotiations. But it does speak to the idea that at first people were like, oh, well, the Huawei thing is separate from the trade negotiations. Well, no, it's very much looped into the same thing.
It's absolutely, the trade negotiations really do center on security and privacy, which I think is a good thing because we have gotten so technologically advanced so quickly that we really haven't gut checked ourselves and thought about, okay, what are the implications? And you look at Fitbit and Google. And at first people are like, oh, great, okay, I'm going to be able to track myself better. No, actually, Google is going to be collecting information about how much you sit, how often you go to the doctors, where you're spending your money. Is it at a healthy store and getting green juice, or is it at McDonald's? And then they're going to talk to insurers and then come back and then raise or lower your rates accordingly. So there's a lot more going on than meets the eye with all of these technology deals.
And that's with a U.S. tech giant, too. That's not even approaching
Exactly.
the subject of a TikTok, some of these other Chinese.
So have all of that in China's hands? It's an issue.
No, for sure. Well, we haven't gotten any substantive updates to just kind of recap there when we're talking about tariffs. So let's try and separate that out from this retail discussion we're going to have, because retail obviously is impacted or could be impacted by the changing tariff landscape. But aside from that, let's break down how consumers are bracing for the upcoming holiday season as well. I mean, Aaron, we got the Friday retail update that showed signs that the U.S. consumer is still strong. There's a rebound in overall retail sales. But of course, when we dig into that, 7 of 13 major categories dropped despite that 0.3% rebound last month. So when we look at this right now in the state of the U.S. consumer, you could point to either or, depending on whether you think the U.S. consumer will stay strong through the holiday season. What are you looking at right now?
I think the holiday season is going to be strong, and many retailers get up to 50% of their sales just in Q4 alone. So it's super important for retail. That said, we still have this dynamic shift where retailers that are doing well, Amazon, Walmart, Target, are doing incredibly well and really crushing it because they've really evolved to that true omnichannel presence. Then you look at the ones that are not doing well and they continue to flounder and flounder worse than we could have ever anticipated. So Sears and JCP and Macy's. So it's very divergent, and I think we really need to shift how we think about retail and how we measure retail, because retail is tech now and tech is retail. So they're not these singular categories like they used to be.
Now, the problem is kind of the year-over-year comparison, right, with 2018. It might look okay in 2019 because 2018 wasn't so great, but what are some trends that you're watching for in 2019 specifically with regards to, how the U.S. consumer is truly doing in this economy?
Sure. So it's how are they paying? So there's a lot of other options that we haven't had in the past in terms of ways to pay. We've had PayPal around for a while, of course, credit cards, and of course, cash. But now we have things like Libra evolving and Afterpay. And in my opinion, if we're resting too much on things like Afterpay or what QVC uses, it's very, very stressful to somebody's wallet because they're paying in incremental payments, not really thinking about it. It's the same thing as a subscription model with so many of these streaming services that people don't realize how much they're actually spending. So I think it's something to be cognizant of going forward. It's great and it's providing movement in the sector right now, and people are buying things that maybe previously they couldn't afford. But let's make sure that they're really recognizing that that's actual money they're spending.
And I suppose it's probably a good thing that consumers are still in that state of mind where they're not worried about spending money that they're spending on things that maybe they can't afford. But when we dig into what people want others to spend on them when we approach the holiday season, it's interesting because Piper Jaffray is out with a new holiday survey focused on Gen Z, aka people born between 1996 and 2010. And apparently money, clothes, and cars are at the top of the wish list, with popular brands like Apple, Nike, Louis Vuitton, Gucci, and Adidas also leading the way.
I want to be on this Christmas list.
Yeah, right?
I'm in.
Those are a sample.
Exactly.
These are Gen Zers. I suppose, I don't know how you contact Gen Zers these
Right,
days. Very
outside
hard
of the
to get them. You're
Short
not going to
Hills
be
Mall,
calling
like,
them. You're not going to be calling them. But what do you think about that? I mean, AirPods, obviously, the timing of AirPods 2 coming out right around the holiday season, perhaps not surprising that would be at the top of the wish list.
Absolutely. And, the new iPhone still has lines at the door. So I definitely see Apple being strong going into holiday. And then the luxury retailers, it tends to be like a once a year or maybe every other year purchase for something like a Louis Vuitton bag. So yes, they get a huge boost. That said, also sneakers, Nike, Under Armour. It's really a trend that's never ending. This Lululemon and all of the athleisure styling. I think that's going to get a huge bump. And we were talking before the show with men's at Lululemon. There's so much opportunity there. So hopefully they're able to capitalize on it going into holiday.
And that stock, that company been on a run for a while. So, that's a lot to sustain going into the holiday season. But that stock now up by $218 a share. Quite the year for Lululemon. Meantime, though, Hong Kong protests might be reaching a new breaking point. Police cornering hundreds of student protesters occupying Hong Kong Polytechnic University, trapping demonstrators with tear gas and rubber bullets. At least 38 people were injured in a protracted battle on the university campus yesterday, according to the city's hospital authority. This as other protests raged across the city. Brian, I know we've been constantly watching this play out over the last 24, 25 weeks here. This one's interesting because you're dealing with students cornered now in a university.
Yeah, well, it's no surprise to see that a lot of this is going on the university campuses in Hong Kong because of the fact that the Hong Kong students have been really at the forefront of the anti-government protest. 25 weeks is something I think most people headed into the beginning of these protests earlier this year would have said, we didn't see it coming to this. I mean, you see these horrible images coming out of Polytechnic University of things on fire, and luckily for right now, no one's died, at least from this weekend's developments. There have been people that have died in previous weekends, but you wonder how it isn't almost worse. But I think the concern right now is at what point will the Chinese government maybe want to step in here to a point where maybe there could be some sort of bloodshed or it could get really more violent and more dangerous. There was actually even talk from Hong Kong police forces that they would like people to stop or else they'll have to start using real bullets as opposed to rubber bullets. That would be a huge escalation of things in Hong Kong beyond what we've seen already. So it's getting really bad out there, and it's getting quite scary.
Hoping that it doesn't come to that. Of course, we've seen other people around Hong Kong, when you talk to citizens out there, just in general about the liveliness and kind of the way that life has changed over there, trickling down to businesses as well, saying that they've seen foot traffic drop off. We've seen Canada Goose come out and say that it's impacting things as well. Of course, up against all of that, business dealings tend to fall into the backdrop when we think about how severe these protests have become. But we'll continue to update you throughout those developments as we get them. But coming up, FedEx is taking shots at the New York Times over taxes, while the company's CEO is challenging the paper's publisher to a public debate. More on the gauntlet being thrown down in dramatic fashion. Wi-Fi PM returns. Welcome back to Wi-Fi PM. The gloves are off between FedEx and the New York Times. We've got an interesting wrinkle to discuss here. FedEx CEO and Chairman Fred Smith called out the publication yesterday after it published a report detailing how the shipping company slashed its tax bill from $1.5 billion in 2017 to $0 in 2018, thanks to President Trump's tax cuts. In a statement posted on the FedEx website, Smith challenged the Times report, criticizing their own tax practices, and even called for a debate between the two entities. Smith stated in part, quote, "I hereby challenge A.G. Scholzberger, publisher of the New York Times and the business section editor, to a public debate in Washington, D.C. with me and the FedEx corporate vice president of tax. The focus of the debate should be federal tax policy and the relative societal benefits of business investments and the enormous intended benefits to the United States economy, especially lower and middle class wage earners." Brian, we were talking about this before the show. I don't know. It's hard to find an example of a CEO clapping back so strongly, saying, "Debate me.
I challenge you to a duel, good sir."
You can hear the glove hitting.
Yeah, no, it's a remarkable hit back, but I think for what it's worth, the point of the New York Times article was not actually that, oh, FedEx doesn't pay their taxes. A lot of other companies, since the tax cut, have paid effective $0 as well. There are reports that Amazon also paid an extremely low, near zero tax bill in 2018. But the point of the story was that, okay, yeah, you're getting those tax cuts, but are you taking the money that you're saving and then putting it into business investments, into more jobs, into higher wages, things like that? And the Times article was basically saying that FedEx didn't do any of that, didn't make a lot of capital expenditures. But you can make the argument that for the story for 2018, there was actually also the issue of the U.S.-China trade war. So it's kind of there are a number of endogenous variables in that model there that say actually maybe it was the China trade situation that kind of got companies like FedEx and many others saying, we just don't want to make those investments right now. So it's kind of two separate things. But regardless, I think the FedEx response to the New York Times article was they said it was factually inaccurate, but didn't dispute any of the numbers that they actually had. You could probably just admit to the fact that you pay zero taxes, as the FedEx statement also alleged the New York Times company did. But I think that to be so aggressive, that statement from the CEO was just, I think it makes FedEx actually look worse.
Well, I agree. And I think this is a psychological case study, because if you didn't do anything wrong, typically you don't react so strongly. If you're trying to cover, sweep something under the rug and you actually know that you're maybe guilty or you've got bigger fish to fry, FedEx is just not doing as well as they used to. I mean, Amazon has come in and really crushed them. So maybe he's just feeling a little bit, I don't know, under stress.
Yeah, it could be the case. They're trying to, at least, as the New York Times said in a statement to Fast Company, trying to create a distraction here.
Exactly.
And kind of looking away past that. And they said it was a stunt in challenging him and trying to have this actual
I don't think
debate
that debate's.
happen.
I don't think that debate's going to happen. Just a little guess here, but I don't think that debate's going to
I'm
happen.
not sure how big ticket sales might be for something like that, but I'm sure our audience is interested. I'm certainly interested. But there it is, the back and forth. Before we go to break, I want to highlight a couple of the names that we track here on this show. Right now, we're looking at shares of some recent IPOs. Fiverr trading off here more than 3.5%. CrowdStrike, the cybersecurity firm, trading off above 3% right now as well. We're going to get into some of these other names here. Disney back up again to start the week by 2.5%. We'll dig into streaming later on in the show. But just ahead, the Popeyes chicken sandwich not showing any signs of losing its sizzle. We'll have the mind-blowing boost to foot traffic it's providing its parent company right after the break. Welcome back to Wi-Fi PM. We're checking the market action we're seeing right now, and it's green across the board. Look at that, the NASDAQ flipping from where we started the show. Now just about break even, the Dow up just 19 points. We'll see what happens throughout our hour. Well, the chicken sandwich craze is paying off for Popeyes. According to a new Placer.ai report, the fast food giant saw astounding high foot traffic in the third quarter thanks to the sandwich hype. The report noted that traffic was still 188.1% above the baseline percentage on the restaurant's worst day in Q3. And joining us now to discuss is our very own Heidi Chung. Heidi, we of course profiled this sandwich right here on Wi-Fi PM.
Yeah.
You and I together, we put
it to a test.
We both agreed that it was very good and better than all the other competition out there, but 188%.
And that was on its worst day.
That was on its worst day.
Right, and on its best day, or the best day, it was 245.9% above the baseline. So I don't think it's any secret that this sandwich has significantly boosted not only foot traffic, but also same-store sales.
Yeah.
As we saw in the most recent quarter, only 2 weeks of that sandwich being on sale, and we saw nearly 10% comp sales here in the U.S. And that was the best Popeyes had seen in nearly 2 decades.
Yeah.
So, I mean, I don't know if you want to divulge this to all the viewers out there, but someone tells me that you went to Popeyes more than once this weekend?
I went to Popeyes twice. Yeah, I went to Popeyes twice. I had 3 chicken sandwiches over the weekend. But I mean, the main question.
I'm not afraid. Defibrillator out.
I'm not afraid to admit it. They were very tasty.
They are.
But I do think that is the key here. When we're talking about just 2 weeks being included in those last time numbers, when we're looking ahead, I mean, if that's sustained, I know there was that gap in terms of getting them back in store, but if that's sustained, I mean, you got to think for its parent company, Popeyes is going to be the engine of growth.
So my concern is, okay, at what point does it sort of plateau? plateau, right?
The line when I went there was wrapped still around.
It's not dead yet, right?
Yeah.
A lot of people were thinking, okay, there's two stories to this. Once it hits the markets again, will people be as excited, if not more excited, or will people just kind of be like, it took too long for it to come back, so I'm kind of over it? Well, people are still waiting in lines. My friends are still asking me about it. Every time I'm at any group function, they're like, so have you had it? What are your thoughts? A lot of people prefer it to Chick-fil-A. I know that's a controversial thing to say, but I know you and I agree on that. It's better than Chick-fil-A.
It's better.
It is. And there you go. And
I've
Brian,
only had Chick-fil-A, so I can't comment on the actual taste, but I think it's a huge win for planned scarcity, which is the same strategy that Apple uses when releasing new phones. Popeyes knew approximately what the demand would be, and they purposefully shorted that demand to create a PR story, which is brilliant because we haven't seen a food company do that. A quick serve
Did you
restaurant.
think that it was a PR stunt? Was it a kind of control? Was it problems in getting it out? There were so many questions.
I think so. I have spoken to the president of Popeyes America.
Yeah.
And according to management, of course, we don't know the real inner workings of this, but they said, the debut completely surpassed their highest expectations. So they had a certain supply, and they had no idea that Chick-fil-A was going to come at them for this, right? Like, the sandwich had been on the market for about a week before Chick-fil-A tweeted that, well, we're the original sort of tweet.
Yeah.
And that was a sort of natural that was the most natural marketing for Popeyes. Popeyes had no idea. No one was talking about the chicken sandwich until that tweet came out. And then Wendy's got involved. Of course, Wendy's Twitter known to be super fiery and controversial. And so I don't know if it was necessarily a PR stunt, though there are a lot of questions
I think
out there.
if there were to be any sort of supply chain problems, it would have been tested with the second rollout that they had a few weeks ago. And it seems like, right? I don't think there's been too many concerns.
It's holding up. I mean, maybe the quality.
How long did you have to wait for your first or second or third?
Did you really?
First time around, I had to wait
this in
15
Boston?
minutes. They made that fresh. This was in Chinatown.
Oh, okay.
And then the next time around, they had it pre-made. It was a little soggier. So who knows if they're really hitting some quality here. That's problematic. But when we talk about competition and you bring up Chick-fil-A, it's interesting because they just put out a press release and we're looking at the Chick-fil-A Foundation and kind of shifting the strategy of what they're kind of donating towards and what the focus of their donations will now be. Focusing on a couple different things, education, homelessness, and hunger. Of course, Chick-fil-A has been criticized by LGBTQ activists after years of its company founder giving away money to those causes. Might that change some things here? I know that's been pushed back.
I think that was the first natural response for a lot of people after hearing this news that, maybe Chick-fil-A doesn't want to isolate its customers. Because even when I was at the Popeyes chicken sandwich launch on the day that it came back on the market, I wanted to know what people preferred, Chick-fil-A or Popeyes. And a lot of people in line were telling me that they don't even go to Chick-fil-A because of these reasons, that they were donating to a lot of these Christian foundations that were, sort of taking a homophobic stance, if you will, on a lot of social matters. And so I think this is one way to sort of be more inclusive, not isolate a lot of the other customers that weren't coming. But competition is so fierce in the space. And at this point, you can't afford to push some customers out. Every person that comes into the store and places an order is important. The average ticket price is obviously important as well, but getting someone into a door or drive-through is key.
Which is interesting.
Still closed on Sundays.
Yeah, because, right. And it seems like
Yeah.
Dan Cathy, the CEO and the company for a long time, even despite the criticism, have kind of doubled down on their stance, especially on the religious front. So it is kind of interesting to see why now they decided to time that change.
Well, they said the commitments ended in 2018, so it looks like they didn't recommit to these specific foundations.
Right, so they could in theory sign
Right.
with another organization, but we just don't know.
I will say I did eat 2 of the sandwiches on Sunday because they were. I had nowhere else to go. Popeyes was the
What do
only
you
one
mean? There was
open.
nowhere else to eat in Chinatown?
Chick-fil-A was closed.
Right.
Chick-fil-A was closed.
Yeah.
Chick-fil-A was closed. I
You
was in a
just
chicken
really
sandwich
like the
mood.
sandwich.
That's exactly right.
Spicy over regular, right?
Agreed. All right, always on the same page here. Heidi Chung, thank you so much.
Thanks, guys.
Appreciate it. Got to take a quick break, but we're back with the market's biggest movers on Wi-Fi PM right after this. Welcome back. Let's check in with Scott Gamm on the floor of the New York Stock Exchange, who's watching Disney today. Scott? Maybe Scott Gamm's not watching Disney. Maybe he's watching us. We're watching Wi-Fi PM.
I've watched Disney before, but not right now.
About 25 years ago, I watched Disney.
Well, now you can watch it on Disney Plus. That's for sure the thing. I'll tell you that much. We're going to head to break again because we couldn't get to Scott there. But next on Wi-Fi PM, we've got President Trump pulling another policy, 180. This time over banning e-cigarettes. We'll have what flipped the president's thinking when we return. We're back in 60 seconds. Good afternoon and welcome to Wi-Fi PM. I'm Zach Guzman, and joining me today is Yahoo Finance's Brian Chung, along with retail expert Aaron Sykes, joining us back in studio. Aaron, good to see you again. We're checking the market action we're seeing right now, and green across the board, though muted on this Monday. The Dow up just 8 points. The S&P up less than 1 point right now. We'll see where things go as we approach 2 p.m. Eastern time. Well, President Trump might be pulling another policy U-turn, this time when it comes to his proposed ban on e-cigarette flavors. According to the New York Times, the president balked at what banning vaping flavors could cost him politically, as advisors stress that an outright ban could impact vape shops and local businesses and their owners in key battleground states. Recall back in September, flanked by his wife, First Lady Melania Trump, Health and Human Services Secretary Alex Azar, and the head of the FDA, the president mentioned the fact that the youth epidemic, that nearly 30% of all high schoolers in this country have vaped, couldn't be ignored any longer. Take a listen.
Vaping has become a very big business, as I understand it, like a giant business in a very short period of time. But we can't allow people to get sick, and we can't have our youth be so affected.
So join us now for more on this is attorney Tracy Finken. She's currently representing a Pennsylvania family suing vaping giant Juul Labs for allegedly hooking their 13-year-old son on nicotine. Tracy, good to have you with us. Let's start with the fact that Juul, maybe sensing that initial pressure from Trump coming back in September, already decided to ban fruity flavors and mint earlier this month. So what do you make of the turn here?
Well, it's really disappointing, Zach. First of all, thanks for having me, but it is really disappointing that President Trump has done a policy shift on this issue. Every single one of us every day should be asking our representatives, our legislators, President Trump, what are you going to do to keep our kids safe with this epidemic? The statistics are staggering on how many kids are vaping nowadays. It's 1 in 4 high school students have vaped in the past 30 days. And what we're seeing is 30 years of progress in terms of nicotine and tobacco use among adolescents has been completely undone in the past 4 years since Juul has come on the market. So it's really disappointing to see President Trump have shifted his policy on this.
Yeah, what's
Absolutely.
interesting, I mean, you're talking about nicotine and that being the addictive substance here, whether you're talking about cigarettes or e-cigarettes together here. The unique thing about your case, though, is that you're really stressing the idea that the injury here is addiction itself. In the 13-year-old we're discussing here, the client at hand here. That seems to be the main issue you're pushing. So is that going to be hard in winning the lawsuit here against Juul, kind of proving that an injury like addiction to nicotine is actually something worth going after them on?
Yeah, there are a couple things here. So we do have addiction cases with teenagers who have developed an addiction to Juul, and we are handling those cases. And what people don't realize is the science is very, very clear that addiction damages the adolescent brain. This is more than, they equate it similar to addiction to opioids or addiction to heroin and things of that nature. And there have been studies that have been coming out in the past several days that indicate that this is addiction like they have not seen before. It's not, it can't even be equated to addiction to combustible cigarettes at this point.
Hey, Tracy, Brian Chung here. So on that point, you mentioned some of these studies. It seems like this is a relatively new industry, so there's maybe not much research. I mean, when you're building this legal case here, what types of scientific studies are you looking to, either from maybe the FDA or from private parties, from academics, that can kind of help point you to what really is the causation, correlation between some of the deaths maybe that we've even seen in this space to this type of e-vaping technology?
Yeah, so listen, the science is evolving every single day. We do know that nicotine and the addiction to nicotine and what that does to the developing teenage brain, that science has been around for a very, very long time. That is not new. As far as the acute lung injuries and the other types of effects that have been attributed to vaping, there are studies coming out daily that are linking these products to cardiovascular effects, to seizures, to lung injuries, and there's been animal studies linking it to cancer now. So what we're going to see is as the science evolves, the harmful effects are going to become more clear. We see now that the companies themselves have admitted that they don't know the long-term effects of these products. We see that the American Cancer Society and the CDC also admit that they do not know the long-term effects of these products. So what we're seeing here is the tip of the iceberg in terms of harmful effects from these products.
Yeah, we've had a few people on this show. I mean, even the professor of that one study you're talking about there with mice and the study on cancer as it relates to e-cigarettes. But one of the issues, too, that we've talked about with other professors on this show is how battling some of these cases can be very tough when you're going up against a company that is now backed by Big Tobacco. And that was kind of the iceberg that you're talking about that a lot of attorneys and people battling this had to overcome when we're talking about getting those first wins against Juul or other e-cigarette companies, as the case may be. I mean, when you're trying to approach that, how hard is it to kind of get a judge or others to kind of hear your side here? And what are you expecting in the battle that's to come?
Listen, you're right in that all these e-cigarette companies are being backed by Big Tobacco. I mean, that's the bottom line. But this has to be a collective effort. We are in the middle of a public health crisis with the youth of today. And this is something that every single one of us need to be banding together to try to come up with a solution to. Litigation is one part of this aspect. For example, and litigation takes a long period of time, as you guys probably know. My firm, Anna Paul Weiss, we have started an organization called endvaping.org. And this organization, we are taking trial lawyers around the country. We are going to school districts and educating kids and teachers and administrators about the harmful effects of vaping. We're trying to keep kids from picking up an e-cigarette to begin with, but also really counseling them on tobacco cessation and nicotine cessation and what they need to do to get off of these products. And that's something that all of us should be taking the position, how are we going to protect these kids and what are we going to do to try to put this genie back in the bottle that has been unleashed by these vaping companies, over the past 4 years with the teenagers in our country today.
Or to prevent teenagers from picking these up in the first place. That's not something that we haven't seen the companies try and come out and say that they're working on preventing as well as they try and position themselves as a product for smokers already out there turning away from cigarettes. But Tracy Finken, thank you so much for joining us. Appreciate you taking the time.
Thank you.
All right, well, after the break, it's almost the dreaded holiday travel season. So which airports are about to nickel and dime you to make matters worse? The Points Guy breaking down the list of the most expensive airports when Wi-Fi PM returns. Welcome back to Wi-Fi PM. I probably don't need to remind you that flying costs more than just an airline ticket. Airport costs could rack up for the budget traveler, from the price of a cup of coffee to transportation to and from the airport. And according to the Points Guy, a study of 50 busiest airports in the U.S. yields a surprising result. The most expensive airport to fly out of is Newark. And more bad news for New Yorkers. JFK and LaGuardia are also on the top 5 for the most expensive airports on that list. Joining us now is Melanie Lieberman. She's the travel editor for The Points Guy. Melanie, good to see you.
Good to see you too. Thanks for having me.
Not a lot of reasons to be optimistic if you're a New York traveler here. So what went into sizing up what the most expensive airports are in the U.S.?
Yeah, we looked at a lot of different factors. We took into consideration airfare, of course, because that can be a huge expense. But it's so much more than that. We found out the price of a hot coffee at 50 airports. We looked at how much it costs to park your car overnight. If you're taking an Uber to the airport, we calculated that, as well as whether or not there are a lot of priority pass lounges to offset the costs you might have.
Those are big.
Definitely, and that can be a huge help for travelers, especially in those New York area airports that you mentioned. So we took a lot of different things into consideration to come up with this.
Yeah, and parking we're seeing as well.
Right. So when we talk about we had the list of the best airports, rather the worst airports by cost, but there are also better airports that, like McCarran. I think is that Vegas?
Yep.
Orlando. Like what were the big components that drove the cost down for those airports when it comes? Was it mostly parking? Is it mostly what components are the biggest factors?
Yeah. So with the most inexpensive airports, or the most affordable, we did see airfare was a pretty big driver there. There was less variation in other factors, but we also saw better parking options. You're not going to spend $40 a night necessarily, which is what you can expect to pay at some New York airports. And we also saw more priority pass lounges in some of those airports. It was really a combination of all the different factors that helped lower the cost.
And then just being a West Side New Yorker, I tend to prefer Newark because you save about 20, 30 minutes in terms of getting there. I also know that I pay about $25 more in an Uber or a cab to get there over going to JFK or LaGuardia.
Yep.
So now how do you aggregate all of these numbers? Is it $25? Are you just taking an average, pocket spend per day plus the airfare when you go, or some type of average?
Yeah, I think the really important thing to remember with this report is that it's not necessarily, I actually live in Jersey City, and so for me, Newark is not the most expensive airport because I'm not going to be spending over $00 to get to it.
Yeah,
which is really helpful.
Those Uber choppers, the blade,
exactly.
to
Well,
the
maybe
airport there.
Yep, exactly. So when we're looking at what it costs someone to go to the airport, we're really taking into consideration, these are things that travelers should know. They should know that getting a great deal on airfare can feel really good until you take a $100 Uber to the airport, until you buy your $3 coffee, until you've parked your car, whatever it is that you need to do. Those start to really add up. And so it's mostly a reminder to travelers to just take a step back and say, I found this great deal out of Newark or out of JFK, but maybe that's not actually the best price for me. Maybe I should go elsewhere.
How much more is it going to cost to get a little sandwich roll before you go on the plane, or a water bottle here or there? We were talking about this. I mean, SFO, you got to bring your own bottle now, right? To fill up. So there's all these extra things to worry about. Melanie Lieberman, though, thank you for bringing that to us. Appreciate it. Before we go to break, I want to take a look at the Dow leaders so far today. And right now, a couple names to highlight there. Disney, United Health, Walmart, P&G, and Coca-Cola leading the way higher. And on the flip side, a couple laggards to show you as well in the red. Chevron, 3M, Caterpillar, Exxon, and Goldman Sachs, a little-known bank you might have heard of before. Coming up, sticking with the holiday theme, movie star and comedian Adam Devine teaming up with Captain Morgan on a new gingerbread spiced rum. He'll join us to chat that and all things tech, including his new Netflix Dr. Seuss project, right after this. Welcome back to Wi-Fi PM. We're checking the market action we're seeing right now, and still green across the board. The Dow getting a little bit of a boost here in the afternoon, up 26 points. The NASDAQ and S&P hanging in the green there for now as well. All right, well, it's almost the holiday season, and Captain Morgan is bringing you Christmas in a bottle. The Diageo-owned spiced rum brand has released its new flavor, gingerbread spice, to spike your favorite festive drink. But the Icon Rum brand really started spicing things up when it tapped our next guest to be part of the team as its brand partner. And joining us now is that brand partner, actor and comedian Adam Devine.
Why, hello.
Hello there, sir. Thank you for bringing in the captain.
You know what? I'm going to give you a bottle. I'm not afraid to treat you guys.
Wow.
You
got two.
Yeah, ready to get, well, I'm taking one. I'm going to take one.
Well,
you get one.
One's fine.
One's enough.
Third
Don't
of
get
a bottle.
greedy, man.
You get
I'm saying.
Yeah. Get the one.
The holidays are coming up. I know it's big when we talk about the holiday season, so not surprising to come out with another drink here, too. We're going to dig into the partnership and how it came about later on.
Okay.
First, though, I'm not sure if you've been noticing this, but Disney Plus is now out there. I know that you've had
I did notice that.
things come through on Netflix.
Yeah. Mm-hmm.
You've had your stand-up special.
Yes.
Now you're working on a Dr. Seuss.
My stand-up comedy isn't Disney Plus ready.
Yeah?
Yeah, it's not for the kids.
Different demographic.
Yeah.
How do you,
that's
I
for
mean,
them adults.
as an actor, as a star here, how do you think of kind of
Thank you for saying
partnering? Yeah, you're welcome. I think it's deserved. How do you think of the way that you partner with these streaming platforms? Does it change at all the way that you think about rolling things out?
You know, it is like you do want to make sure the largest group of people get to see your stuff.
Yeah.
And for Netflix, I know I put stuff on there and it just blows up.
Yeah.
I know millions of people will get to see it, and you just want to put it on the platform that the most people will see. I think that's why people are kind of steering clear of cable platforms where they're just not getting the same amount of eyeballs that they used to.
Well, Adam, you did cable through Comedy Central with Workaholics and whatnot. Do you think that with comedy it's different with kind of viewing habits? Because a lot of people like to binge, especially with Game of Thrones, where it's just like, I'm just gonna crash on the couch and just cruise through like 12 hours of content. But for comedy, is it different? Like, do people sit down for stand-up routines for multiple hours or kind of TV shows?
I don't think they watch stand-up for maybe they do, but I just have the one, so they'll just watch it again. But yeah, I think people are that's how you watch television now, is that you want to consume a lot of it.
Yeah.
And also it's so easy to just watch it on the go, where if it's in your pocket and it's on a streaming platform, you can watch it on the subway, you can watch it in a car, you can watch it on a plane, you can watch it anywhere. You don't have to be at home on your couch.
See, that's kind of the scary thing, too, though. I know you kind of highlighted this in your latest movie, Jexy, when we looked at it. For those who haven't seen it, your character, Phil, finds himself getting dating advice from his AI coach, basically, through your phone.
That's right.
And we actually had Sophia the Robot on our show a few weeks ago, and she actually took over my interview, which is weird because it's also what happened in your movie. I just want to play that snippet, and then we'll ask you about tech on the other side of it. Take a listen. There are pros and cons to dating apps, I guess I would say.
I'm asking the questions now.
Oh my good sweet Lord. This seems like a date gone very wrong, and I've had a few of them, Sophia, but I didn't find love on
imagine.
them. Okay, so I was getting roasted there by a robot, but I mean, that's kind of your movie was highlighting the scariness and kind of the downside of tech being everywhere, or the ability to be interacting with tech 24/7. I mean, that's an issue.
It is. It's definitely taking over our lives, and the robots will control us all someday. But for now, it's hilarious and very funny. And when robots roast you, haha, funny.
Yeah.
And see Jexy.
And see the movie as well. Speaking of plugs, though, let's talk about this Captain Morgan.
This is the reason for the season.
Yeah.
Captain Morgan Gingerbread Spice.
But you're big. I mean, I was reading about your USO tour too, right? Because the holidays for you performed for troops last year.
I gotta go to Iraq and Afghanistan and perform for the troops over there, and that was super fun.
Yeah.
And I always try to do something around the holidays to give back. I just went to my children's hospital in Omaha, where I spent some time as a kid and tried to meet some of the kids there.
Yeah, I mean, we were looking at all these things, right? Because obviously it's a very busy schedule, I assume. You got the Captain Morgan thing, you got the hospital thing you mentioned, the USO partnership there. I mean, across all of that, how do you kind of decide what you want to do when you're talking about partnerships and the things that you're working on?
Well, Captain Morgan, it just made sense because they're all about inclusiveness and having fun, and that's also kind of what I'm about, just having as much fun with as many different types of people as I can. And they actually are partnering with Big Gay Ice Cream here in New York City, and every Thursday until the end of the year, through the holidays, they're going to be giving out Captain Morgan Gingerbread Spice ice creams.
Yeah.
And
to those who are age appropriate.
Yeah,
Right.
yeah, you have to be 21 plus.
That sounds potent.
It's not boozy actually. It's just flavored like gingerbread spice, and it goes well with a mixed drink. So grab yourself one of those.
I mean, obviously the holidays are a big reason to celebrate across the board. But I mean, for you yourself, are there any like key holiday things that you do with your family? I know you're recently engaged, so I assume that the holiday season is going to be very, I don't want to say stressful, but very big this year.
Yeah, I mean, they already know Chloe really well. We've been dating long enough. I mean, my favorite holiday thing is eating 5,000 calories and then falling asleep while I was planning on watching football.
Yeah.
That's what I normally do.
So maybe I take back the thing I said about a very busy schedule.
Any favorite holiday foods that you can pair with this bad boy now? Or?
Oh, yeah. I mean, my family, we truly love, like, you know, you think like, oh, I'm just doing this because I'm getting paid.
Yeah.
And I am. But it is.
I want to be clear.
Make no mistake.
Yeah, but it is, like, my family does love Captain Morgan, and we do enjoy having a few, just hanging out together and spending some quality family time.
Fair enough. Very good.
Sounds better than eggnog.
I was going to say, how does the gingerbread spice flavor, like, how do you mix it differently than you would traditional Captain?
You don't have to. I kind of enjoy it the same way you would. It's also really good chilled.
Okay.
It's just, I don't even know how to explain it. It just tastes more holiday-y.
We all love that.
Yeah. You're gonna like it.
There's no harm in that. All right, well, Adam Devine, thank you so much for joining us.
Yeah, no
man.
problem,
Appreciate
guys.
it. Good stuff.
Yep.
Thank you for coming by. Aaron Sykes, thanks to you as always
Great to
as
see
well,
you.
and Brian Chung. Thanks for being here, though you're getting paid, just like some other people are getting paid here too. Stay tuned to Yahoo Finance. We're headed to the New York Stock Exchange in 60 seconds time. All right, well, let's check in with Scott Gamm on the floor of the New York Stock Exchange. Scott?
All right, Zach, thank you. I am joined now by Timothy Anderson of TJM Investments. So, Tim, what do you make of some of the record highs we're seeing across the board today?
Well, I think it's very constructive because when the market made new highs in late April and then new highs in late July, both of those really only held for 3 or 4 days before we had a sharp sell-off in May and a sell-off in early August. Now, the S&P 500 went to new high territory 3 weeks ago today. And so far, we're not only holding that level, but the S&P is now 3% above that level that it broke out from.
So I guess you could look at that as a good thing or a sign that maybe we are due for some sort of a pullback.
Well, we could always have a pullback and a little bit of a rest, but I think it's very constructive that we haven't gone up in a straight line. It's been very much of a grinding higher with just marginal gains each day, most of the days. I'd love to see the Russell get above the 1600 level. It's been a very difficult technical level most of the year, but so far it just feels like the market is grinding with an upward momentum, certainly in a totally different environment than we were in last year.
Now, you mentioned last year because in a few weeks, of course, we're going to start to talk about the Santa Claus rally, which obviously didn't apply last year, but explain the differences in the market last year versus this year.
Well, clearly the Fed was in a mode of hiking its interest rates and also tightening through reducing their balance sheet that had been accumulated over the prior decade. And now we've just had 3 interest rate cuts and we're not tightening, and we could banter as to whether or not their repo activity is QE or not. It's really more of a structural liquidity maneuver, but we're not going to hear this recession talk like we did last year so actively going into the last 6 weeks of the year. I would say that it's very, very likely recession is just off the table most of the way through 2020.
All right, Tim Anderson, thank you so much. As always, Zach, we'll send it back to you.
Coming up, why Kylie Jenner's billion-dollar beauty business is helping boost shares of Coty. The ticker all over it starts in 2.
Good afternoon and welcome to the ticker on Yahoo Finance. I'm Alexis Christoforous. We're breaking down the biggest stocks to watch today as the market really has been searching for direction throughout the day. Right now, though, we have all three major indexes in the green with the Dow up 32 points, as you can see there, back above that 28,000 level. The S&P 500 up 2. We've got the Nasdaq gaining 7 points. Let's start with our big three tickers. HP is formally shooting down a takeover bid from Xerox, but is hinting it's open to a new offer. Ford unveils its new electric SUV to directly take on Tesla, and Coty is making a big bet on Kylie Jenner's cosmetics business. First, we are watching HP this afternoon. Reuters reporting Xerox made a $22 a share takeover offer for the software company on November 5th. Now, HP responded saying that offer was too low and would saddle the combined company with outsized debt, noting it would not be in the best interest of shareholders. Dan Howley is with me for more on this one. So, Dan, I guess HP, though, did leave the door open for a possible deal, right?
Yeah, that's for the future, and it would be flip instead of Xerox taking over HP, which everyone was like, that doesn't make sense.
Right.
HP is so much larger. It would be HP taking over Xerox, and they kind of left the door open for that because they did say in their letter that they recognize what Carl Icahn was trying to get at when he kind of talked about this idea of bringing the two together, and there being synergies there that could really improve things for both of these firms, which are trying to cut costs because when was the last time you used a printer? I don't even know.
I do. Surprisingly, I do sometimes, but we certainly do here with our scripts.
Yeah.
But now, Carl Icahn, of course, the activist investor who holds a stake in both these companies. Yep. So for him, whoever buys whomever, really, he doesn't care as long as these two combine.
He just wants them to kind of come together and make sure that they can get the most value out of the two of them. But I think it makes more sense for HP to get Xerox. Xerox doesn't have experience with selling personal computers, and that's part of HP's brand, not just the printers. Obviously, they made a lot of money in printers over the years. That's been falling as fewer people use them, and the idea that you needed to go into HP and buy HP ink for HP printers just doesn't really fly anymore, because you can get ink wherever you want. That's where HP was making the most of its money when the printer business was booming. They're still the largest PC seller in the world, so that's something that Xerox would have had to take into account. If HP takes over Xerox, though, they already know how to deal with the computer side, and they'll be able to have Xerox to lean on for the enterprise side, where they go in and rent these kinds of business-style printers, fax copiers, and then service them. That's really where they make all their cash. So I think the flip argument makes a lot more sense.
A lot more sense. But what are the odds that Xerox comes back with a better offer than the $22 a share? And if they do, does HP bite then?
I think it all comes down to the debt. Obviously, HP was pointing that out, and that's something that they're really kind of taking into account, making sure that they don't get hit with that much debt. I think if they can somehow figure out a way where they don't have to deal with that, then that would be the issue, or that might push it forward. But I think really it just seems to make more sense for the larger company to take over the smaller company. HP is about 3 times larger than Xerox.
Yeah.
I don't know how that makes sense at all.
It was all a ruse, right? To have HP then turn around and say, wait a minute, maybe we should buy Xerox.
Exactly, yeah.
Well, we'll be watching. I'm sure we haven't heard the last of this.
No.
So, all right, Dan Howley, thanks.
Thank you.
All right, we are also watching Ford today, the automaker debuting its Mustang Mach-E. It is Ford's first all-electric SUV, and it starts at about $44,000. Inez Ferre is with us for more on this one. So, Inez, does Elon Musk and Tesla have to worry about this, do you think?
Well, I think so, because it will be competing with the Model 3, with the Tesla Model 3 sedan. And even though Elon Musk did send a congratulations email to Ford about the Mach-E, but certainly this is a car that is going to be priced just below $44,000, and also buyers will be able to get that $7,500 tax credit. So then that puts it in the range of the mid-30s. And Ford is saying that they're going to be building this in Mexico, of course, where labor costs are lower, and they've even indicated that depending on how the U.S.-China trade relations go, that they could even make these in China eventually. They're due to come out next fall, and this is really part of their strategy for the electrify its icon strategy, basically electrifying its icons, starting with the Mustang and then following up with the F-150 pickup. Alexis.
Now, we mentioned Tesla at the top of this. A Tesla supercharger caught fire at a Huawei store in New Jersey yesterday. Of course, this comes as Huawei plans to have Tesla chargers at 30 of its locations by the end of next year. I know we all reached out to Huawei, but they declined to comment on the incident. What is the latest there? What do we know?
Yeah, we actually also reached out to Tesla as well. I still haven't heard back from Tesla about this incident, but these are these supercharger stations that are at the Huawei's, which are in states like Pennsylvania and New Jersey, D.C. But this one, it happened to be in Parsippany, New Jersey, and we know that there was a fire there. We don't have many details on it. However, one of the things that Tesla said after during their third earnings call was that they're really under pressure to make more of these charging stations because of for their customer base, because they've got this growing customer base, and the customers will not want to buy their vehicles if they don't have enough of these stations around.
Yeah, I've certainly just, in walking around, I've been seeing more of them, and I always sort of, go, oh, wow, there's another one. But, to be fair, every year more than 5,000 regular gas station fires are reported in the U.S., but then I guess there are a lot more gas stations than superchargers. Yeah. All right, and Inez Ferre, we'll see you a little later on. Thanks.
See you soon.
Our third ticker of the day, Coty, the beauty company, is paying $600 million for a 51% stake in Kylie Jenner's cosmetic startup, Kylie Cosmetics. The stake will value Coty at $1.2 billion. Jared Blickery is with me now at the Wi-Fi Interactive Board. And Jared, what made Kylie's company so attractive here to Coty?
Kylie, it's name brand recognition, and this kind of runs counter to their growth strategy, which they've implemented this year, supposed to go through 4 years, 2023. But you can't deny the star power of the name. The company had to admit a few missteps from its past this year, including a $3.9 billion write-down of P&G assets, and they've been looking to divest a lot of their assets as well. They just made a sale to Estee Lauder for a $1.1 billion brand. That's going to raise some money that will help them get into these higher performance, higher brand recognition names. We can see the stock is up 1.5% today, was up as much as 5%. And this is a 5-year chart, a little bit longer than we start out with, but we can see under previous leadership and strategy that it really was on almost a secular decline here. We draw a trend line here, we can see that it's just about breaking out. We do have a higher low, that is from here, so we may have the beginning of a breakout. It looks much better on a year-to-date basis. Despite that huge write-down that I noted, up 84%. Is it a dead cat bounce? Stock's moving in the right direction now. Compared to its peers, we have a heat map here, and we can see, let's do a year-to-date on our heat map and sort it by performance. We can see Coty is in the lead here, up 84%. This is LVMH. They're up 55.8%. And this is a much better looking chart year-to-date, I should say, but also a lot of other name brand recognitions here, no pun intended. Tiffany up 54, Estee Lauder up 48. To the downside, Signet is really disappointing. They're down 45%. And then the industry laggard is Farfetch. That is down 47% year-to-date.
Wow. You know, Kylie started this company in 2015. It is now worth over $1 billion. Is this the trend we're going to continue to see, these celebrity-pushed fragrance and cosmetic companies, those that are sort of pushed by social media?
Oh, I think this is the age of influencers. How long is it going to last? I don't know, but definitely the Kardashians and the Jenners, their name is probably the highest in terms of star power. It really makes sense that that Coty would get on board with this brand here. And just a little side note, there were a lot of naysayers when Kylie Jenner was said to be worth $1 billion, but there's no disputing the fact that she has created a unicorn now worth $1.2 billion and flipped it. And she does retain 49%, so she's probably going to be heavily invested in the creative, and that's a good thing.
Yeah, plus she's still going to continue to be the face of the business. They expect to close in the third quarter of Coty's fiscal year 2020. Any idea what this is going to mean, though, to the company's bottom line, did they say?
Well, unfortunately, they could take a short-term hit because it escalates the necessity of selling off some assets, such as their professional beauty line. But I would expect that to be short-term. The long-term strategy is get the quality of their partnerships up and get those growth brands. So this is not going to be growth. They spent too much money on it, but it's going to attract perhaps some other growth brands, and that's what they want to do.
And some new customers in the mix.
Yes,
all right,
customers.
Jared, thanks so much. Coming up, is China's mood to make a trade deal suddenly turning pessimistic? The CEO of China Beige Book joins us next with his analysis. The market's easing back from record highs after CNBC reported that Beijing is pessimistic about reaching a trade deal with the U.S., citing President Trump's reluctance to roll back tariffs. This comes as the Commerce Department issued a new 90-day extension, allowing U.S. companies to continue doing business with Huawei. Joining us now is Leland Miller. He is the CEO of China Beige Book. And Leland, great to see you. So you say the fact that we've extended this deal with Huawei actually bodes well for a phase one deal.
This was actually a very bullish day for the trade. If the Chinese paid a down payment a few weeks ago with a big fentanyl bust. They blew up a smuggling ring and they said, it's your turn, President Trump. Now, President Trump is giving a concession to Huawei. So this is all coming down to September tariffs, but you just need some things to grease the skids, and Huawei is the biggest thing right now greasing the skids.
What about rolling back those September tariffs? Trump has not publicly said he's going to do this. If he doesn't, is that a deal breaker for phase one?
Depends what kind of deal people are looking for. There is a skinny deal that they can back out on, which is basically a nothingness deal, which is, you punt on December tariffs, and in return you get some ag buys, and both sides basically say, we're not going to walk away, we're just going to keep working. And, they just fake it till they make it. But that's not the deal that I think people would like to see. They like to see a broader deal. And if he does not pull back September tariffs, then you've got a major problem in terms of what the Chinese are going to give on IP.
The December tariffs, they would go into effect December 15th. Do you think they're still very much on the table?
Look, these should be gone. Unless there's a breakdown in the negotiation coming from the White House, both sides want these gone. You've got most factions in the White House. Even the hawks are happy to have December gone. The Chinese obviously want December off the table. What they want, a lot of people want, is a bigger deal. They want to see the deal incorporate more substantive aspects from the old May agreement, mostly on the IP side. And what the Chinese want is more tariff relief, which is September. So they want to they want to pull the tariffs back. And there's a lot of people in the White House right now who are absolutely for pulling it back. They think it's a more sustainable level to get it the level at $250 billion going forward through the election. And so you have all these relatively positive factors in terms of momentum for a deal, but the president has to sign on, and he hasn't done that yet.
So China is saying, we want you to roll back those September tariffs. What is Trump saying he wants in order to get him to the table for a phase one?
Well, it's unclear. So basically what Trump wants is bigger buys, but he can't say that. So not just agricultural buys, and not just for the Chinese to sign on to these remarkably large, unobtainable numbers that they've been floating around, 40, 50 billion a year. He also wants LNG. So they want to, you'll start seeing a deal come together when you start talking about LNG buys added onto the agricultural buys. Now, Lighthizer won't be happy with that. The USTR wants to see substantive concessions to the IP side. The Chinese are willing to give some of these. The low-hanging fruit, no problem. So really, there is only one factor in this. That is whether President Trump will move back September tariffs. If he does, this thing is going to fly through. If it doesn't, then you either have a skinny deal or you have a worse scenario.
What would the worst scenario look like to you?
It would look like something out of August, which was Trump mad at the world, an escalation to $550 billion in tariffs, people who have priced a deal in running for cover in markets. So markets would be upset, U.S. consumers would be upset. And so I think a lot of people have figured that at the bottom level, China needs something, Trump needs something. If you don't get that bottom something, you're going to have people just running for cover all December.
Now, of course, in addition to the trade issue, China has to deal with Hong Kong. Hong Kong tensions escalating as hundreds of protesters are trapped inside a university after police laid siege to the campus. This comes after Hong Kong's High Court struck down a contentious ban on the wearing of face masks in public, saying it violates the territory's constitution. Hong Kong's Hang Seng Index still rising despite these protests. Does this play into the trade talks at all, what's happening in Hong Kong?
It has to. I mean, obviously the Chinese need to be somewhat restrained, but look, the Chinese, for their own reasons, want to make sure that Hong Kong doesn't explode out of control. They would like this to calm down. This can only go in one direction ultimately. There's not that many protester concessions that can be made. Certainly, they're not going to give democracy to the people of Hong Kong. So the Chinese strategy is to squeeze a little bit more and drain the oxygen out of the room, and hopefully have the people of Hong Kong sick of the carnage, to have the protesters sick of the retribution, and to have this stop before things go up even another notch, which is the use of live ammunition and major widespread bloodshed. But we're not far from there right now.
And what about the effect on the Chinese economy in 2020 if these protests continue, as they have been?
Well, a negative performance by Hong Kong is not going to help the Chinese economy, but they've got all kinds of problems on their own. So right now, the Chinese economy is going to be slowing down over time. The question is, how much will the Chinese embrace the idea that they finally have an excuse for why their growth model doesn't work? The growth model doesn't work, but now they can say President Trump was mean to us. The world was mean to us. So we're going to embrace slower, healthier growth. It's not the party's fault. So they actually have a perfect excuse for slowing down.
Point the finger, right?
But at the end of the day, if they push too far, then you have labor rest, or you have layoffs, and you have all kinds of other problems. So it has historically always been 2 steps forward and either 1, 2, or 3 steps back. 2020 is going to be an interesting test case.
All right, Leland Miller, thanks so much for stopping by.
My pleasure.
Coming up, why the stock market may be indicating a fresh acceleration of U.S. economic growth in the coming months. We have details for you straight ahead. Welcome back to the ticker. Let's check the markets for you here. We have got things higher across the board with the Dow up 30, back above 28,000. Broader market modestly higher. Let's get to Scott Gamm on the floor of the New York Stock Exchange. Keeping an eye on Disney today. Scott, what's happening?
That's right, Alexis. We've got Disney shares at session highs, up over 2.5%, back near the highs from last week when Disney Plus, its new streaming service, was released. And of course, there was a lot of optimism surrounding just how many subscribers have signed up for Disney Plus so far. The numbers have beat expectations, and you've got Disney shares propelling the Dow right now. It's the best performing component, along with some of the other leaders like United Health and Walmart. These are two other important components for the Dow, and it's keeping everything above 28,000. That was a critical level that we hit in the final seconds of Friday's trading session, crossing 28,000 for the first time ever. There was a lot of excitement here on the floor in the final moments of Friday's trading session. Though you do have some laggards in the Dow today. We're talking about some energy names. Chevron is the worst performing component. 3M and Caterpillar are the other two laggards. You've got oil prices down about 2%, with West Texas Intermediate falling below $57 a barrel. Oil just can't break out of its narrow trading range that it's been in for the past 2 months now, Alexis.
All right, Scott, thanks so much for that. And straight ahead, the stock market signal about what may lie ahead for the U.S. economy in the coming months. Stay with us. The S&P 500 has surged roughly 9% in the last 3 months, reaching new highs. This as Goldman Sachs says the equity market is anticipating an acceleration in economic growth. Joining us now is Rachel Aiken, Vice President and Portfolio Manager at Rockland Trust. And Rachel, welcome to the show. What are the market indicators, do you think, that could point toward an acceleration in economic growth?
Well, thank you for having me, Alexis. I think definitely we've seen a market in rally mode, quite the contrary to where we were in October, where we continued to just kind of pedal in place and try to hit new highs. Much of that is really based on the firming of economic data points. We were operating where there was this overhang and fear of recession, ultimately signaled by the inversion of the yield curve. We saw that lift, and some layers of uncertainty have been removed. The Fed, corporate earnings were relatively strong based on what expectations were, and we have had progress in trade, although one step forward, two step back, a little bit as we've seen as of late. And that has created an environment that can focus more on the fundamentals. And with that data firming, we're seeing it across the board. We've seen the consumer, as far as consumer confidence and retail sales, rebounding a bit. We've seen manufacturing and non-manufacturing pivot off of bottoms. And we've also seen housing contribute positively to GDP for the first time in about 7 quarters. So those are all quite positive indicators for the economy to continue at trend as opposed to the stalling that we had anticipated back in the earlier part of and late summer.
You know, Rachel, we've seen this rotation from defensive to cyclical sectors, both here in the U.S. and also in international markets. Is this a trend that you expect to continue?
So you're absolutely right. You know, the leaderboard has changed dramatically in the second half of the year from the first half, and you're seeing those bit more value-oriented areas that are also tending to be more cyclical at this point, like financials and industrials, really outpace the earlier winners of staples and utilities. Again, I think there's been a lot of value in looking at those companies relative to the run-ups that you've seen in the more defensive, sectors. So again, you can point to that reversal quite handily. And if you look at the top performers in the S&P year to date, you'll see some of the normal suspects, I would say, Apple, Microsoft, Amazon, but you also see JP Morgan, which is a financial, and based on where financials have traded, based on their historical 5-year averages, it does tell you that cyclicals are taking hold with a better interest rate environment. And cyclicals taking the lead. And again, it's carried over in the movement in the international markets as well. As for the last 3 months, it's been a bit of a stealth rally when you look at what's gone on with the DAX and the Japanese markets, posting even stronger than the 9% gains we've seen here in November.
You know, you mentioned the consumer a moment ago, and when you look at October retail sales, they were up, but mostly because of spending on things like gasoline, and folks really pulled back on spending on some big ticket items. Are you concerned at all that maybe the consumer is starting to lose a little bit of momentum? And if that were to happen, what's that going to mean for the economy in 2020?
Yeah, absolutely, Alexis. I think the consumer has really been the workhorse of the economy for the last several years. And when you look at many data points on the consumer, retail sales being one, consumer confidence being another, they're still at high levels, but they're not as lofty as they were 2, 3, even 4 months ago. So we really need to keenly take a look at what the consumer is doing and how they're spending. There are so many strengths when you look at the consumer, so I don't fear as if they're going off the cliff. You have job growth, wage growth, low inflation, low interest rates, high savings rates. There's a myriad of positives behind the consumer, but they are getting a little fatigued. And you're right, when you look at what they're spending, especially in the October sales report, you're seeing that they're buying one thing at the expense of spending somewhere else. And it is healthy to look at where they are spending. And it's interesting to see that year over year, you're seeing double-digit gains in sales on the internet versus high single-digit declines in brick and mortar retail stores.
Yeah, we're certainly going to get
so
some
I guess
clues.
I
was going to say we're going to get some clues this week. We got Home Depot, Best Buy, Target out with earnings. What are you going to be looking for specifically in those reports, Rachel?
So really same-store sales growth and revenue. Again, looking at what stores and what the trends are as far as what the consumer's doing. It's no I guess I wouldn't be surprised to see those that are more internet focused or perhaps better retailers fare better. But really looking at what does the core basket look like, what is the consumer spending, and how are those same store sales holding up.
All right, Rachel Aiken of Rockland Trust, thanks so much for being with us.
Thank you, Alexis.
And coming up, why some new readings from regional Federal Reserve banks could spell trouble for the U.S. economy. We will explain coming up. Welcome back to The Ticker. I'm Alexis Christoforous. Let's give you a quick recap of the tickers we've covered so far in today's show. Our first ticker was HP. Its board is unanimously rejecting a $33.5 billion takeover offer from Xerox. However, HP is leaving the door open to further negotiations and a new potential bid with the printing technology company. Second was Ford. It's getting some major buzz after officially unveiling the all-electric Mustang Mach-E SUV. It's set to have a starting price of about $44,000, so it won't be cheap, and it's expected to compete directly with Tesla's upcoming Model Y SUV. Our third ticker of the day, Coty. It is taking a 51%, $600 million stake in Kylie Jenner's popular cosmetic startup. This deal values Jenner's company at $1.2 billion, where she will stay the public face of the brand. We are checking the price of oil, as we always do this time of day. Crude oil currently down 1.5%, $56.85 a barrel. This coming as WTI crude hit an 8-week high last week, crossing above that $58 a barrel mark. But it's pulled back amid U.S.-China trade uncertainty and intensifying protests in Hong Kong. Investors are closely watching gross domestic product for the fourth quarter, but so far, two closely watched economic models are forecasting dim news. The New York Fed's Nowcast lowering its forecast for the fourth quarter GDP to just 0.4% growth, and the Atlanta Fed's GDP Now model predicting growth at 0.3%. That's a sharp drop from its 1% forecast just a week ago. Joining us now is Stephen Skanke. He is the Chief Economic Advisor at Keel Point. Good to see you, Stephen.
It's good to be here, Alexis. Thank you.
First off, what are your thoughts on these predictions for GDP? Are they a little too pessimistic?
Well, both the New York and the Atlanta Fed seem a little bit too pessimistic. If you look out what some of the others are saying, I think Goldman Sachs is still forecasting 1.9%. Right. And the Atlanta and New York Fed have a history of underestimating growth, and then we get a positive surprise, which isn't all bad.
Perhaps that's their strategy.
That may be their strategy. It's sort of like over withholding on your income tax return, so you can get a refund when you file.
Do you think that we should believe that the U.S. consumer is going to remain resilient, though, into 2020? Because let's admit it, they've really been the power behind this engine as of late.
You're right. They have been the workhorse. Even when business investment as a component of GDP growth has been negative, it's been the consumer that has carried the weight. In the recent University of Michigan Consumer Sentiment Survey, it was interesting. Although it was up a bit, and it does remain high, not as high as it was, but it was up a bit. But almost spontaneously within the survey process, 25% of the survey respondents indicate about the tariff and trade tensions, which is sort of remarkable that consumers surveyed would be thinking about that, at least to that degree.
Yeah, especially because the tariffs haven't really hit their pocketbooks just quite yet.
Right.
Yeah. President Trump, by the way, tweeted that he's had a, quote, very good and cordial meeting with Fed Chair Jerome Powell. He wrote in part, everything was discussed, including interest rates, negative interest, low inflation, easing, dollar strength, its effect on manufacturing, trade with China, EU, others, etc. They covered a lot of ground, it sounds like, Stephen. Does that sound like a truce to you? Because we know he has publicly lambasted Powell.
Well, I can't imagine that it's a real truce unless Chairman Powell just capitulated and said that he'd do what the president, whatever the president
wanted. Give him negative rates, which is what he keeps saying
exactly.
he wants.
But you know, the president was very much aware of what Chairman Powell said last week when he testified in his semi-annual report to Congress. And he said good things about the U.S. economy and really talked down notions of any further rate cut this year or in the foreseeable future unless there was some dramatic change in economic data, which until now there has not been. So it was a good opportunity for Chairman Powell to tell the president just some basic facts of life, I guess, hopefully in an environment where he was able to listen and hear them.
What are your predictions for economic growth next year?
I think we'll average about 2%.
So that's higher than many are saying.
Yes, I think that if we get a resolution on a trade deal, and if we see a continuation of the quantitative easing in Europe, Japan, China, and so some increase in robustness of the global economy outside the United States, it could be a very nice result for the United States.
So you're pretty confident we're going to get some sort of a meaningful trade deal in the new year?
Yes, it's so important for the president's calculus in having an economy that bodes well for his reelection. And at the end of the day, he's laser focused on that. And so what happens with the stock market and what happens with the economy is very important to him. And I think he gets it, or at least his advisors get it, that the Fed can't engineer that if we continue to have a drag as a result of tariffs and trade uncertainty.
All right, Stephen Stanke, thanks as always. Good to see you.
Thank you. Good to be here.
Coming up next, how Boeing just scored a $1 billion order for the grounded 737 MAX jet. We've got those details for you coming up. Welcome back. Let's get to our next group of tickers. Boeing wins a $1 billion plus order for the grounded 737 MAX jet. T-Mobile CEO announces he's stepping down from the wireless company. And PG&E is warning of a new major wildfire threat endangering Northern California. But first to Boeing. The aerospace company says SunExpress has ordered 10 more 737 MAX 8 jets, a $1.2 billion value. Now, this follows the 32 MAX planes SunExpress already ordered. And Jared is here for more on this one. SunExpress, of course, being a Turkish airline. Does this show, Jared, that the industry is starting to gain confidence in the MAX jet?
Well, I think so, and it shows the importance of these air shows to the company, to Boeing, because this was in Dubai. Looks like they might also get an additional order this week from SpiceJet, which is an Indian carrier. And if we go back to the summer, it was at the Paris Air Show that they first broke their drought, their sales drought, by selling some orders to IAG and British Airways. So yeah, this is important for the company. Stock really not moving off the news today, but I consider this, if we look at a year-to-date chart, just a stock that's been relatively impervious to bad news. The maximum drawdown from about 440 to 320, 27%. Most other companies that suffer this barrage of news, they would have tanked at least 50%, and that's kind of what I expected in the beginning. Nevertheless, we're in a trading range right now, kind of approaching the upper end of it. We'll have to see what happens there. But you also talk about what happened at this air show. It was Airbus that got orders for $30 billion. That dwarfs the $1.2 billion that Boeing got. And Airbus has just really been killing it this year because they've been able to take the place on their A320, which is a competitive narrow-body jet. You can see they're up 60% for the year. Boeing's up 15%, but even 15% is pretty amazing given the news flow.
Yeah, that's really important to show what Airbus is getting in orders versus Boeing. There's a huge difference there. I also just want to quickly mention the FAA now saying it wants to be part of the approval process much earlier when it comes to jets. What's that going to mean for the overall industry?
It's an important step for the customers, I'll say that much. For the industry, maybe costs are going to increase a little bit. I think it's obviously worth it. We need the FAA involved in this process a bit more. They can't rubber stamp things. You can't name planes the same body model as the 737 if it's substantially different. I don't think that mistake is going to be repeated. I'd like to see a little more culpability at the higher levels. In that regard, there was a shareholder lawsuit filed only today in Delaware Chancery Court, which could morph into a class action shareholder lawsuit. Hasn't done it yet, but I see the signs there, and they're going after the board of directors, and we'll have to keep an eye on that one.
Got to wonder what took the FAA so long to come up with this idea. Jared Blickery, thanks so much. Now, our fifth ticker of the day is T-Mobile. The company's CEO, John Legere, will step down on May 1st. T-Mobile's COO, Mike Sievert, will replace him. Dan Howley has got this one today. So, Dan, is Legere stepping down because of the company's merger with Sprint? Is that what's happening?
Yeah, this is something that was in the works for quite a while. It was kind of basically when Legere came in as CEO, he really had his mind just set on a merger between T-Mobile and Sprint, or at one point T-Mobile and AT&T. When that fell through, then he just went whole hog in trying to ruin AT&T as far as his Twitter goes, which he's very active on, and any kind of discussion that he had about the company, which is usually laden with profanities. But yeah, it'll be interesting.
He's an unconventional CEO, to say the very least.
Unconventional, yeah. He always wore magenta, still wears magenta clothes. His shoes are magenta. I mean, he put out a magenta cookbook that had to do with the Super Bowl and T-Mobile. So he's really, outside of his character.
And eccentricities.
He did do a good job with T-Mobile and made some big changes in the wireless industry, kind of dragging our parent company Verizon, AT&T, and Sprint along the way, because when he came in, he basically said, look, you're going to be able to take your phone wherever you want. That was something that we couldn't do previously. He said we're going to reintroduce unlimited plans, which were killed with 4G.
That's right.
Came out. Those came back. Then people started moving over to T-Mobile, and the other carriers said, well, looks like we're going to have to play ball as well. So that's why we have things like good international plans now, or decent international plans. It used to be just you would pay an exorbitant fee to go overseas with your own phone. Now you can do that. You can cross the Canadian or Mexican border and not immediately shut off your data. That's something that Legere did. And so it really is kind of a letdown that he's leaving, but it is something that was already in the works.
Yeah, he leaves quite the legacy. But any word on what he's going to do next? Because we know WeWork was pursuing Legere to become CEO of that troubled company.
Yeah, and I mean, he did a big turnaround with T-Mobile, obviously. But I don't think he wants that kind of project, probably. It would make sense because SoftBank, obviously a huge investor in Sprint. They obviously
so they know him. He's a known entity to SoftBank. But I'm with you. I don't know if he wants that. What really could be quite a headache for him.
I don't think anyone wants that.
All right, but we'll be following his Twitter.
Yes.
All right, Dan Howley, thank you.
Thank you.
The sixth ticker of the day is PG&E, the utility company warning that 250,000 customers may be impacted by a public safety power shutoff this week, as winds are expected to pick up Wednesday. This comes after PG&E cut power to nearly 800,000 in Northern California just last month to lower the wildfire risk. Inez Ferre is back with us for this one. So Inez, how effective are these power shutoffs for residents and for the company?
Yeah, it depends who you ask. They certainly have gotten a lot of criticism last month when they had all those shutoffs, where people said that they were just too broad, they were poorly executed. CEO Bill Johnson, though, has said that they were necessary, that they were well planned and executed, that it was the right call for safety and preventative as far as a risk of a fire. And he did say that they do welcome, though, a review of this. And in fact, today he was testifying before state lawmakers in Sacramento about the shutoffs. But overall, this company is just under so much pressure. The stock has been under so much pressure year to date. It's down more than around 70%. They are under a deadline for that restructuring plan for June 30th of 2020. They have to come up with a restructuring plan. They have to get commitments from investors, and also California's Governor Gavin Newsom has threatened that the government would take over PG&E if they don't come up with a viable restructuring plan. Alexis.
Yeah, because I was going to say this cannot be the long-term solution, which is continually having these rolling blackouts for people, right? Does PG&E say what the grander plan might look like going forward?
Well, right now they're talking about this restructuring plan that they're trying to get commitments for. And in fact, there was a report that they have about $7.4 billion in commitments from investors for this plan. And they're planning to raise another $4.6 billion by December 6th. But look, in October, the stock was under so much pressure during these shutoffs, and also you had a recent call from an analyst from Citi where it was such a bearish note, basically saying that there's a 75% chance that this stock will go to zero and a 25% chance that this stock would go up to about $20 a share. The last time that it was at that level was around May and June of this year.
Wow. All right. Quite a stunning fall for PG&E's shareholders. Inez Ferre, thanks so much.
Thank you.
Coming up, why value stocks are suddenly back in style. Details on a new report coming up next. Value stocks are back, but how long they'll last is still unclear. Renewed interest has pushed the S&P Value Index up 12% in the last 3 months, with the spurt in gains lifting the index's performance ahead of the S&P 500 Growth Index. That puts it on pace for its strongest year since 2013, according to data from FactSet. Joining us now is Anthony Soccaro, Chief Financial President at Providence Financial. Good to have you. Thanks so much for joining us. So where do things sit on value right now? Do you think investors are going to continue their love affair with these stocks?
I think they will for the time being. Value stocks tend to be a little riskier than growth stocks, and yet right now it's risk on. We see the S&P 500 growing at record levels again, along with the Dow. And it's a good time, I think, for value investors to get into value stocks. There's been such a wide disparity of growth to value. That spread in there has just gotten bigger and bigger over the last decade of this bull run. And with people feeling like tension with China is settling down a little bit, with the consumer confidence levels at as high as they are, and really with no other place to go with the global recession happening, I think it's going to be a shift that's going to continue through at least the presidential election year.
Really? All right. So is another reason because the Fed has also been very kind to the markets and lowering interest rates? Is that another reason to get into value?
Oh, that's a huge reason to get into value. When you look at a lot of the value stocks, most of them, if not all of them, are paying much higher dividends than the 10-year Treasury. I think that sits at 1.8, and you probably get another 50%, and in some situations even double that with regards to the value play. So individuals that are looking for income really got helped by the Federal Reserve's lowering interest rates over the last three times now this year so far. And when I say got helped, what I mean is that it helped push those individuals from fixed income that have now gone down a little bit to more of the value stock play where the dividends are higher. So it pushed them over the edge.
Are we seeing value stocks getting gobbled up not only in the U.S., but in markets outside the domestic market as well?
Yeah, a lot of professional money managers and the institutional managers are, in fact, buying the value stocks as well, too. That's part of the rotation that's been going on for the last 4 to 5 months or so. Again, because when you look at Europe, when you look at Germany, when you look at Australia even, the entire world is slowing down globally. And where else do they go? So value stocks is because that differential, that spread is so wide, because the yields are so high, because the Treasury is so low, it's pushed investors into, even institutional investors, into those more aggressive stocks for yield. The concern that I could have, Alexis, is what happens if something happens next year? What happens if sentiment changes all of a sudden? Consumer sentiment has been driving this whole thing, but I look at that as a lagging indicator. Things go bad first, and then consumers quit spending money. And if that happens, then value stocks could have a problem as well. So you still have to be careful.
Right. Very good point. Because investors are feeling good, they're willing to take on a little more risk. But if something like the trade war doesn't go in our direction, that could definitely change investor sentiment. So to your mind, what is the best sort of match right now? I mean, you should have some value, but also offset that with defense, growth. What else should be in that portfolio of equities?
Yeah, so I think it really depends on the stage of life that you're in. Of course, if you're younger, meaning under 50, you can afford to take more risk. I think having some value in there and some growth still makes sense. I wouldn't recommend you go all growth or all value. I think having a diversified mixture, I think even having some emerging markets in there probably makes sense as well, too. But I also would not discount fixed income. A lot of analysts out there have poo-pooed fixed income. And if you're a little bit older, 50 plus, the reason they call it fixed income is because you can count on the income. I think that's also a good way to go for a good chunk of your portfolio as well.
Yeah, do not poo-poo the fixed income. I like it. Anthony Soccaro, thanks so much for being with us.
Thank you, Alexis. Great to be here.
Coming up, why Dunkin' Donuts famed Double Cup will soon be no more in New England. Stay with us. Let's give you a quick recap of the tickers we've covered in the show today. Our first ticker was HP. Its board is unanimously rejecting a $33.5 billion takeover offer from Xerox, claiming the bid significantly undervalues the company. But HP is also indicating it's open to negotiations on a new offer from Xerox. Second was Ford. It officially unveiled its all-electric Mustang Mach-E SUV. Its starting price will come in at around $44,000. It's expected to become a rival to Tesla's upcoming Model Y SUV. And our third ticker, Coty. The beauty giant is buying a 51%, $600 million controlling stake in Kylie Jenner's cosmetics startup. That deal values the company at $1.2 billion, and Jenner will remain the public face of the brand. All right, it is our last tick of the day. It is Dunkin' Brands. Get this, the double cup, that's a foam cup used as a sleeve around a plastic cold drink cup, is over. Dunkin' executives in New England say the move is more environmentally friendly. I'd say so. Yahoo Finance's Jared Blickery, along with Dan Howley and Inez Ferre, all back to weigh in on this very important issue. Jared, I'm going to start with you. This campaign only targets Massachusetts and Rhode Island, at least for now, according to the Associated Press. Will we see this expand nationally?
Yes, and I'm surprised this ship hasn't sailed a long time ago. I haven't seen a styrofoam cup in a long time. I'm old enough to remember the DLT at McDonald's, which kept the hot side hot and the cold side cold. It was a massive styrofoam container, but McDonald's got out of that game a long time ago. Apparently New England, the heaviest users, so they're starting with them first.
All right, on what it is with the New Englanders, but they need that double cup. Dan? By December 1st, just a couple weeks away, all Dunkin' chains in the area will use paper cups. Do you think customers are going to appreciate that? This is eco-friendly, by the way.
Yeah, I mean, people just want their coffee. They'll drink it out of like a dog dish if they have to. They want, yeah. So just give them their coffee. As for this double cup thing, oh my God, who were these people doing this? Why did Dunkin' Donuts allow this to happen? I mean, we're talking about the environment all the time, but then you're taking a plastic cup and putting it into a styrofoam cup. That just boggles my mind.
I don't know, us here in New York, we don't really do this, so I'm not getting it, but maybe I was missing out. I don't know. But Inez, do companies, I mean, come on, they have a responsibility, companies like Dunkin' and McDonald's, to make products that are better for the environment, right?
Of course, definitely. And styrofoam, please, that's so 1999. This is something that should have been done a long time ago, and it's definitely something that should be nationwide as well. I'm surprised they haven't done it till now.
All right, sorry, New Englanders, but say bye-bye to the double cup. We're not really going to miss it here since we didn't really do that. All right, let's go beyond the ticker now to TikTok. China's first social media company to be used broadly in the United States wants to shed its label as a Chinese brand. This is according to the Wall Street Journal. Platform execs reportedly say the brand's association with China may hinder its growth abroad. And as I'm going to put this one back on you, are they onto something here? Could the association with China actually be bad news for TikTok?
Yeah, I mean, look, during these times when there's so much U.S.-China tension going on, definitely it's something that TikTok needs the U.S. in order to keep growing, and it's a market that they definitely want to keep growing in. And so you have the possibility of lawmaker scrutiny later on, and this is something that just optically, because of this U.S.-China tensions that's going on right now, the association with China could be a bit of a headwind for them.
Dan, why has TikTok been facing scrutiny from U.S. lawmakers?
There's multiple reasons. Obviously, anytime there's a company in China that may or may not be capturing users' information from the U.S., bringing it back to China, that's an issue lawmakers are going to take a look at. There's also the idea that this might be something that kind of censors U.S. speech in the U.S. TikTok has said they haven't, but that's an issue that lawmakers want to look at.
And Jared, why does TikTok resonate so much with Americans better than other Chinese-based platforms?
Well, they rebranded as American, and I don't think their target demographic is Gen Zers. I don't think they know. Maybe they wouldn't care. But this is a company that has ties to the communist government because they are a Chinese company. It's difficult for me to imagine this just blowing over in the current environment.
Yeah, I know my kids don't know if it's a Chinese-based company, and you're right. I don't really think they care. Jared, Dan, Inez, thanks so much for being with us, everyone. Right now, the market's still holding on to some gains. The Dow back above 28,000. The broader market higher with the S&P up 2. The NASDAQ gaining 15 points. Stay with YahooFinance.com. We have got the final round here to wrap it all up for you. Coming up next.
I'm Jen Rogers in New York, and this is the final round. Stocks fighting for new highs here as trade deal pessimism grows. We're going to have more on the markets coming up. Plus, John Legere exits. T-Mobile is troubled WeWork. Next, we discuss. And Piper's latest team survey is out. Why they want AirPods, Nike sneakers, and Louis Vuitton. It's our call of the day. Plus, the Mustang Mach-E is here. Will Mustang fans rush to showrooms to buy an all-electric SUV? With me now, Yahoo Finance's host of Wi-Fi AM, Dan Roberts, to talk about all of today's market action.
What action?
Whoa, Dan, you're in a tough spot today because not a lot going on. We've got some choppy trading on Wall Street. Investors digesting a report that Chinese officials are pessimistic about the prospect of a U.S.-China trade deal. The negative sentiment around trade seems to be capping the gains in stocks, to say the least right now. All three major indexes, though, are looking at record closes. So at least you can take that and hang your hat on it there.
Well, and it's hard, Jen, to think that actually the pessimism around trade matters that much, because if people were really concerned, you would think stocks would be down. And I remember it wasn't so long ago when every little thing we'd hear about, some quote would come out of, say, Robert Lighthizer, say, oh, we're farther apart on a deal than many people realize, and enough stocks go down. And now I see less of that movement day to day. So I feel like trade is actually becoming less of an overhang. Now, of course, if the phase one deal, the elusive phase one deal were finally signed, I assume we'd be off to the races and you'd see a big bump. But even on days when we hear something not so encouraging, I don't see that much movement. And that's a good thing, right? I mean, it's encouraging if stocks are moving because of actual fundamentals like earnings.
It takes a little while for the markets to digest news. So when we had sort of this idea that there was, headline risk on trade this morning, we were in the red. And then kind of work your way through this little bad mood, and now you're back here. But it's a tight trading range no matter what. The narrative continues. A lot coming out this weekend on the idea that value is back. The rotation is happening. That, we're now getting into 2020. We're going to be hearing from Emily McCormick later. People are pretty optimistic. Even if we're not seeing, 200-point gains again in the Dow, we're still above 28,000. It's not a bad day.
Well, and we're about to get the holiday shopping season. Every expert who rolls in here will tell you that it's going to be really important, a crucial holiday season in terms of measuring how good people feel. And you're right, indications look like they feel pretty good. We'll talk later in the show about that holiday wish list for Gen Zers. I have real skepticism that young people want Louis Vuitton, but whatever, fine. We'll talk about the survey later on. But just one more interesting note of the markets. You and I love to look at the recent tech unicorns and the hot names. Some of those continuing to cool, but some getting a little bit of a bounce. Peloton actually up today.
Peloton's up almost 9% today.
Sure. No, it had a lot of room to come back. But on the other hand, Chewy, down for the first time, I think either near or below the IPO level, the IPO price. So what happened to the high-flying Chewy?
Chewy right now is down 6%. Looking at some of the other IPOs from this year, Real, which we've been watching, is down some 3%. Smile Direct, we just had financial results from Smile Direct as well. We've had some Wall Street notes coming out on it. It's down 5%. Here, Work, that's the ticker for Slack having an up day as well, and Lyft, a little bit of news I know we're going to be talking about with you, getting into business with a competitor. And
former
Lyft
competitor,
is up 4.5%. So
Slack up 2.3%.
There you go. I mean,
finally, some of these names behaving based on news about the name itself, not just reacting to the larger overall narrative, which is good.
PagerDuty up 4% as well. For more on today's market action, let's go to Scott Gamm on the floor of the New York Stock Exchange to see what he's watching down there. Scott, last time I saw you had on a hat that said 28,000. That's just a one time that you do that. Now, no more hats.
Yeah. Well, I mean, I took it home, so it's very important to me. So I don't have it with me right now, otherwise I probably would be wearing it. But Jen, to your point, we are seeing a halo effect from the excitement we saw in those final seconds of Friday's trading session when we hit 28,000 at about 359.58 on Friday, and now we're nicely above 28,000, largely driven by the gains we're seeing in Disney. Now, traders here are really impressed with the tape that we've been seeing over the past couple of weeks, because think about it, the market first eclipsed that late July record high about 3 weeks ago, so we've been in this record pattern for almost a month now. When you look at the last couple of times the market hit record highs in late July and then again in late April, those high levels only held for a few days, and here we are now with these levels holding for a few weeks. So that is positive according to the traders down here. They think that's a constructive move. Now, I feel like a broken record, but we're seeing continued strength in Apple shares once again today. The stock is up about 1%, moving further above that $267 level. There was a report in Bloomberg today saying that Apple sold 11 million iPhones in China in September and October, and some might find that surprising, just given the trade tensions between the two nations. Some thought that maybe consumers in China would not buy iPhones and instead buy, phones that are more, localized to China and not buy American products. But that clearly is not the case, at least according to this data, and we know just how much revenue Apple gets from China. So when folks were worried about Apple in China earlier this year, those worries seem to have faded, at least for right now, guys.
Scott Gam, live from the floor of the New York Stock Exchange. Be back with you soon. T-Mobile CEO John Legend.
Really? He wishes.
I know.
No, John Ledger wishes he were John Legend.
I know. I just read this tweet in my head. Somebody just tweeted at Christy.
They've both been in the news recently.
They just tweeted at Christy Teigen about doing something with John
God.
Ledger. Anyhow, he remains at the center of WeWork's executive drama. T-Mobile announcing that Ledger is going to be stepping down. He's been the CEO since 2012. He's going to be replaced by T-Mobile's president and COO Mike Sievert next year. Reports swirled last week that Ledger was going to possibly join WeWork.
Ugh.
I mean, someone's got to take the job.
Right.
So he could be going there as
someone
a
took
CEO.
the Wells Fargo job, after
it
all.
took a while. Of course, WeWork CEO Adam Neumann out in September. This is also on the tail of a New York Times report that WeWork could trim at least 4,000 employees
And that's
in order
almost
to
half
stay afloat.
the workforce, by the way. They have 12,000 employees. Yeah, it's interesting. I'm not ready to 100% cast off the reports that Ledger is talking to WeWork.
Mm-hmm.
And here's why. When that report came out, WeWork didn't say, this is completely untrue, wrong. They came out and started sending a statement to reporters that said something like, the Bloomberg story on this is more accurate than the Wall Street Journal story, pushing reporters to a story that said he's one of many executives that we are talking to. So confirming that, at the very least, talks were held. They had called John Ledger. They said, we're interested in you. John Ledger talked to them. Then the final conclusion, it's not going to be John Ledger. I don't know about 100% certainty. And by the way, the timing is good because now he's freed up.
Now he is freed up.
And he's a wacky, wild,
that's where I
loony, loves to tweet. By the way, I look forward to not seeing the promoted tweets anymore, I hope.
He's
those incessant John Ledger tweets.
Funny on Twitter. He is a little out there.
He's out there.
Is that
Maybe he works for WeWork.
Is that what WeWork needs? I think that is part of the calculus here of what WeWork needs, because they're going to need to figure out somebody to turn the ship around. And besides, what does this mean for the T-Mobile Sprint deal going forward?
And they kept saying that John Ledger would run the combined company.
This is another huge job.
Yep.
I feel like, is it bad for either, those names, assuming they get together? Don't you want him in charge?
Well, for T-Mobile, it's okay to have an internal person come up and take the reins. Someone who knows the company, that makes sense. For WeWork, it has to be an outside operator. So let's look at Uber as an example, okay? Uber had the years, now forgotten by many, not forgotten by us in the press. For a while, the whole story was Travis Kalanick. It was Travis's company. Travis was the face of it. Then there was Gaff after this, after that. He said this inappropriate comment. Then there were the accidents that happened, and he yelled at a driver, remember? And was videoed doing it. All that happened. So they push Travis out. They bring in Dara Khosrowshahi. Not necessarily a known name, but a proven operator with previous experience. And he comes in, and even though Uber certainly still has its problems, just today I was writing about the ride-sharing space. Uber and Lyft still have a lot of regulatory issues. But generally, the temperature I get, now granted, just a week ago he committed a gaffe and said a very bad thing about Khashoggi and called it a mistake. Mistake was a murder. But before that, I think the general temperature was that Dara Khosrowshahi has done a very good job, and that was a great new hire, and that he successfully has changed the culture and is helping to turn Uber around. Hence, WeWork needs to bring in someone who is seen as a serious operator. So now, John Legere, it's so funny how people struggle. Now you've got me struggling. And a lot of people think it's Legere, but he tweeted in 2014 and said it's Ledger like Ledger.
No, like AT&T. Like AT&T is about to go over a
exactly
ledge.
right,
There
exactly
you go.
right. And then I
Instead
said...
of Adam Newman and John Legere, it's John Legend and John Legere.
It needs to be, probably John Legere is a little too much on the kooky, zany side, although that said, to his credit, he's been a very good CEO of T-Mobile. But they need someone who has a reputation, is known, has a following, is respected, and is seen as a serious person who can come into WeWork and say, let's get serious. We're going to cut these costs. We're going to shed these stupid businesses. We're going to fix the culture where reportedly people, there's been all kinds of zany stuff about, I've got to be careful which things I say, which things were published and which things I've just heard, but allegedly, but all kinds of problems with WeWork, many of them caused by Adam Newman. So they're going to get a new CEO. I mean, the company's not about to go out of business, but it is certainly at risk, and they need to get someone who is a serious, proven operator, a COO type.
Not John Legend, but John Legere, and he is available.
If the sexiest man alive took over WeWork, maybe things would turn around.
We would definitely have a story then. Coming up, stock movers. But first, let's take a look at where European markets closed today. Now let's take a look at some stocks on the move today. Biomed, as the medical device maker, presented data at the American Heart Association annual conference that its heart pump showed higher mortality risk, selling off today. TripAdvisor, as Cowen upgraded the travel site to market perform and raised its price target to $39, citing valuation. And check out Lyft. Shares on watch here as ride-hailing firm Get closed its New York business, Juno. Get also said it is now in a strategic partnership with Lyft to allow Get's corporate clients to access Lyft rides in the U.S. starting next year. Dan, you've been writing about this. I know you use Juno.
Yeah, I'm sad.
Like I did
I liked,
myself. I mean,
yeah.
I go kind of wherever it's cheapest, but I did
No
use
loyalty in
Juno
ride
as
sharing.
well. What does this mean for the whole hailing industry. Is this a consolidation that people have been waiting for?
I think it's a consolidation. I don't know if people have been waiting for it, because I think the more apps, the more choice you have. So some would say it's a negative, but for the businesses, it makes sense. I mean, we're seeing a duopoly emerge. Our colleague, your co-host Miles Udland, just wrote about this recently. I think it was this week or last week in the Morning Brief newsletter that we send out. He was saying, so many businesses, when you look around, are duopolies now, and arguing that eventually food delivery apps will go the same way. And right now in food delivery apps, there's so many competitors, it's so crowded. The same thing is happening with e-scooters. Now, coincidentally, we showed how Lyft stock is up today. I don't know that you can just attribute it to the Get news. It might be also that Lyft announced it is pulling its e-scooters from 7 different cities, focusing instead on markets that need it better. So, another business that is so crowded. I mean, on a corner in Nashville or Denver, there's Bird, Jump, Lime, Lyft, Duck, Dodge, Dive, Dodgeball. So Lyft is pulling those. But yeah, I think in ride sharing, you're going to see it become just 1 and 2, because it's hard enough for Lyft and Uber to become profitable. They're not. So for any of the smaller players, it's almost impossible. And the new regulations have made it even harder. So Get, which bought Juno 2 years ago, quickly pivoted to really being a B2B thing. It's really only for corporate clients. Verizon would order you a ride, a corporate service.
I use it.
Sure.
Like a regular person,
Not
too.
Get. You haven't been able to in 2 years.
Juno.
Instead, Juno was its only consumer-facing app. Now it's shutting down Juno. I liked Juno. I always found it was a little bit cheaper. But in its press release announcing the news, it basically frames this as, it didn't make sense for us to own Juno anymore because we're focusing on B2B, being a corporate, corporate client company. But also, they say it's about profitability. They say, Juno wasn't going to be profitable this way. We believe without Juno, we expect to achieve profitability by December, not December 2020, next month. But it's also about something else here, which is New York City regulation. And the press release ends with a sort of, jab at New York City regulation, something like these draconian new regulations. And of course, they're talking about a number of things New York has done to crack down on Uber and Lyft. But some people say, well, those are to protect drivers. And a lot of people say, bravo, New York. I mean, forcing the companies to recognize drivers as employees, capping the the amount of time a driver can spend in the most congested part of New York to ease up traffic in New York and to make it more competitive. And so it depends whom you ask, I mean, consumers liked Juno. As I said, it was always a little bit cheaper.
So did drivers, because they have a much lower take rate than Uber or Lyft.
But also when Juno launched, it framed itself as the one ride-sharing app that gives drivers equity in the company.
Yes.
People said, wow, but then when it sold to Get, they went, actually, we don't think we can give you RSUs. So instead, they gave every driver like $100.
Yep. Lyft and Juno were also, had come together to sue New York City as part of the new regulations. And now I went to go to my Juno app, and it pushed me right to Lyft. It said 6 p.m.
Wait, it's doing it's doing rides till 6 p.m. Yeah. Maybe we'll ride home in a Juno. That's it.
That'll be it.
Sad. It was the number 3 biggest in New York by market share. Goodbye.
End of an era. Coming up, Piper's latest teen survey is out. They want AirPods, Nike sneakers, and apparently Louis Vuitton. What? It's our call of the day. Right now, take a look at where the retail names are trading. It's time now for our call of the day, and today it's all about the holidays. Piper Jaffray releasing its latest holiday survey. Upper income teenagers who responded crowned Apple as their top brand and ranked the company's AirPods as their most desired product. Coming in second and third, respectively, are Nike and Louis Vuitton, followed by Gucci. Who are these teenagers? People are crazy. And Lululemon and Adidas. Let's just start.
I don't think so,
okay,
man.
Before we get to the craziness of who these teenagers are that want Louis Vuitton and Gucci, let's deal with Apple because that's a huge ticker.
And that I believe.
Okay, so, but what's interesting in there is that it wasn't about the new phones. And they're usually, I don't know, there's a new phone coming out.
Well, a phone's a big
in the
gift.
fall, and
Phone's a
people
big
want
gift.
it. They all want these AirPods.
I mean,
Is that
well,
enough?
also, Mom, I want a new phone. That's $1,000. AirPods, what is that, $100? I don't know.
So the kids are
because
smart.
Personally, I am not an AirPods fan, but I am willing to acknowledge how popular they've been and how quickly they've grown for Apple. I really resent and dislike the removal of the original headphone jack and the forcing us to AirPods.
You're still on that.
Yes, yes. I also think that they look silly, but this is Miles Edlund's most hated rant of mine because he says, stop saying it,
He's not
it's
here.
over, we've all moved on, and everyone loves the AirPods, and you are proven wrong. I think I can still have my opinion, but he's right. Most people seem to like them. I think they look ridiculous. They look like earrings, but whatever. I know that the quality's good. I know that people like that the little holster has charging.
But what about the fact that the teens like it? Isn't this
that's
a
what I was
big
about to say.
deal?
I think Apple's brand is as strong as ever, and that is amazing. I mean, I remember back in my days at Fortune magazine, every year we did the world's most admired brands. And it was always Apple, Nike, McDonald's was up there, and it was a global survey.
Sure.
And years later, even with the hemming and hawing over China and iPhone sales and concerns, and goodbye, you know, we said goodbye to Steve Jobs. Now it's Tim Cook, the Tim Cook era. Johnny Ive is gone. Still, Apple is a brand that people of all ages all over the world admire. They think Apple means quality.
So if these kids are fine, they've realized I shouldn't ask for a $1,000 phone, but I should go
If they're
for
smart.
the $200 AirPods. Why are they putting Louis Vuitton
Right. It
and
doesn't make much
Gucci
sense.
in their list? Were you surprised that
Yes.
today's teens, even if it is an upper income teen, that today's teens have these sort of luxe tastes?
I'm not even sure that I believe it. And let's always encourage viewers to take any survey, report, poll with a grain of salt. I mean, hello, election. But yeah, I'm willing to believe that kids want Nike kicks. They want Adidas kicks. Do they want Louis V? Are real normal kids asking for Louis Vuitton stuff?
Is this
Gucci
aspirational?
stuff? Now, Lululemon I'll also buy, and I feel like Lulu lies somewhere in between that. That's somewhere above just Nike, Apple. It's sort of luxe. It has a feel to it. You know, it has a premium. It's a premium brand. By the way, you don't see Under Armour on that list.
No, you do not.
But yeah, the Gucci stuff, come on, man. I will say, this is yet another survey that reminds us, no one cares about millennials anymore. Millennials are old news. It's all about the Gen Zers who were born between 1995 and 2010.
That's it.
Some of these kids are kids. I mean, 2010, so they're 8.
Yeah, and that's true. But you could be born in 1995. Maybe those
Right.
are the ones that like the
And they're
expensive
starting to
stuff,
get
the
spending
older
power.
teens.
You know, they have expendable income, or if not income, they have allowance.
Yeah. If anyone hands me a Christmas list that has Gucci or Louis Vuitton on it, I'm gonna rip it.
Listen up, Gen's kids.
Coming up, the Mustang Mach-E is here. Will Mustang fans go for an all-electric SUV? We discuss that and why Ford had a lot to learn from Tesla. Right now, take a look at where the automakers are trading. Ford's new Mustang Mach-E is hitting the roads in 2020, but the reservation website is now live. The Mach-E is the automaker's latest foray into the electric space, this being their first all-electric SUV. Ford's president, Joe Hinrichs, joined Wi-Fi AM this morning and was asked if he thought Mustang's brand would be diluted by the fact that it is an SUV. Here's what he had to say.
I drove it about a week and a half ago. You can tell it has the soul of a Mustang. It may not sound like a throaty exhaust like a Mustang Coupe does, but we're going to keep building those vehicles, love those vehicles, including the Shelby versions and all limited edition versions of those. But it's time to expand and bring battery electric into the Mustang portfolio.
Only one man can explain throaty exhaust. Yahoo Finance's Rick Newman.
I'm all over
is
it.
here. What is he talking about?
It pisses off your neighbors and makes you feel like a badass when it goes when you're going down the street.
This new one's going to do that?
No, it's not. It's because it's electric. Electric cars are almost silent. There's nothing coming out of a tailpipe, which is what produces that rumble that the Mustang and other muscle cars are known for. I'm trying to think. There is no tailpipe because there are no emissions on an electric car. I think it's only got 2 speeds, so there's no shifting of gears. I mean, people who drive an electric car for the first time can't believe how quiet it is.
Love the silence of sitting in the cabin of a Tesla. But Rick, you can still talk about, since it's a Mustang, the pickup, right? And we did this interview on Wi-Fi AM this morning with Joe Hinrichs, and he was saying, it goes 0 to 60 in whatever, some short amount of time.
Yeah.
So, and that was funny to me because to hear, I mean, now we're finally seeing the convergence where you could be a muscle car type person or a person who wants to go fast in a fast, sexy, sports car and still also want an EV. And of course, that's who Tesla's trying to reach. But that wasn't the case in the past, I feel like. So now we're seeing EVs for all types.
Yeah, so what's really new here with what Ford is doing, they have been building electrified vehicles for at least 15 years. And electrified means they've had hybrids, which have an electric motor, which is the basis for what we're seeing in some of these other vehicles, but that works in concert with a gas engine. It sort of assists the gas engine, so you get much higher mileage. That's what the Prius was. And the Detroit automakers have been dabbling with electric cars that are basically economy cars or efficiency plays. So they're not creating these powerhouse vehicles and bragging about how fast they are the way Tesla has done. So I think this is where Tesla has really moved the needle, is demonstrating to the established car companies, make these things fun, man. Don't roll them out and say, talk so much about the emissions you're going to save and you're never going to have to go to a gas station again and you just plug in at home and stuff like that. Make them fun. And that's what Ford is now doing with this vehicle. And there's a lot of competition now. So Ford's not the only one rolling out these what are basically expensive performance versions of electric vehicles.
Could this car exist without Tesla and Elon? I mean, there's a lot of talk about, the big screen and there are similarities in the way it looks. I mean, how much
they're copying a lot from Tesla. So the performance, make it a performance car, first of all. That giant screen in the middle, that's from Tesla. Take reservations on the website with a down payment for a little bit of cash flow, that's from Tesla. Over-the-air updates, that's from Tesla. So the question, there are many other automakers that have had electric technology. Tesla did not invent electric cars, but they produced cool electric cars that nobody else was of a type nobody else was making. They made them hot. And I think without Tesla or another company like it, we might have gotten to this point a lot later, because what the traditional automakers would have done is keep rolling out, the sort of a glorified Prius. It's an electric car, but it's just going to get better mileage. You're going to be super efficient with the low resistance tires. It's going to look dorky, but you're going to start to get the equivalent of 75 gallons per hour, 80 gallons, 100, and so forth. Tesla is what brought these kind of badass electric cars where they're talking about how fast it can go. And there are advantages of electric cars for performance and for torque. And that's what Tesla has done. And they got a lot of copycats now.
I think it's exciting that it's a Mustang.
Me too. I think it's
well, you asked the right question this morning, which is this going to somehow tarnish the Mustang's name? And for sure, there are these Mustang purists now who are saying, how dare they? They cannot put an electric car in the Mustang lineup. And I think at the end of the day, it just depends on whether the car is a hit or not. If the car is a hit, it's great. It doesn't matter. Welcome to the Mustang family. If it's a flop, get the hell out of here.
I should say that was Pras's question, actually. Pras's
that's right, you're right.
But my question is, when will there be more of the charging stations all over the country? Because I'm someone who's interested in an EV, but I just don't, I'm too afraid of getting caught somewhere in Vermont and my car isn't charged and there's no charging stations.
That's a problem if you only have one car. That's the problem because you need it for road trips, and then you have to deal with that. If you have two cars, it's getting easier to have one of them being electric, and many families have two cars.
Can't wait till you get in one and we get the review. Rick Newman.
Can't wait either.
Have a good evening. Coming up, Google's big video game streaming play is here. Will Stadia get gamers to ditch the console for the cloud? We're back right after this. I'm Jen Rogers in New York, and this is the final round. Stocks fighting for new highs here as trade war deal pessimism grows. We're going to have more on the markets coming up. Plus, Piper's latest teen survey is out. Teens are all about AirPods, Nike sneakers, and Louis Vuitton. It is our call of the day. And Wall Street soothsayers are out in full force. What are they divining for stocks in 2020? We discuss. Plus, JP Morgan Asset Management's top strategist on why the Phase 1 trade deal is going nowhere fast and what he's advising clients to do right now. With me right now is Yahoo Finance's host of Wi-Fi AM, Dan Roberts. We are on record watch here with less than 30 minutes of trading left to go. S&P here, not at a record. You know how we know? Yeah, that red arrow.
No new hat yet.
But holding on to Dow, 28,000 for more on today's market action. Let's go to Scott Gamm on the floor of the New York Stock Exchange. Scott, just checking out the sectors. I mean, really not a ton of movement except in XLE. Energy, a biggest decliner today, almost off 1.5%. But you're still holding on to a green arrow there on the Dow. What's going on?
Well, that's right, Jen. And just to your point on energy, we are seeing oil prices, at least for West Texas Intermediate, down about 2% today, below $57 a barrel. So kind of back in that narrow trading range that oil has been in really for 2 months now. When it comes to the Dow, we are seeing a nice gain of 19 points. As long as we close positive, that will be another record high for the Dow. And the gains right now are really being led by Disney, up another 2% today. The stock is back near the highs of last week when Disney Plus was released, and there was a lot of optimism surrounding, just how many subscribers Disney Plus saw in those initial days. It really beat what Wall Street was expecting. Now, the stock has also wiped away a lot of the gains, or excuse me, a lot of the losses that the stock suffered in August and September after that disappointing earnings report from early August. So clearly investors have forgotten about that. Now, outside of the Dow, we are keeping an eye on shares of Coty, up about 3% right now. This is not a Dow stock, but it is one of the best performing stocks in the S&P 500. The company is buying a 51% stake in Kylie Jenner's cosmetics startup, Kylie Cosmetics. This is going to be a $600 million stake, valuing the company at $1.2 billion. And it was only started in 2015. Kylie Cosmetics is already on track to do $200 million in sales in this year alone. So clearly this shows the power of social media and e-commerce, which Kylie Jenner has really been able to do better than anyone. Now, we should point out that Coty is up 86% so far this year, just in terms of the stock performance. I mean, it's only trading a little bit over $12 a share. Now, over the past 5 years, if you back up, Coty is down 35%. So you could argue this is a company in need of something to revive itself and its lineup. Certainly they're hoping that Kylie Cosmetics is the answer there, guys.
Scott Gann, we'll talk with you after the bell. Fascinating story. With
Lip kits.
Kylie. Lip kits. First of all, when she came out and the big story, she's worth $1 billion.
Yeah, it was Forbes cover and people were angry.
I said, this is baloney. She's not really worth $1 billion. Well, you know what?
This
If things now it confirms.
If $600 million is a majority stake, assume that it's 51%.
It's 51%.
Well,
so
there
she
you go.
really created a company that is a unicorn.
And by the way, it was never
worth over $1 billion.
And it was always silly to debate and argue and pick apart. Well, is it really $1 billion? Did they inflate it a little to get her on the cover?
Though.
I'm sure they did inflate it a little to get her on the cover, but she still is a very impressive marketer. I think if you're trying to discount these people and say, you know, that people said the second half of the controversy was she's not self-made.
Right.
She's not a self-made billionaire. All right, well, a lot of the billionaires had a famous person, parent, or some mentor who helped them some leg up. She's impressive.
It just confirms something is worth what people will pay for it. And now they have paid for it. And now she really is.
Sure.
She really has created this endeavor that is worth over $1 billion. Time now for Tech Howl. Google Stadia has officially launched today. The cloud-based gaming service has 22 games for its players to stream. But can Stadia and your Wi-Fi operate at a usable pace? Yahoo Finance's Dan Howley is here. So Dan, I think first of all, we just need to clear up exactly what Stadia is and does, because there's so many. We've got Arcade coming from Apple, and there's different PlayStation endeavors. What is it?
So the widely used way to describe this is the Netflix for games. It is not the Netflix for games. It gives you the ability to play games on virtually any device. For now, it's limited to Google's Pixel phones and Chrome OS tablets, laptops, any laptop, desktop, Chromebook. You could take like your old piece of garbage laptop that you threw up in your closet and start playing games that would require a $2,000 desktop to play, that really require a lot of oomph, or a $200 console or $300 console.
You can do that. Computing power is coming from the cloud.
It's all in the cloud.
Wow.
So Google is doing all of the processing, and you're streaming it. That's where the kind of Netflix things comes from. But you pay a flat rate for the Pro version. There will be a free version in 2020, $9.99 a month. But then you also have to pay for the games.
What?
Yeah.
So that's
$9.99 a month. Games.
Yeah.
That's
So
why
that's
Netflix is not a good.
Yeah. So this is I got it right here. This is running on the Pixel 3a. The Pixel 3a is a good phone. Plenty powerful, but it's not the most powerful phone on the planet. Certainly not built for games. And then I have here on my MacBook Mortal Kombat running. This is the home screen here. I think you can kind of see it from over behind my shoulder. We have the home screen, and we have Tomb Raider there. There's Mortal Kombat, and this is like your list of games that you might have. And then this is me on the Pixel 3a, and I'll just fire it up. Right now I have Mortal Kombat running, and we'll go and got to get to the start button.
Do you have to have two devices, or you're just doing that because you can show people?
I'm just doing it so I can show people.
So you could just do this on the phone or just on the computer?
Yeah.
Got it, just making sure.
So basically, at first you get a little bit of stutter, and then the Wi-Fi fully kicks in.
Wait, I'm already impressed, Dan. It looks good.
I mean, this is fully Mortal Kombat that I'm playing. It's the regular game that you would play on consoles, and I'm playing it on a smartphone with with a really good controller. This is a controller that it looks like they basically, we're also on the company Wi-Fi, so it's not like the best. But the controller is basically a mix of the Xbox controller and the PlayStation controller, and they do a great job with it. It's well balanced. I'll pass it around. You can get
pass it around.
ruined in Mortal Kombat if you want.
What Dan? What games will be at launch?
So here's the thing. It's an awesome technology, right? I cannot emphasize enough how great it is, that it works really well. I was playing on my TV, my computer, my phone. It works great. The issue with any game console is you need games. And the games that are coming out for Stadia already exist. They're games that are available on your PlayStation that you might already have, on your Switch that you might already have, on your Xbox or your PC. There's nothing that's really going to say, you need this service for this game. And that's where Google loses it. They also, by the way, are missing a bunch of features that they had promised when it originally comes out. They're going to roll those out in early 2020. There's still no word on when support for iOS devices will come. That is just, mind-blowing that it's not there at launch.
But
this is Mac, so you're only running this in the Chrome browser. So you need an iOS device, you need an app, and it's just not there yet. You also should be able to play that wirelessly. There shouldn't be a wire. Google said that it would be wireless on multiple devices, but not at launch, early 2020. So this feels more like a beta than it does a true launch. The true launch will feel like it happens when the free version comes out in 2020. And just real quick, the difference between the Pro version, which is $9.99, and the free version, both of them you still have to pay for your games. The base version is free, but you only get a max resolution of 1080p on your TV. With the Pro version, you get 4K. So that's really what's going to be the differentiator. You'll get 4K HDR, 5.1 surround sound, the base version 1080p stereo sound.
Dan, I bet I won't be able to have Nintendo games through this.
No, Nintendo is super ornery about that. They don't want to put their content on anything. In fact, the fact that there's some Mario games on iOS devices still blows my mind because they're very rigid about keeping their characters on their devices.
I think we killed you. Sorry.
You're
lukewarm.
I am
interested, but you're
yes.
lukewarm.
I think that again, the technology, amazing. Give me something to want to do with the technology.
Yep.
Dan Howling, we'll talk with you tomorrow. Oof. Coming up, your winners and losers in the stock market right now. Take a look at some of today's trending tickers. Let's take a look right now at some of today's winners and losers. Stocks in the red include Workday after an analyst at Morgan Stanley downgraded the stock to equal weight from overweight over concerns of slowing momentum in the human capital management industry. Now it's time for some stocks in the green, 5 below after an analyst at JP Morgan added the discount store chain to the focus list, and Splunk shares pop after Morgan Stanley upgrades the data software company's stock to overweight from equal weight, citing optimism over the company's durable annual recurring revenue. Coming up, JP Morgan's asset management top strategist on why the phase 1 trade deal is going nowhere fast, what he's advising clients to do here. We're back right after this. Record highs right now for the Dow and NASDAQ yet again, despite kicking off the week with a pessimistic tone on trade out of China. Let's bring in John Manley. And also joining us is Yahoo Finance Editor-in-Chief, Andy Serwer. So, John, you say we should expect markets to react disproportionately to anything trade-related. So, when you think about this, Jack, is it... What's happening today? Because we had this pessimism. Dan and I had to sit here at 3 o'clock and say,
shrug.
Wow, everything was so bad this morning, and now it's okay. So how do we think about trade?
Yeah, well, it's okay. It's modestly okay, though, right? We're up, 1/100th of a point or something like that today. Not a whole lot going on in markets. I think when I said that markets react a little bit disproportionately to what's going on with trade, I think markets are reacting disproportionately to what's going on with almost anything, which is that we are now 10.5 years into this bull market. It's the longest bull market in history. We're up 350%, and people are just looking to poke holes in any sort of potential strength that we may see in the equity market. You have good news, disproportionate reaction. Bad news, disproportionate reaction. I think that people are too eager to jump on potential trade news and don't take enough time to really let it sit.
Or looking to hang their hat on something.
Sure.
Right, which is sort of the flip side. And so what would you be hanging your hat on? I mean, what would make you positive, and a positive assessment, I should say, looking at the markets going forward?
So I think the thing that markets need right now more than anything is clarity, a clear idea of the direction of something like trade policy, or to a lesser extent what's going on, say, with Brexit or with impeachment proceedings.
Good luck with that.
And that's exactly the problem, which is why I'm still optimistic. I still like equities, but there are so many things where that is the exact reaction. Like, you just kind of throw up your hands. Good luck getting some sort of resolution on Brexit. Good luck getting some sort of clarity on trade. But to me, that is sort of the linchpin. It's the catalyst for what's going to encourage markets higher in a meaningful way, is at least knowing what the future holds. Doesn't have to be good news, but having some sort of news, having some sort of future that you can look to with certainty, I think is the driving force behind any sort of meaningful performance moving forward.
So when the president tweets about Jay Powell often, we'll put it up and say, oh, here's what he said. Today they met in person, and apparently it went just fine.
Cordial.
So,
Cordial.
Right? So I feel we have
He started off by saying, who is this guy?
But I feel like we need to mention that the two of them got together, since we make such a big
That should
deal
be a positive.
about the tweets. They got together.
Yeah, why aren't stocks up on that?
You have noted that Jay Powell has basically said multiple times that rates aren't moving any lower right now.
Right.
He's also kind of intimated that they're not going higher unless there's some meaningful change in inflation. But you think maybe we're setting up for a potential tantrum in Q1 on rates. Why is that?
I think that's right. I think that when the market is looking at what Jay Powell said last week, what he said a month ago about this being the end of that mid-cycle adjustment, I still think there is a whole lot of optimism baked in about rates moving next year. We're not going to get a cut in November. We're not going to get a cut in December. I think the market has really come around to see that. But it wouldn't surprise me if there were still some expectations out there that we'll get another 25 basis points in the first quarter of next year. I don't think that's going to happen, barring some sort of big shock to the outlook. And when that doesn't happen, I think that's when we start to see that tantrum that I'm a little bit worried about.
Just for fun with the crystal ball, because we're talking about, whether trade is a real overhang on stocks. Are we surprised actually that stocks aren't down, considering we're still in this trade war and phase one deal hasn't been signed? What might happen with the election? If we get a Donald Trump re-election, what do you think that would mean for stocks?
I think more of the same is perhaps a good thing. At least markets know where they stand at the moment. They know what policy looks like to some extent, and they can plan forward with that. Generally speaking, when we think about politics as they relate to markets, I think the clients probably pay a little bit too much attention to what happens. At the end of the day, no matter what happens in 2020, we will almost certainly have a divided government. And in a divided government, meaningful policy change is basically impossible. And so if you're afraid of big swings in one direction or the other, I don't think that's highly probable next year.
All right, so Jack, Jen talked about one of the two things that we should focus on historically when it comes to stocks, interest rates, and then I'm going to ask about the other one, which is earnings, right? So in other words, everyone's anticipating that earnings are slowing down, tougher comps, but we've actually been surprised to the upside, I must say again, because that's how it always goes. But what are you looking at for 2020 then?
Well, we've been surprised to the upside recently, I think, because expectations were just so bad that anything that comes in even modestly above that is good news, and frankly it is. And I think that at least from my perspective, the worst is probably behind us because that third quarter earnings comparison was really so challenging. Remember, we had record high profit margins in the S&P 500 in the third quarter of 2018. So I think the coast is a little bit clearer moving forward. Ultimately, though, we are still looking at mid-single-digit earnings growth next year. Nothing to get particularly excited about, but we don't see any real risk of something like an earnings recession either. Things kind of grind higher, and frankly, at this point in the cycle, mid-single-digit earnings growth is not the worst thing in the world.
We will take it. Jack Manley, Global Market Strategist at JP Morgan Asset Management. Great to see you.
Nice to see you, too. Thank you.
And Dan Roberts, I got to let you go.
Nice to
Thanks
see you.
so much.
Goodbye.
I think that guy Miles is going to come back tomorrow, but
If only I had better hair and glasses, I could be Miles.
I'm just not going to touch that at all.
coming up, the closing bell on Wall Street, less than 10 minutes away. First, though, we're going to get technical with Jared Blickery. We're back in 2 minutes. Another trio of intraday records from your favorite U.S. indices, but bond yields are dropping today. Yahoo Finance's Jared Blickery is with me now at the Wi-Fi Interactive touch screen. So what's the big deal about what's happening with bond yields?
Well, it informs what we're going to do with our trades of the day, if you know the secret sauce. There's just been this incredible correlation between what happens when bond yields are up versus when bond yields are down. So let's just skip the indices. They're already at records. What are you going to do with them? Short them? You don't want to do that right now. So we're going to take a look at bond yields. Now this is a volatility index. Here we go. We can see that they're down about 3 basis points today. Let's go back 1 month and see the story here, because during this rise, and we'll do it in green, we can see that they were up substantially. That's when value was outperforming. That's when momentum was underperforming. And some other trades that go along with it, the bank stocks are going up as yields. We talked about the yield curving and expanding, 86 basis points, so that's also a factor. Transports have been doing well. But then we took this downturn, and since that has happened, we've had a reversal of that. We've seen value underperforming, momentum outperforming. Home builder stocks, because they like lower mortgage rates, they're outperforming. So there's lots of correlations in here that you can get a feel for, and you simply monitor the bond market for the first hour or two, and you can make your day trades accordingly.
So the first hour or two in the major indices was a little bit different earlier today. We were in the red.
Yeah.
We had this news on trade. We just had Jack Manley here talking to us about how we're seeing some of these outsized reactions. And then Dan Roberts and I were talking, sort of like the market needs a little time to digest these, and then we just kind of go green, and we're sticking here basically on the flat line.
Yeah, I want to point out something else because iShares expanded tech software. This includes Microsoft, Adobe, Salesforce, some of the big names. It's not market cap weighted, so all those are about 8.5%. This has been going up no matter what over the last month. If we take a look at the last 3 months, it was getting hit pretty hard when interest rates were rising in September. But that has now been negated, and this outperformance is very good because it means we have a wider selection of stocks as the market is going up to fuel that rise. So when interest rates are rising, we got financials, we got transports, we got Microsoft and the tech software stocks, financials. I'm repeating myself, but it's broad-based now.
Stay invested.
Stay invested. Andy Serwer.
Stay invested.
Don't day
Jared
trade.
found something up nearly 6% in the last 3 months. Jared Blickery, thanks so much. At the Wi-Fi Interactive Touchscreen coming up, we've got the closing bell on Wall Street, plus Piper's latest teen survey is out. Why teens want AirPods, Nike sneakers, and Louis Vuitton everything. We're back right after this. Welcome back to the final round. You're looking at live pictures of the New York Stock Exchange and the NASDAQ market site. We've had intraday record highs across the board here on the three majors. We're going to have to see where we end up this afternoon. It looks like
tree green.
Get up.
Triple green.
You're going to get your records here. Hope you like them. Again,
Love them.
not much action, really.
But it's green, Jen.
It is green.
I see green.
It is
Why are you looking to
green.
like poke holes in,
I just
looking
think-
for the dark lining?
Just like, where are we
Come
going?
on.
Maybe we're just consolidating here.
That's not consolidating. That's a record high. That you can't be consolidating if you get a
could
record.
You're
no.
just inching
I
along.
reject that notion.
Inching along.
Inchworm,
Yes.
measuring the marigolds.
Some people are not inching as much as others. Andy Serwer, obviously Yahoo Finance's editor-in-chief, is here with me as well. I think Facebook's up more than 1%. Just looking at some of the names outpacing the market. Disney leading the
Still
Dow
going.
higher. Disney up 1.7%.
Wow.
So
Yeah.
we've been seeing them enter the streaming wars, some hiccups, but investors seem very bullish on Disney still.
I told you, when they did this, had that 10 million subscribers announcement, that it's potentially a whole new era for that company. And whether or not people see it that way or whether or not it actually happens, but I think that's a way to see what they sort of cross the river, into this new world. I mean, I don't think that's too strong. That sounds sort of kind of a Disney-esque description.
It does. That's like the beginning
a whole
of a
new
movie.
world, right? Like I'm going to
Yes, Ariel's. It's the 30th anniversary.
Oh, is
of
that
Little
right?
Mermaid,
Gee, I didn't know
believe,
that.
as
Yeah.
well in here. United Healthcare continuing its streak higher, up 1.5% right now. Apple up 0.5%. Nike up more than 1%. So this morning, a lot of the focus was on what's happening in China. Two things: the news that maybe the trade talks aren't going as well again. This comes up all the time.
Yeah.
So we were down on that. But there's also the continuing protests and situation in Hong Kong as well. The whole thing with trade, like on again, off again, on again, off again. You'd think we would be used to it by now. We talk about it so much.
Yeah, it's interesting because I remember I think it was 2 weeks ago, when the Chinese were actually saying we're optimistic about phase one, which surprised me, because it seemed like sort of out of character. But now today we're hearing they're down on phase one. And I think a really interesting way to sort of think about this is, who's blowing smoke and who's posturing? And of course the answer is both sides. And both sides are not monolithic in not only their viewpoint, but in their communication. So you kind of add those layers. I remember watching an old Star Trek episode, playing 3D chess with Mr. Spock.
Ooh, I gotta go find that.
Yeah. It's not fun, and it's hard to follow. Let's just put it that way. That's what I mean by that.
Other news out of Washington, D.C. today, talking about communication strategies, is President Trump having a meeting with Fed Chair Jerome Powell. They met in person. Trump said on Twitter that the two had a cordial talk that covered negative interest rates and trade, among other things. And after the year that he's been attacking Powell, then the two of them sitting down, having a cordial meeting. We don't hear a lot from Powell from the other side in this.
Yeah.
He doesn't answer the questions at the meeting. He doesn't want to get involved in politics. Anything that we should be thinking about? Is this just a good sign that the two of them are talking, period?
I think it is. And I think that it probably was devoid of fireworks, because I think it would get out, particularly in this White House, which is so leaky. I think the Fed chair is to be commended for his thick skin. And he really just lets it wash off. And, can you imagine? I mean, I think all of us would have a hard time going to a room with someone with that much power who's been making fun of you, belittling your abilities and your competence and your strategy, and to just sit there and say, okay, well, let's just put that aside and we're just going to have a nice talk. And a lot of the things the president has been talking about, which is we need to have negative interest rates here, which is something that Jay Powell is not down with. And so it must have been a very interesting conversation. At some point, the historians will probably tell us what happened.
I
Or maybe
can't
tomorrow.
wait. I would love to have been a fly on the wall there.
Yeah.
For more on today's market action, let's go to Scott Gamm on the floor of the New York Stock Exchange. Scott.
Hey there, Jen. Well, the Dow not just closing at a record high, but the second straight session of the Dow closing above 28,000. Remember, we hit 28,000 in the final seconds of Friday's trading session. So that halo effect continuing into today's session, really led by gains in Disney shares, United Health, Nike, and Walmart. Those are your best performing Dow components today. Remember, Disney really powered the Dow last week when Disney Plus launched. A lot of optimism surrounding that. Apple was also in the green today, up about 0.5%. There was a report in Bloomberg saying that the company sold 11 million iPhones in China in September and October. Some might find that surprising, just given the ongoing trade war between the two countries. The laggards in today's session, even on this record day, were names like Chevron, Caterpillar, and Dow Inc. And then, Jen, outside of the Dow, we were keeping an eye on T-Mobile shares, which ended the day rather stable, rather unchanged, just given news that T-Mobile CEO John Legere will be stepping down from the company in April of next year when his contract expires. Now, there were rumors over the past couple of weeks that he might be joining WeWork as CEO. He has said that that is not going to happen. Of course, those rumors affected T-Mobile stock over the past couple of weeks, just because it seems like investors didn't want him to leave anytime soon, just because T-Mobile is trying to merge with Sprint, and we know that there's an upcoming trial as several state attorneys general try to block the deal. Jen.
Scott Gamm, we'll talk with you tomorrow. Time now for our call of the day. And today it's all about the holidays. Piper Jaffray releasing its latest holiday survey. Upper income teenagers who participated crowned Apple as their top brand and ranked the company's AirPods as their most desired product. Coming in second and third, we've got Nike and Louis Vuitton, followed by Gucci, Lululemon, and Adidas. But the season's biggest overall winner could be Amazon. Piper citing a proprietary retail model identifying an acceleration of Amazon at the detriment to department and specialty stores during this holiday season. Who knows Gen Z better and all of these brands than Yahoo Finance's Reggie Wade. Help
Dr.
us
Gen Z.
out. Yeah, doctor now on Gen Z. What have you learned? What was the biggest takeaway to you from this report?
Well, two things. One, that money reigns supreme. I mean, cash, you got to have that cash money, as the rappers used to always say back in my day. But yeah, most teens, that's what they want.
Money.
They want money. They want money, followed by clothing and then a car. Cars are always nice, so those are the top three. But if you go down the list, something that's making its way up is vacations and trips. Piper Jaffray's note says that a lot of teens are putting a premium on experiences. So kind of a move away from the normal materialism, and it's up quite a bit.
You know, that's interesting, Reggie, because we've been hearing about this experiential stuff for older people. You know, that especially people, you know, frankly, middle class, upper middle class people, they got a lot of stuff. They don't want any more stuff. They just want to take a trip with their family. But this is the first time I've actually seen even the teens want to go with, maybe they just want to go with each other.
They're like,
that made
how
me
do we
want a
go
teen trip.
together? Well, they also put, like, if they said if you put kind of concerts in here as well, that would actually move it up even further. And I do think you're seeing that teen spend on the concert front.
Well, I have some two 20-year-olds, and I actually just talked to them about a trip to Spain next year for a concert kind of thing. And they were like, yes, sounds great.
They're like, yes, Dad. And we would like to have a Louis Vuitton and a Gucci.
Don't forget those.
What do we make of this?
Reggie, what about that stuff,
brand
too?
stuff on here. I mean, Apple I get.
Yes, Apple, of course, reigns supreme, but Louis Vuitton and Gucci, you know, there's been more of a push by these brands to really get millennials, get Gen Zers, and it appears to be working. I mean, they're not polling at significant numbers, but they're up from what they were at the same time last year. So what they're doing seems to be working. But really, Nike, I think that's another story here. We have number two behind Apple, and everything that you've seen this year with how the brand has been in social media and with the Colin Kaepernick campaign. They really feel that this is a brand that speaks to their generation and speaks to what they would like to do socially. It's more of a socially conscious brand. And then we have Adidas here, Nike's big rival. They're staying pretty stable. And this was interesting because they separated Adidas and Yeezy. So most of this stability is on the back of Adidas apparel and clothing line, not just Yeezy sneakers.
That's crazy. And, you know, for Nike, gosh, you know, been around so long, and it's so hard to stay au courant. You know what I mean? And so you have to keep finding people that resonate with younger generations. And it's interesting too, you know, like Jordan's still around, right? And I don't know, then it goes from being cool to out to retro. I wouldn't want to be one of those brand managers, Reggie. I think it's hard.
No, I would. I think we have a better deal over here.
How does it work with the luxury brands? You said they're doing a better job at reaching this new generation. Are there lower ticket price items that they are pushing towards them? Are there like
not necessarily lower ticket because they ask teens in the higher income segments, but I believe it has to do with social media with the push into Instagram and on Twitter. So they're just really doing a good job. I myself, even though it wasn't a higher tier brand, I bought something off the North Face the other day because it popped up on Instagram. And I was like, you know what? That seems like a good buy. So I think more of these brands are doing a better job at making sure that their target audience are seeing these offerings.
That, you know, that's an interesting thing. I really think this is the great frontier opportunity, which is digital coupons are distributed so poorly, right? In other words, how do you get them? Email, spam, text. Of course, text is getting destroyed because companies are starting to use that. But boy, there's a way to get those things out there, right? And sales and promotions and all that. But Reggie, you don't have to follow that list. You can go to North Face.
You can go there. They also
Look, she's writing it down.
I know. I was just looking at one thing that I thought was interesting. It's not cash because sometimes you don't want to give kids cash. They still like gift cards, and gift cards from restaurant. The most wished for were Olive Garden and Starbucks.
Interesting. Well, Olive Garden's a favorite here. Now, did any of this match? You have a teenager.
Yeah,
Does
I
any of this
think
match?
yes. Adidas, Lululemon, Nike, Apple. I mean, I think every kid wants the AirPods now.
Yeah.
They're just going to lose them, though.
Kids of all ages.
They all want the AirPods. And in the study, that the kids were looking more at the AirPods, the watch not doing well, and also not asking for the phone. Really looking at the AirPods.
I have got a great strategy. Someone told me about the AirPods, right? You know what you do? Buy new ones for you and give the kids the old ones.
I like that. I like how you think.
Sure, kids are not getting the new one. Reggie Wade, have a great evening.
Thank you.
Coming up is the Uber of ambulances. So if you live in a big city, you've likely seen an ambulance around. We talked to the company's CEO about the future of medical transport. Can they really disrupt this? We're back after this.
General manager.
Let's take a look at sector winners and losers. Sectors in the red for the day include the energy sector, down over 1.3%. Worst performing sector was weighed down by Cabot Oil and Gas, Noble Energy, and Apache. Sectors in the green include the consumer staples sector, up over 0.5%, led by Coty. Shares of the beauty giant were up after buying a $600 million majority stake in Kylie Jenner's cosmetics company.
You spend $600 million and your stock goes up. That's good.
Yeah, not bad. A lot of people would like to see that. And I guess she's really a billionaire, or at least
She is now. At least she's a 600 millionaire.
Whew. The real estate sector up over 0.4%, led by Equinix, Kimco, and Welltower. Ambulance is an on-demand ambulance provider that wants to transform medical transportation through its use of technology. And joining us now to discuss is Anthony Capone. He's Ambulance's president and chief technology officer. So for people that have never seen one of these in the wild, what exactly is it? It's an ambulance, but it's not part of a hospital?
So hospitals need medical transportation to move their patients to and from between hospitals to long-term care facilities, and that tends to be done in a way that's a little bit more old school. So our kind of take on it is we are a software-enabled medical transportation company. And there's a lot to that, but we focus very, very much on how we can use software to provide the best patient care possible for the hospitals that need to move patients.
So you don't do the 911 calls?
We don't do the 911 calls, no. We don't do those. We don't do those. But our paramedics have the same level of training. Our EMTs have the same level of training. And so, the cases that they move may still be critical, albeit not 911.
So the way I understand it is I wouldn't call one myself, but I could be at a doctor's office and need to be transported someplace, and that healthcare professional could call one.
That's correct. Yeah, that's exactly right. So you have clinic staff that might be the ones that are procuring the transport, or hospital staff, case managers and social workers that need it. Majority of the transportation that you see is non-911 transport.
Now, I know, Anthony, that the cost of these things, the historical, the legacy business is crazy. You want to take someone from a hospital to, say, a long-term care facility, and it's like $10,000 to go a mile or something like that.
Yeah.
So why is yours cheaper? How does that work? I assume it is.
Certainly, it certainly is. I mean, a lot of the reason is because the way that we can lower the cost is by doing things differently. That's differently from the standpoint of how efficiently can we utilize our resources. So if you think about any transportation company, utilization is the name of the game. And we can do that by leveraging highly sophisticated artificial intelligence that handles all of the routing, dispatching, and kind of resource allocation throughout the day. Our crews then are more efficient because they're more efficient, and our artificial intelligence kind of is layered on top of the medical reimbursement space. That is what allows us to lower costs and increase the rate so that we have to bill the patients the smallest amount possible.
But aren't there a lot of entrenched incumbents that are resisting what you're doing? They have inroads for, since the advent of the automobile that would be able to push back?
Certainly. There's been a lot of obstacles, and there will continue to be. Our goal is just to show any healthcare provider what the difference is between using us or not using us, between using technology to ensure that your patients get the highest level of care possible and not using us. And, I would say that I think we've been, fairly successful in ensuring that our patients are treated with the utmost care that they possibly can be, and that has become infectious through a lot of health systems.
How big a hurdle do you think the regulatory piece is here? Because we've seen with other unicorns, some that have gone public, let's take Smile Direct, orthodontists have been going after them saying, look, you've got to go to an actual orthodontist and see somebody. Warby Parker has been dealing with issues having to do with getting your vision tested and being able to do it with technology. The ophthalmologists and the optometrists are coming out and saying, you have to go to a doctor. Are you finding that an issue in your business right now?
So I'm a software guy, and oftentimes the reality is I want to revolutionize, disrupt. The reality is what we've taken is we have industry experts, and what we try and figure out is how do we work with the regulators to stay in accordance with what their regulations and laws are, but do so in a way that maybe is a little bit more efficient, as opposed to just going in and being like, I don't need it. I don't need your rules, I don't need your regulations, I'm going to transport the patients however I want to. That's not what we do. We figure out, okay, we bring in people that are industry experts that know the rules inside and out, and then we get ahead of them. So we might be thinking a year ahead of time because it takes a year to get your license in a certain area or jurisdiction. So rather than going in and being like, I don't need you, it's more like, I really need you. How can we work together to make things better for them? And oftentimes the regulators have a big win if they can see the transparency and the technical advantages that we bring.
Interesting. Anthony Capone, Ambulan's President and Chief Technology Officer. Thanks a lot for coming in and telling us about the company.
Thank you.
Coming up, Wall Street soothsayers are out in full force. What are they divining for stocks in 2020? We lay out the tarot cards and crystal balls to see if the market's future is cloudy or clear. We're back right after this. the end of the year just around the corner, big Wall Street banks have started to unveil their market outlooks for the year ahead. Yahoo Finance's Emily McCormick has been tracking all the big analyst calls. She joins us now with the very latest. And Emily, before we go and dig into the individual notes, let's just start with like the big picture here. You're reading all these notes about 2020. It wasn't that long ago that we were under the impression that 2020 was going to see a recession. What's the sentiment overall right now?
Well, I think the big picture is a good place to start because that's probably the biggest thing that I noticed in these notes is that all of these analysts are really pointing to a couple of main themes. They're just weighing some of these ideas differently. So a couple of things they said are going to be helping the economy and the stock market next year. And that's a more accommodative Fed and the fact that interest rates are going to be staying probably at their present levels. The fact that there will still be some margin pressure because of higher input costs, because of these lingering tariffs, because of just increasing wages because of that tight labor market. But at the same time, really seeing a rebound in global growth, seeing that these leading economic indicators like the ISMs, like jobless claims are coming in strongly. So looking like those things are going to be really supporting economic growth and where we're headed with the S&P 500.
Are there any real outliers, Emily, like on the upside or the downside, or like that really caught your eye?
I think Morgan Stanley tends to be particularly bearish, both on equities and on the economy, and they did not fail to meet that expectation this year. So their target is for 3,000 for the S&P 500. That implies about 3.9% decline from where we actually closed today, record closing high for the S&P 500, of course. And what they're saying is that U.S. equities will probably underperform their global counterparts, which really is a contrarian take, seeing that the S&P 500 has been the outperformer this year, of course, because of that more accommodative Fed, because of some of the just relative strength of the domestic economy. But they're really saying that we will still see a rebound, but it won't be to the extent that people are actually predicting for 2020.
So if that's the bearish camp, who is the outlier on the upside?
Well, on the upside, we do have Credit Suisse. So they're looking at 3,425. So that's a 9.7% gain from the closing prices that we had. They're really talking about the cyclical leadership that we saw the past 3 months continuing into 2020. So seeing some of these things like financials really starting to outperform. And that's something that you see in the case of an economic recovery. So that really is their thesis there. And another one that really stood out to me was UBS. So their target is actually for 3,000, so they're more in that bear camp as well. But they really mapped out this scenario where the S&P 500 still has further to discount, and that's because they're saying that GDP hasn't hit its bottom yet after the Fed rate hikes, those 4 that we saw in 2018. It takes about 2 years for that bottom to actually come in, and it takes about 5 to 7 months before that GDP bottoming for the S&P 500 to hit its own floor and then to start discounting that and pricing that in. So really kind of a map that they're showing for potentially seeing that rebound starting in April, May of next year.
So does anyone talk about tariffs or the election? Like, what is that in a lot of their thinking in here?
I think it's interesting because the mentions of tariffs really have come back. Mentions of elections have kind of been on the fringe side of things, because it's kind of hard to tell exactly what impact those are going to have. I mean, just look at the impeachment trials now. Markets are mostly shrugging those off, not really paying attention unless there's going to be some kind of policy implication, and that's what markets will actually be looking for.
And a big sort of black swan, I guess it would be a white swan.
Ooh, like a white swan.
A white, which you never hear of.
Yeah.
I'm going to coin it. Would be, some sort of relief when it comes to the trade war.
Right.
In other words, if sort of so much of the bad part of these theses are the fact that the trade war is a negative, obviously, imagine if it wasn't there, naturally that would be impeding the targets and would be helpful if it was removed.
Right. And I think that's one of the things that a lot of these analysts are saying. One of the things actually Goldman Sachs said was that it was kind of difficult to really determine that impact to earnings growth. I mean, a lot of these companies talk about the tariff impact anecdotally, but we're seeing, some analysts had predicted an earnings recession and we didn't actually get that.
Right.
So seeing that it maybe hasn't been as negative as predicted.
Emily McCormick, to be continued, I'm sure. The notes will not end. But 2020 will be here soon. An alert here. Uber Chief Product Officer Manik Gupta is leaving the company. His last day is going to be on December 13th. TechCrunch is reporting this, citing a note that Gupta wrote to the company's product team on Monday. He said and told TechCrunch that he felt that now was a good time to take a break and said he's very bullish on Uber's future. Of course, this is going to be scrutinized right now because of so many departures recently. We are also looking at the stock lower here as well after hours on another departure.
The Departed. It really is. I mean, that company, and you know, gosh, trying to find some stability there is somewhat challenging for this company. There's no doubt about it. And I know actually of at least 2 executives who have received offers to go there who have declined them. And so, you know, it's not a great situation, quite frankly, Jen, is it?
No, it doesn't look that way right now. Let's bring back in Emily here on Uber. Look, for a tech company, product is everything, especially with the engineers. Those are a lot of the people that Uber management is trying to keep happy, especially when your stock has been struggling. What do you make of this recent departure? You can see the stock down just fractionally right now.
Well, you know, it's interesting because if we think about some of the layoffs that have been taking place at Uber, that started to spill over into the engineering side too. So that would come under the jurisdiction of the chief product officer. So seeing that position is now actually the individual in that position being removed, just, you know, another nail in the coffin, one might say, for Uber and for that C-suite right now. If we think about the chief operating officer, chief marketing officer departing in June, could potentially signal a new leadership shift, since we know that Dara Khosrowshahi, the CEO, had wanted to take over those roles, more oversight. Potentially he'll maybe have a bit more oversight of that chief product role now too.
It's interesting, it also comes on the same day that we got news that Get, which has a product here that is used in New York City widely, Juno, they are shutting Juno down in New York City, and they're putting people to go and be with Lyft now. People are saying this is an industry that is really needs to see some consolidation here. So you've got consolidation happening at one level, changes in the C-suite and among management happening someplace else. It's a lot in this industry, I think, right now, right? Like there's so much movement around. These companies went public, but it's certainly not settled yet.
Well, it reminds me, you know, the early days, I wasn't there, I read about it, the early days of the auto industry. And if you go back and look at, say, Wikipedia and just look at all the different brands of cars that were being made in the United States, I mean, there are dozens and dozens and dozens of now lost names. And so I think it's fairly typical when you have a new business, you know, to have various players, and then there's a reckoning.
All right, well, we're watching Uber after hours on that news alert. Emily, thank you for sticking around. Coming up, what we're watching tomorrow in the look ahead, plus Ford versus Ferrari racing to the top of the box office. Just as Charlie's Angels crashes, we're going to have the final round box office update after this. And now here's a look ahead at what will be making headlines on Tuesday. We're going to get some housing economic data, building permits, and housing starts for the month of October. Economists are expecting starts in October to come in at 1.32 million. That's the annual pace, sharply higher than September's number. On the earnings front, we get to hear from some retailers, Kohl's, TJX companies, and Home Depot. Those are before the market open. Plus, Urban Outfitters will report its quarterly results after the bell. Also tomorrow, New York Fed President John Williams will speak at the Securities Industry and Financial Markets Association annual meeting in Washington, D.C. His speech comes ahead of the FOMC minutes from the Fed's October meeting, and we all get to get those on Wednesday. So it was a disappointing mission for Charlie's Angels. I don't know, Andy, did you go to the movies this weekend?
I went to the movies this weekend.
Oh,
I
yeah,
did
you
not
did.
see
You told me you saw
Marriage Story.
The Marriage Story.
Not a happy tale.
The Marriage Story. You were not alone in not going to Charlie's Angels. The female-led film only managed to bring in $8.6 million at the domestic box office for its opening weekend. That's not a lot when it costs $40 million. Writer, director, and producer Elizabeth Banks defended making the reboot of the 1970s TV show, and there were also 2 films from the early 2000s. She told the Wall Street Journal, "You've had 37 Spider-Man movies and you're not complaining. I think women are allowed to have 1 or 2 action franchises every 17 years." I have to say, I agree. However,
With whom?
With her. That we can have. It's fine that it bombed.
Well, but they have to be well made.
That is the truth. That's
right?
what has
I mean,
to
did
happen.
you? What was it?
I
Ocean's
didn't go
13.
see
Did you like that? Was that the women's Ocean?
Oh yeah,
one?
I did like that one.
That was cool, right?
Yeah, I like that one.
Yeah.
This one, I'm not.
Well, you haven't seen it, have you?
I haven't seen it.
Okay,
It
so
didn't
let's
really
withhold
grab
judgment.
my attention. That's because I wanted to go see Fox's Ford versus Ferrari.
Yeah, I know a bunch of people
Which
that saw.
I
I know
also
some
did
women who went to see it. I thought it was going to have every woman I spoke to who went to the movie saw that.
Mhm.
Maybe at the expense of Charlie's Angels.
Yeah, I think this is a movie that could attract a little bit of everybody.
Carroll Shelby. This story actually was just waiting to be told. I mean, it's a fascinating story.
Yeah, I don't know the whole
It's
backstory.
super cool. I mean, like Ford was sort of sleepy and they had to get cool and they were going to like take on Ferrari, and they found this guy, Carroll Shelby, who was kind of a crazy cowboy, played by Matt Damon, and he like took him to a whole new place. And impact to today, there's still, Shelby Cobras around and stuff being made.
I'm probably going to go see it.
Yeah, it's
Sorry.
cool.
Sorry to the lady picture,
cool.
but I think I'm going to go see Ford versus Ferrari.
Mm-hmm.
Coming up, we've got more on the final round. We are going to head to Washington, D.C. to get the very latest on trade. What happened to that Phase 1 deal? We'll be back right after this. Welcome back to the final round. I'm Jen Rogers in New York, and with me now is Yahoo Finance's editor-in-chief, Andy Serwer. So stocks capping The gains here as Chinese officials are pessimistic about the prospect of a U.S.-China trade deal. This according to CNBC. What is the latest on the trade front? Let's go to Yahoo Finance's Jessica Smith in D.C. So, Jess, another day of the market trying to figure out where we stand on trade, specifically what's happening with the Phase 1 deal. What's the latest from D.C.?
Well, China says that the top negotiators had a call over the weekend and it was constructive. They say that the two sides will remain in close contact. But as you mentioned, CNBC is reporting that a Chinese government source says the mood is pessimistic around the Phase 1 trade deal, excuse me. And the tariffs and ag purchases seem to be the sticking point here. That's what the problem is, according to some reports. China thought that there was an agreement to lift tariffs as a part of that Phase 1 deal, but President Trump has not signed off on that. CNBC is also reporting that China is now wanting to wait and see what happens in the U.S. with impeachment and maybe the election, that they still want to talk, but they're perhaps shifting their approach a bit. So Larry Kudlow told reporters last week that negotiators were very close on this, but we'll be waiting to see if we hear anything else from the Trump administration in the coming days.
So if they're waiting on impeachment, I mean, what's the latest timeline on impeachment? I mean, is there any chance that this is happening in the remainder of this year?
Yeah, I don't know the answer to that. Nobody really knows when they are going to be able to finish this. As you know, they had hoped to get it done by this past weekend and sign it at the APEC summit in Chile, but that got canceled. There is some reporting that negotiators are looking at the first week of December because of the NATO summit, but it's just not clear if and when negotiators are going to get this done.
Jessica Smith with the very latest from Washington, D.C. Thank you so much. Coming up, we've got the fountain of youth, or is it just another healthcare fad? Why collagen water is all the rage. We talk to the CEO of Vital Proteins right after this. The global collagen market is expected to grow to $6.5 billion by 2025. And the company Vital Proteins is believed to be the one that started the trend. The company was founded in 2012 and has grown into a billion-dollar company in just 6 years. And joining us to discuss is Kurt Seidensticker. He's CEO and founder of Vital Proteins. So how did you get started in the collagen business? Like, what made you think that drinking collagen would be this big of a hit?
Yeah, it actually started off on my personal journey. I was looking for a way to extend my longevity in my running. So I'd be out there running. It took me a long time to recover as I was getting older. And you hear about people giving up their running shoes, right, as they get older. And I said, I'm not ready to do that. I want to continue to run. And so I started looking at what was going on in my body and my joints and really looking at why that was, right? Was it because, everyone just has to give up running, or was I wearing down the structures in my joints? And my daughter was a doctor in med school at the time, and we kind of looked at, your body doesn't have enough time to recover and build more collagen in its body. And I said, why is that? And so I looked at my diet, I looked at why that was, and came across the idea that, your body wasn't getting enough collagen to repair itself. And so I kind of started off on a journey to create a collagen brand.
So Kurt, let's just back up. What is collagen? And why do I need it? Why is it good for me?
Yeah, if you look at your diet today, right, your body's like 30% made of collagen, right? And
30%
What
of
is
my
it?
body's
Is it like your
collagen?
bone? Is it like bone tissue?
It's your skin, it's your hair, your nails, your organs, your bones, your cartilage, your all of your joint structures are all collagen. And your body needs collagen. It needs glycine specifically, and proline and hydroxyproline to actually rebuild the collagen in your body. That used to be in our diets hundreds of years ago. We've kind of stripped that out, and there's not a lot of rich sources of the glycine and collagen in our diet. So the idea is you have to supplement your diet with it.
Why can't you just take a pill?
So the idea is your body's really short about 20 to 40 grams of collagen a day in order to get its needs. So you'd have to take 50, 60 pills a day to get it.
Maybe you used to get it from eating like woolly mammoths.
Yeah, right.
Or something like that.
So
like back in the
bring-
day.
just
You
bring
like-
that back.
Well, I remember my parents would always like they'd buy some large piece of meat, and we'd eat the skin, and we'd make a stew the next day out of the bones. And
that's what you're
yeah,
talking about.
yeah.
Interesting.
So you started advertising on social media through influencers really before you launched in the stores. Do
Yeah.
you think that, can you imagine launching a brand without a social influencer?
It would be difficult today. I think that's the main way you can have a direct connection to your consumer. What we did very differently early on in the brand in 2013 was really getting out there, out in the field, and developing that connection with the consumer. And part of that connection we developed was with early on influencers that became educated about the benefits of collagen, and they were out there advocating for the brand. So it was an authentic relationship that we had with consumers and with influencers.
Hey, Kurt, how do you measure your success? Okay, here I am, Joe Schmo, looking kind of schmoey, and then I drink this, and like 6 months later, I'm like, woo!
Well, for the individual consumer, right, the success that they're going to see is the very first thing you notice, your nails probably grow at twice the rate that you're used to, right? So then you say, oh yeah, something's kind of different, something's changing. For me, it's my ability to get out and run like 4 or 5 days a week, right?
Yeah, I
without
like that
any
too.
joint pain.
Even more than the nails. I like that even better.
Yeah.
Did you see the news that Cody's buying a stake in Kylie Jenner?
Yeah, I saw that today.
For
Yeah.
$600 million.
Yeah,
There's
yeah.
an influencer with a brand that's kind of around the same market cap. What do you think of that news? Is it
Yeah.
like just a hot time to be in a socially driven product business?
I think if you're a socially driven product, if you're connected with your consumer, I think that the crossroads of being an influencer and developing a brand are probably the new way to communicate and connect with your customer.
DTC, direct to consumer.
Kurt Seidensticker is the CEO and founder of Vital Proteins. Andy Sturwer is the editor-in-chief. Maybe soon he's going to be
I'm
running
not the founder.
40,
Right.
but he's going to have really long nails soon. Coming up, Ford taking the wraps off the all-electric Mustang Mach-E. What's next for Ford's electrification plans? We're going to hear from Ford President Joe Hinrichs right after this. Ford just unveiled an all-new, fully electric crossover that Ford says is part of the Mustang family. The Mach-E is the first addition to the Mustang line in 55 years, and it arrives in showrooms in late 2020. Ford President of Automotive Joe Hinrichs joined Yahoo Finance from the New York Stock Exchange earlier to talk about Ford's brand new car. Take a listen.
Well, there's so many great things to say. First of all, as you said, after 55 years of just selling sports coupes and convertibles, 10 million of them, world's best-selling sports car, we're expanding the Mustang name to take it to a brand new battery electric SUV. Up to 300-mile range. The GT version is going to have 0 to 60 time in 3.5 seconds. 5-passenger, all kinds of great technology, over-the-air updates. Really excited about it. And really, when you see the vehicle, you understand how we can make the connection and expand the brand of the Mustang to a battery electric SUV.
Hey, Joe, Pross here. So, attaching that Mustang name to the Mach-E, and the Mach-E it's a crossover SUV. Is there some danger there with kind of diluting the brand name? Because everyone thinks a Mustang, it's got that power, that coupe, that fastback look. Why go with that here?
Well, Mustang has historically stood for fast, fun, and affordable. And certainly with this vehicle, you get the fast and fun part for sure. And for a battery electric SUV, starting below $44,000, then with a $7,000 500 federal tax credit, you're talking mid-30s for a battery electric SUV. It's also affordable in that range. So it really is true to the heritage. You look at the design, of course, you get the design cues. But importantly, when you drive the vehicle, I drove it about a week and a half ago, you can tell it has the soul of a Mustang. It may not sound like a throaty exhaust like a Mustang coupe does, but we're going to keep building those vehicles, love those vehicles, including the Shelby versions and all limited edition versions of those. But it's time to expand and bring battery electric into the Mustang portfolio.
Hey, Brian here. So when we talk about electric vehicles, it seems interesting to watch the pivot from car manufacturers from kind of this environmental sustainability to these things can be really fast. So when we talk about the numbers 0 to 60 on the Mach-E, I think it clocks in around 4 seconds, pretty fast. I'm wondering what kind of market research have you done that show that there's an appetite for these types of electric vehicles as opposed to maybe the types of electric cars we saw, 6, 7, 10 years ago?
Sure. Well, one of the great things about battery electric vehicles, of course, they do have that instantaneous acceleration, that great torque, because the motors are at the wheels. You don't have all that transfer function going on like internal combustion engines. It is actually, even though people don't think they buy the vehicles for that, they do tend to like it because it gives them that ability to drive the vehicle very aggressively if they want to. But importantly, the smoothness of the propulsion, the quietness, the roominess you get inside. There are a number of factors that once people get in battery electric vehicles, they realize there's a lot more here than just their propulsion system.
Hey, Joe, it's Pross again. So do you kind of see, we're talking about performance, we're talking about SUVs, is the Tesla Model Y the performance benchmark for the Mustang Mach-E?
Well, we welcome all competition. Clearly, we recognize there'll be more competition when we launch in the fall of next year. We think our vehicle stacks up very nicely to the Model Y from what we know of it. And of course, other competitors as well. We get, of course, the Mustang DNA from a brand standpoint. We have access to over 12,000 charging locations with over 30-some thousand charging stations around the country, more than twice what Tesla has. And we have our service network, our dealer network, which can provide all kinds of accessibility to our dealers. We're taking reservations online right now for the vehicle, so we're trying some new things as well. But we think the total package, Ford has a lot to offer that some of our competitors don't give you.
Joe, Pross brought up Tesla, and of course, Elon Musk tweeted about your new vehicle. He tweeted out, "Congratulations on the Mach-E, sustainable electric cars of the future. Excited to see this announcement from Ford as it will encourage other car makers to go electric too." Obviously, Tesla a competitor, and I'm just curious what you make of the tweet.
Well, we appreciate the tweet. He actually tweeted a couple of weeks ago about how much respect he has for big manufacturers making large volume things. You know how he felt about manufacturing. So, I mean, Elon's always been supportive of the industry going to electrification. He thinks it's great for the climate, as do we. And he's always been supportive of trying to get more and more companies to build battery electric vehicles. So this is consistent with that, and we respect that a lot. And we think that that's true, that the more battery electric vehicles that come out, the more acceptance there'll be for consumers in this domain, and we think customers will get more and more acclimated to the charging networks and everything else that goes with it. So everybody wins if we get more acceptance in the battery electric vehicles.
Hey, Joe, so aside from the Mach-E and the upcoming electric Ford F-150, what's next from electrification from Ford's end? I mean, is there going to be an actual Mustang Fastback E-Coupe too?
Well, we don't have any plans for that in the near future. Someday maybe, but not anytime soon. Our next generation Mustang will be an internal combustion engine vehicle. We may do a hybrid version. We've talked about possibly doing that, which gives you a little bit more electric torque at the wheels, but it also has an internal combustion engine. For us, we have 40 vehicles in the works right now with some form of electrification, hybrids, plug-in hybrids, battery electrics. We're launching a number of SUVs with plug-in hybrid or hybrid versions. For example, Explorer Hybrid just launched. We have a hybrid Escape that just launched. We have a plug-in hybrid Escape next year. A number of other products like that coming throughout the market. But on battery electric side, we talked about an F-150 battery electric, very excited about that truck. And of course, we're doing a battery electric vehicle with the with the Volkswagen MEB platform in Europe we're working on. We're investors in Rivian. There's a number of projects we have going on, but the core volume from Ford battery electric vehicles will be designed by us and will be built by us.
Coming up, what you missed on Yahoo Finance today. We're back right after this. Now it's time for all the best moments that you missed today on Yahoo Finance. Let's check it out.
Barring any major incident in the administration, assuming that Trump stays in the U.S. presidency, I think the stock market will do very well and the economy will do well.
Conversely, if Warren gets in there or Biden, what happens to the stock market?
we're going to be in trouble.
I drove it about a week and a half ago. You can tell it has the soul of a Mustang. It may not sound like a throaty exhaust like a Mustang coupe does, but we're going to keep building those vehicles, love those vehicles, including the Shelby versions and all limited edition versions of those. But it's time to expand and bring battery electric into the Mustang portfolio.
And there are a number of folks in this country who have sold a bill of goods, who went to a college and university, who didn't prepare them to be placed in an appropriate job.
And at the moment, yes, there has been, like competition. There's not really a race because everyone wants to do this safely. But Virgin is ahead of the game, and they are going to start the operations next year.
For Netflix, I know I put stuff on there and it just blows up.
Yeah.
I know millions of people will get to see it, and you just want to put it on the platform that the most people will see. I think that's why people are kind of steering clear of cable platforms, where they're just not getting the same amount of eyeballs that they used to.
The Chinese economy is going to be slowing down over time. The question is, how much will the Chinese embrace the idea that they finally have an excuse for why their growth model doesn't work? The growth model doesn't work, but now they can say President Trump was mean to us. The world was mean to us. So we're going to embrace slower, healthier growth. It's not the party's fault. So they actually have a perfect excuse.
I still think there is a whole lot of optimism baked in about rates moving next year. We're not going to get a cut in November. We're not going to get a cut in December. I think the market has really come around to see that. But it wouldn't surprise me if there were still some expectations out there that we'll get another 25 basis points in the first quarter of next year. I don't think that's going to happen.
That's going to do it for us from New York. Another day of records here, despite some pessimism on the trade front. Green across the board. I'm Jen Rogers. This is the final round on Yahoo Finance.
Let's get back now to the Paley International Council Summit. It kicked off in New York City this morning, and the conference features key media, entertainment, and technology executives. Yahoo Finance's Dan Roberts back with us with yet another of them. Dan.
Thanks, Julie. That's right. Well, right now we've got Michael Roth of IPG, which is the Interpublic Group, one of the big four ad agencies. Huge company that works with a lot of publicly traded names that our readers know. Michael, thanks for being with us.
It's great to be here. Thank you.
Well, let's start with just reminding viewers of some of the big names that they know that you guys work with as clients. There's Unilever. What are some of the other ones?
Coca-Cola, Verizon, Microsoft, little companies like that.
Right.
L'Oreal.
Okay. And let's approach what you do this way. I mean, we are in a time when people get their news from Facebook. You were just saying on stage, I hope they also sometimes get their news from us.
Yeah, sorry about
but
that.
People look to so many different platforms, many of them tech companies, not news companies, for their news. And as a result, that is often where they're seeing ads, or on Twitter, they're seeing promoted tweets. How has that changed your business, and how is it changing what the big companies you work with want from you guys?
Well, I think with the advent of digital opportunities, it brought into play the ability to measure and find the right consumers. Also, the content, the time that individuals spend is more like 30 seconds or 15 seconds as opposed to an ad on TV.
They've already tuned us out.
Right. So what you have to do, in fact, one of the, Geico was also our client, and one of the great campaigns was, if you're seeing this, you've already passed the opportunity to bypass us, and so you have to come up with very creative, relevant messaging in that environment.
Yeah, the other thing that has changed, I think, is the level of trust. And, it's very hard for companies to have authenticity. You're doing an ad, everyone knows you're watching an ad, So you want to make it funny, but also they know what you're trying to do. So what are sort of the new ways that you're seeing companies approach that? Is there more humor? Is there more self-reference happening?
Well, of course there's always humor, but the other part of it, and that's what I was just talking about here, was the whole notion of social responsibility. And does the brand stand for good? So you see a number of our clients, for example, Unilever dealing with clean water, or Verizon dealing with first responders and how they were able to connect using their cell phones. All, again, doing something good for society. And people want to trust the company that they're dealing with. And if they don't believe that the company stands for some level of good, they're just not going to do business with them.
Let's talk about your industry. If we zoom out a little, you are in an industry where so often size has come from M&A activity.
Correct.
It's all tying up, and these things come in cycles, then everything spins off, then they tie up again. Do you guys look to the future and it's still the same kind of story where we're going to grow by buying and acquiring, or how will you grow in the next few years?
Well, it's kind of interesting. When I came into the role at IPG, I guess 14 years ago, and we really haven't been doing we've been doing $150, $200 million of strategic tactical acquisitions up until last year when we spent $2.3 billion on Axiom. And you don't do big transactions like that unless you don't have the capabilities and you need it, or it's additive to what you have. Otherwise, we tend to grow our businesses organically. In this case, we bought Axiom, which is a data analytics, one of the best in the business. And we felt for years now we needed, in this environment, particularly on the digital environment, we needed to have better data and analytics capabilities, plus the ability to have our clients use us to manage their first-party data. Along came Axiom, so we looked at it and we felt that this was additive in terms of value to our company, and that's why we bought it. And it's working out we're very pleased with it. It's only a year, but we fully integrated it. And it's already having a seat at the table on our pitches and our existing clients. But we don't see any big acquisitions like that on the horizon. So we're going to go back to our small tactical and strategic acquisitions.
One change that, as far as I can tell, is happening is a lot more brands are doing their advertising in-house. They don't go to a big firm like an IPG or a WPP or a Publicis. Is that a trend that's happening, and what does that mean for you guys? How do you navigate going to brands and saying, no, trust us, here's why we can add value and you should go to us?
Well, usually you see the companies that are bringing in-house creative tend to be sort of the fast food industry and things like that, where they're not doing the really big creative anthem work, we call it, okay? But what they are bringing in is sometimes the programmatic buying part of their business and some of the digital capabilities and production. And we work with our clients to do that. Our role is to add value to our clients. So even if when they take it in-house, the superpower of our distribution networks, our arrangements with the media owners, if you will, the creative capability that we can bring to them, it's always going to have a value. And years ago, we bought a company called Lowe, many years ago. And Lowe was actually the in-house agency for Unilever.
And you brought it into IPG.
So we brought it into IPG, okay.
Just grab their in-house and bring it under your umbrella.
So eventually, they don't tend to be able to recruit the levels of talent that we can bring into to the picture.
Just very quickly, let's wrap this way. What single company or new player or new technology or phenomenon or trend is most going to change your industry in the next few years?
It's an interesting question. I think the streaming offerings that are out there, that's got to shake out. Aggregators of content. The whole business is about content, totally. and the ones who have the best content are going to prevail. So I think that's going to be it.
Good insights, Michael Roth. Thanks so much.
Speaking of the holiday shopping season, Black Friday is almost here. Mark your calendars, Kristen Myers.
It's marked.
All right, good. A new report from the International Council of Shopping Centers forecasts that 85% of American adults will shop during Thanksgiving weekend, where consumers are expected to spend over $100 billion. So joining us to discuss is International Council Shopping Center CEO Tom McGee. Tom, good to see you.
Thanks for having me.
Yeah, thanks for joining us. When we look at it, I mean, that's a lot of money that people are going to be spending. So the question becomes, how are they going to be spending it? Are we going to see another mix of omni-channel success when we're talking about Walmart online and in-store?
Well, I think, first of all, you are going to see a very strong holiday season for the reasons that you guys have been discussing. I mean, a strong economy, strong consumer sentiment, obviously a strong job market. So all of that leads to a strong amount of retail spending. I think the winning retailers will continue to be those that offer a competitive and effective offering, both in an online and a physical world. I think Walmart's a great example of that, of someone who has invested significantly in e-commerce, but is leveraging the benefit of having, obviously, the world's largest physical footprint, drawing people, whether they buy online or buy in the store, really having a consistent experience. And so I think that concept of an omni-channel retailer will be a winning retailer this holiday season, but really the winning retailers overall.
So, Tom, we were just obviously talking a little bit about that U.S.-China trade and the tariffs associated with that. Those are set to go in December 15th, if all goes according to plan, so to speak. Do you at all see this holiday season, and even beyond in terms of retail, the entire space being impacted by this trade deal? Because so far it doesn't seem like consumers really are paying too much attention, but they might in the next couple of weeks.
Yeah, I think I don't expect it to have any impact this holiday season, and I think you nailed it when you were talking about it. I don't think it's had an impact yet. Obviously, over a long period of time, tariff regimes generally are depressive on consumer demand. But to date, that hasn't been the case, and I think we have to take a wait-and-see attitude because we're in a pretty fluid environment around this.
Yeah.
I guess, Tom, it's objectively been the case that you look at the economic data, consumers have generally done well over the last several years. I guess how much of the strong retail demand do you think is due to sentiment or kind of those unperceivable factors, the consumer feeling good because the stock market is up, the consumer feeling good despite their own situation because they see good news out there? Or do you think it is because they have more money in their pockets right now?
I think it's both. I mean, clearly, we're a consumer-driven economy, and sentiment plays a big role. Emotion plays a big role in people's appetite to spend. So I think that's a big part of it. But I do think clearly there's been, generally speaking, unemployment's been obviously low, and most Americans are in a better financial situation over the course of the last number of years than they were previously. So I think that has played a part in it. But look, this is the most consumer-facing industry there is, right? Retail, and it is emotion-driven, experience-driven, and I think to the extent that sentiment is strong, you're going to see growing retail sales.
And the most important time of year when we talk about retail sales as well, right? I mean, Black Friday, Cyber Monday, all coming together. The holiday shopping season is really kind of.
Well, I was going to ask about that. I'm glad that you mentioned both Cyber Monday and Black Friday, because a lot of these, Deloitte just came out with another study on, holiday sales, and they really are highlighting the importance of online. So are we at a place now where Cyber Monday really overshadows Black Friday?
I don't. I think that first of all, I think these days are symbolically important, and Black Friday will still be the biggest shopping day of the year. It always has been, and it will be. But clearly the holiday season has lengthened, and it's more spread out or distributed over the holiday season. I think that we, sometimes us in the industry and the media, really get caught up in online versus physical. And I think the retailers, again, winning retailers, are just going to look at how do I serve my consumers best and have a sense of convergence between the two. And clearly when you see the world's largest physical retailer investing significantly in e-commerce and you see the world's largest digital retailer investing significantly in physical, they're really telling us something, right? They're telling us that I need to serve the customer the most effective way possible, and that's in both channels. And there's only one channel that matters, the consumer channel.
Yeah, and as we just showed a little bit ago, fewer days to get your shopping done this holiday season as well. So less time, got to get out there and shop. Tom McGee, thank you so much for joining us. Appreciate it.
Thanks for having me.
The weed giant missed expectations on the top and bottom lines and reported a net loss of $374.6 million Canadian. That was more than double what analysts were expecting. The company also said it's unlikely to meet its previous full-year revenue guide. So for more on the quarter and the road ahead, we're joined by the CEO of Canopy Growth, Mark Zekulin. Mark, good to see you again. I want to start with the quarter, though. You guys hinted last quarter that demand for certain products were down, including soft gels and oils. And this quarter, you booked a restructuring charge related to that of more than $30 million Canadian. So what are you seeing regarding customer demand? Is that the main problem that you guys are running into?
Yeah, I think if we unpack the quarter, there's some bad, and then there's actually a lot of good. So starting with the bad, which is what you hit on, which is we took significant provisions for inventory and returns related to soft gels and oils, right? So these are products where we had to set out 18 months ago to determine what we thought volume would be and to produce it and to produce the products, and ultimately the demand that we thought would be there wasn't. So this quarter we've made the hard decision to take a write down on that, and that will cascade throughout the whole financials and has had a sort of negative effect. But if we park that for a second and we look at the positive, that aside, our recreational market share in Canada is over 25%. Our gross sales are up 6% across the company to $118 million Canadian. Our medical sales are up 8% in Canada. Internationally, they're up 72%. Our retail store sales are up 24%. And quite meaningfully, same-store sales for our retail network are up 17%, and we shipped 12% more cannabis than the previous quarter. So there's a major negative provision that is dragging down our numbers, but when you unpack it, we're actually quite happy with the details of our performance.
Yeah, I mean, it's interesting when you talk about your performance versus the overall sector. I mean, it's not just you guys that are getting hit. Cannabis companies across the board have had a pretty rough 2019. But when it comes to your company specifically, do you think at all that investors are starting to lose confidence in the guidance that you guys are giving? I mean, on the call, you admitted you're not likely to hit the full-year revenue guide. And then when I look back, your former co-CEO, Bruce Linton, he said that Canopy would be a CBD market share leader in the U.S. by year end. Today, you guys gave the update that revenue won't even likely be coming by the end of the year when it comes to U.S. CBD. So with that in mind, are you confident that you can deliver on some of these other things moving forward? And in that question, what are you most confident Canopy will be able to deliver on in the future?
Yeah, so I mean, great point. So I think, in the U.S., we actually remain quite confident by that. The end of this fiscal year, we will have, CBD sales in the United States market and are on track to deliver that. I think, what we're talking about is short-term versus long-term. The short-term factors in the Canadian market that are impacting, our performance, this quarter and frankly the next couple quarters are the same thing impacting the entire sector, which is there are not enough stores in Canada to sell our products, right? If you look at Ontario and Quebec, 60% of the population have access to 10% of the stores. And if there are not stores to sell your product, no matter what other decisions you're making, it's very hard to take on the black market and move that large prize, that $6 billion plus Canadian market, into the legal sector. But, the good news is, opening stores is, it's something that can be done pretty easily, right? The government has committed that, the Ontario government has committed move to an open market system, so they need to do that now. There should be a sense of urgency, and Cannabis 2.0 products will be coming to market next month. So I think there's short-term issues to weather, but if you park there, we have $2.5 billion in the bank. We have our infrastructure largely built out, our M&A program largely completed, and new products coming to market. So we actually feel quite bullish. Once you get past the short-term hiccups in the Canadian sector.
So Mark, then talk to me about this path to profitability. As you mentioned, this black market, which has been undercutting you guys on price. Then here in the United States, there is a long uphill battle when it comes to regulatory authorities, CBD being used in food. So talk to me about when you guys actually expect to turn into profitability.
Yeah, the commentary we put out is that in Canada, on an adjusted EBITDA basis, we expect to be positive in fiscal 2021, and then globally in 2022. So, that those are achievable objectives, and again, it's short-term challenges in the Canadian market, and you mentioned price, and that's one factor. But frankly, before people can look at price, they have to be able to walk into a store and buy the product, and that's our current challenge, which we're hopeful will overcome in the near term.
Mark, when we talk about it, it's interesting because you guys have been adding a lot more former Constellation Brands employees to your guys' company, and you haven't named the CEO that's going to be coming in here. So when you say that you've got a short list of candidates, you guys have guided to replacing yourself, I guess, by the end of the year. So when you're looking at that list, is there any guidance you can give? What's needed to come in here when you're looking at the CEO on that short list?
This is a very unique sector. So, in some ways, we're fortunate that, those people on that short list can come from a consumer goods background. They can come from a beverage alcohol background. In some ways, you could say they could come from, a tech background because of, the speed that the market moves at and the regulatory environment. So, really, we're looking for the right person. And that is someone who has the ambition, the drive, fits into our culture of leadership. We have been leading this sector for 6 years, and we fully intend to lead it for the next 6 and 60 beyond.
All right, Mark Zekulin breaking it all down for us with Canopy Growth. Thank you so much. Appreciate you taking the time. Well, Peloton is one of the biggest breakout names in fitness this year, and its products will set shoppers back a pretty penny. Following the company's public debut, you can see their stock is off by about 10%. It comes as Bloomberg is reporting the exercise company is working on a new treadmill that will cost less than the current $4,000 model, and a rowing machine as well. But if you're looking to add some grit into your workouts, a Spartan obstacle course race may be more your speed. So joining us now is the founder and CEO of Spartan, Joe DeSena. And Joe, Spartan is the world's largest obstacle course race, we should note.
We are.
So there's some big congratulations in order for that. But what is your take on the way that the fitness industry overall has kind of shifted more to this kind of tech-focused belief?
Listen, I think it's good if we get people off the couch. It's good no matter what device is out there. But at the end of the day, for somebody to really thrive and be their best self, they got to get outside. And they got to touch the ground and look people in the eyes and be part of a community and sweat. And you're never going to push as hard if you're not around a bunch of people in a competition. So I love this idea of putting a date on the calendar, and you're going to go with your friends, and you don't want to let them down, and it's going to force discipline for the next 30, 60, 90 days.
Kind of that social pressure.
Yeah, well, speaking of, there's a Spartan race coming up, and Zach and I have agreed we're going to run
I did not
it
agree to
together.
that at all.
Well, now you have, because I've just put the pressure on you.
We're going public.
I've just publicly told.
can
I've
sell
just
me on it.
publicly said. But so, Joe, I feel like a couple of years ago, like everyone was doing Spartan race. There was a lot of like these obstacle course races that everyone was doing all the time, and then it seemed everyone was shifting into this more boutique style of working out. I'm wondering where you think the fitness space is going to go next. Do you think it's going to go back to trying to get more outside and getting more in touch with, just easier, simpler workouts that you can do at home or with friends? Where's it going next?
So all these boutique gyms, the Soul Cycles, the Barry's Boot Camp, the Peloton devices at home, they were just instruments, tools that people use to get ready for events, whether they're running a marathon, a 5K, a 10K. Obstacle course racing came out of nowhere. It became this giant thing, and we haven't stopped growing. So that hasn't slowed down. What they're using to get ready for it might change on a week-to-week basis because people are finicky. But I go back to, you're not going to use your device, whatever that thing is, whatever that gym, unless you have a date on the calendar.
Unless you got a reason.
Doesn't have to be. Look, separately on our farm in Vermont, we have a wedding business, very exclusive. When brides and grooms show up, they sign the papers that they're getting ready to get married in a year. All of a sudden, they start training.
Yeah.
Because they got a date on the calendar. They want to look good in front of their guests and their family. So if you don't have a date on the calendar, you're not committed. It's not happening.
Yeah, I mean, it does make sense. I mean, we're not talking about this being like a either-or situation where it's like either you're a tech-focused workout guy or you're a guy who will lift a 38-pound rock with a piece of iron.
Right.
In it.
What is this?
It's
again?
It's not an either-or. It could be both.
Spartan is really a 20-year overnight success, and about 6 years ago, I met somebody at a Spartan race who was 696 pounds. 696 pounds, was drinking 2 2-liter Sprites every night and eating 8 Egg McMuffins. And I got in touch with him and I said, I'm going to help you lose a bunch of weight. He moved to the farm. And I said, to motivate you, I'm going to carry weight as you lose weight.
Yeah.
And so I started carrying more and more weight. It got to 100 pounds. It was ridiculous. I was walking around with a 100-pound sandbag. So I switched to a kettlebell. The mayor of Sparta, Greece, heard about me carrying a kettlebell around for 4.5 years and dug this out of the ancient site. And I now have an ancient kettlebell I carry everywhere. So
Very true to form.
I've integrated fitness into my life. So I take the stairs to the elevator. I carry this thing everywhere.
Yeah, see, you don't need a $2,000, $3,000 workout gear. You can just carry a rock around.
Or
Joe
do the
DeSena
Spartan
proving it.
race,
Yeah.
which we will be doing together, Zach.
We'll see what
Another
happens.
2 weeks, Long Island, you're doing it.
There you go. All right, Joe, thank you so much for joining us. Appreciate it.
Another hot ticker we're watching today is NVIDIA. The chip maker reported some pretty good earnings after the close on Thursday. Joining us now is Vivek Arya, U.S. semiconductors analyst at Bank of America Merrill Lynch. Vivek, always good to see you. What took me by surprise, and maybe a lot of people in the market, is the turnaround in NVIDIA's data center revenue. What drove that?
Sure, that's a very good point. You know, if you look back at NVIDIA, between 2013 to 2018, their data center business went up 15x. From under 200 million to over 3 billion. But last year, cloud data centers spent a lot of money, enterprises spent a lot of money because of tax cuts, because of other reasons. So we just had very tough compares throughout this year. And the situation has finally turned, compares are starting to get easier. And secondly, we are starting to see new technologies emerge, especially this whole new field of natural language processing or conversational AI that every cloud data center is starting to adopt. So you are seeing, point number one, a multi-pronged adoption of NVIDIA products among the hyperscale service providers in both their internal cloud and external cloud. You're seeing adoption by enterprises, and you're seeing adoption by a lot of supercomputing companies. So we think NVIDIA is exceptionally positioned. And the second point I would make here is that this is a semiconductor company, and if you look at semiconductor companies such as NVIDIA or Intel or AMD, the kind of products they sell retail for anywhere between $100 to $1,000. But with NVIDIA, they're able to capture a lot more value of this whole artificial intelligence market by selling systems that are close to $400,000. And point number three is the developer ecosystem, that this is more than just a game of having the best chip. You need to complement that chip with very good hardware, very good software, a developer ecosystem, and then package it in systems that you can go and sell for $400,000. And we think NVIDIA is very uniquely positioned to do that.
And Vivek, you mentioned in there AMD got an upgrade this morning from RBC, and it looks like Wall Street is just having a love affair with chip stocks so far this year. You take a look at the S&P Semiconductor Equipment Index, up 84%. There's some talk out there now, Vivek, that perhaps the semiconductors are in a bubble. What do you say to that?
If you look at semiconductors, interestingly, the sales have been pretty weak this year so far, and a lot of it was because of trade tensions. Historically, the industry has grown just above GDP because there is a lot more adoption of semiconductors and electronics, but electronics grows in line with global GDP. But last year, there was a lot of pull-in of semiconductors by China ahead of a lot of these trade and tariff issues. So interestingly, we have an industry where sales are coming down 5 to 10%, but people are anticipating a recovery going into next year. So that is certainly helping the sector. The second thing is that we are in front of multiple new product cycles next year. So I mentioned mentioned this new field of conversational AI. I should also mention new gaming. There are 2 new gaming consoles come out next year, and they come out once every 7 years. So there is a start of new gaming cycle. 5G can be a massive new cycle. Recently, we heard from Taiwan Semiconductors. They are thinking that 5G smartphones could be 200 million plus next year, possibly 500 million plus the year thereafter. So there are a number of new product cycles that are starting to emerge next year. And all those will require a coordinated effort from the likes of computing companies. So you mentioned Intel, AMD, NVIDIA, and also a lot of the semicap equipment companies that need to provide the machines to the maker of those chips, such as a Taiwan Semiconductor, to make a lot of these product cycles happen.
Social media continues to make its way into more aspects of our lives. Retailers and brands are spending big now on social media advertising for the holiday season. New research shows that 76% of consumers have purchased a holiday gift based off a targeted ad on Facebook or Instagram. Wow. Joining us to discuss is Andreas Stenman of Smartly.io. Andreas, thanks for coming on.
Thanks for having me.
So this is interesting to us because in light of Instagram hiding the likes, and also in light of the fact that I've bought a lot of stuff from Instagram ads, and I think, gosh.
You have?
Yeah. And I just think, I guess I'm just a sucker, or the ads are very effective. But tell us about this, because that percentage is very high.
Yeah, so we actually surveyed customers from all around the nation just to get their perspective and try to understand how they feel about different social media channels and if they have an impact on their shopping behavior during the holiday season. And we found some pretty interesting results. So 57% of consumers said that they do go to social media to find inspiration and to find ideas for gifts. And 48% of them also said that they are likely to purchase something that they see or they are planning to purchase based on social media ads this holiday season. So simply put, this means that basically half of consumers out there, of your target audience, are open to purchasing products that they see in social media ads, which is pretty amazing.
Is there a social media platform that is doing this the best? Are people mainly buying things off Facebook or Instagram, or how well actually is Pinterest doing in this space? Because I know that was a huge part of the advertising that they wanted.
Yeah, so of these consumers, we definitely saw that 61% are gravitating towards Facebook and Instagram. And this is because they see that these channels are the ones that are serving them the most relevant ads. And we also saw that it comes down to visual content. So there's so much content out there. There are more platforms and new ad formats popping up all the time. So it's really about who can capture the user's attention very quickly and get their point across.
What kind of products are doing the best? Is it apparel? Is it electronics? What kind of items are actually being sold through these ads?
Yeah, so we saw that in the survey, electronics and apparel and accessories are still up there. These are kind of the more traditional Black Friday shopping categories, of course. We also saw home goods and beauty and wellness up there. But in our own consumer base, we do see, I want to say all sub-verticals of e-com building a strategy around Black Friday. So everyone's trying to get in there and capitalize on the higher conversion rates.
I would think that within apparel, it's sneakers that sell the best, at least through Instagram. I mean, The things that I've bought from Instagram ads are shoes. Now, I'm not like a sneakerhead like our colleague Reggie Wade. I don't really care about sneakers, but I've bought dress boots from Instagram. I bought a pair of cool-looking Vans from Instagram.
Okay, but here's the question
I'm
for
a sucker.
you. Are you purchasing brands or products that you would not normally have
Yes.
bought before? Okay,
Yes.
so
I'm
they
seeing
are. So
things
new
that I've
brands
never
are
even heard
able
of.
to capture you
Oh, yeah.
off of these ads. I have a question because Dan mentioned at the beginning how Instagram is hiding links, and if you are a brand, does that all impact your strategy as you are advertising and you're using Facebook and Instagram?
Do
et
ads
cetera,
show likes
to-
on Instagram?
Yeah, they do.
Yeah.
And while I don't think that that's huge for us, that we see that someone has liked an ad a million times, I don't know if the brand themselves is thinking about their strategy and how likes might play into that.
And also, who likes an ad?
People do.
People do. Tap on
People
the
do.
ad.
And that's a good question. And I do think some brands do think about that. What I do think is more important is just how quickly you can get your point across again and capture someone's attention. So research has shown that you have 1.7 seconds to actually capture someone's attention. And that all happens through visual content, highly visual ad formats. It's just like that.
Which is better? Is it a picture or is it a video? Because I've seen both.
Both are used. We're seeing a lot more interest going towards video now, though, and video is really starting to take over. It makes sense because through video you can really have these visual elements in there and capture someone's attention. And it's also, we got to think about like the new ad formats like Instagram Stories, for example. Video is native to that platform, and the winning brands are really the ones that are planning their creative strategy with these ad formats in mind, and make it look native to the platform.
With a photo, it better be damn good because you just get one image, so it better be perfect. Other things that we've bought through Instagram ads: wallpaper for our bedroom, and wrapping paper where you can personalize it with the name of your dog. Yep.
What?
You're one of
That's
those.
we bought in the last
You're one
month.
of those.
from
Hey, I'm
Instagram.
going to need information on that.
Yeah. Hey, this stuff works, man.
You know what? About your point though about these pictures, the ads for me that really get me the most are the ones that I think it's a friend's photo, where you're scrolling through and you don't know it's of course it is.
Yeah.
But you don't know it's an ad.
We got to wrap. Andreas Stemen, thanks so much.
Thank you.
Really interesting, actionable stuff. Some Instagram users in the US have already started to see their like counts disappear from their Instagram feeds. We have heard for weeks and months that this was going to happen, and it does now appear to be beginning. Steve Bartlett is CEO of the Social Chain Group and joins us now to break it down. Hey, Steve.
Good to be with you.
Thanks for coming back on the show.
Pleasure
We have
to be
loved
here.
having you on in the past. What is going to happen here? Because for influencers, if you are doing Spawn posts and the brand is paying you, what?
Yeah,
hashtag Spawn.
Oh, okay.
Spawn.
Is that a thing? Is that
It is. Of course, they all write hashtag Spawn on
Okay,
the
go on
promoted
with the
ads.
what anyway, I don't know
If
what
you're
that is,
doing that and the brand is paying you based on your following, and now you can't say, look how many likes I got, well, what does that change?
So there's a few things. For influencers, they can still tag the post with the brand, and that gives the brand access to see their analytics. The other thing is So the other thing is the old-fashioned way, which is just screenshotting it and sending it to the brand. But what it will do is it will force influencers' posts to be tagged with that branded tag, or else the brand won't be able to see the performance of the post. That's potentially one of the behaviors that Instagram are trying to encourage with this move. If we take it back to 2017, there was a study done by the Royal Public Health Society that showed Instagram, of all platforms, was most conducive with mental health problems like anxiety and depression. And what we think they're trying to do, at least from the PR perspective, is show that they're making strides to correct that. However, from a more sort of skeptical, cynical standpoint, it does raise a number of questions, because I can still see the amount of likes and engagement I'm getting. It's not going to stop comparison largely across the platform. It's not going to stop people faking their lifestyle, which again drives sort of self-esteem issues. And the cynic in me might say that it might be increasing the amount people post, which increases the amount of ad inventory they can sell. And I actually did reach out to the head of Instagram last night, and I said to him, how are you going to track if this was a success? If the objective is to make Instagram a better place for mental health, how do we track if it worked? And he said to me that it's predominantly going to be based on anecdotal measures and qualitative measures, surveys. So they're going to do a bunch of surveys.
Which are only so effective. And Steve, the other thing I was thinking is, okay, you can get rid of like displays, but you can still see number of followers.
Of course.
If they really want to make it about, it's not about competing over I'm bigger, I'm more famous and more beloved than you, they could hide follower counts.
And that's where the cynic in me comes in and says, Facebook are a public company, and although they're controlled by one guy, Mark Zuckerberg, they still have the objective of making money. Adam Mosseri, the head of Instagram, has said they will compromise revenue to do the right thing. That's what he said on stage multiple times. But I do focus in on this point of, if we post more on Instagram, and if we spend more time scrolling the feed because there are more posts, because we're not being ranked by popularity, Instagram are able to serve us more ads.
Right.
And the big shift we've seen in the last couple of years is the story this year overtook the newsfeed as the number one way we share things with friends. The story isn't a great place to serve ads. The feed is a wonderful place because you can scroll through multiple ads in seconds. The story, you can only serve an ad every third story, really, without destroying the experience.
Right.
So, yeah.
Well, we just had a guest on earlier. Andreas talked to us about how these ads are really performing well on Instagram and how a lot of brands are using these ads to sell to their customers. Now, do you think these brands and companies are going to start to have to rethink their strategies in this case if this becomes a permanent situation for Instagram?
It's going to be incredibly hard for you to determine which influencers really do have influence. Last year, we invented a tool called Likewise, which shook the industry quite hard because it allowed brands to see how much of an influencer's engagement was being defrauded. With this kind of change, we won't be able to see those things. So an influencer that says they've got 1 million followers, and bear in mind you can buy followers for, you could buy 1 million followers for about $1,000.
What?
Yeah,
So cheap.
You can buy comments for
Guys, I'm going to be an influencer
for a couple of dollars. You could buy likes. It's now going to be incredibly hard to see if Jenny with 1 million followers really has any influence. We've got comment pods, which will fake hundreds of comments on your post for dollars. So I can't tell with that anymore. I can't dig into your engagements individually and see if they're real. It's getting a lot harder for brands to see if they're being defrauded with a manipulation of metrics.
So does this mean that a micro-influencer might bring rise to these micro-influencers that don't have as many followers, but their engagement?
You're going to look as influential as Kim Kardashian.
I'm working on it, guys. I'm working on it.
We've seen micro-influencers rise over the last 4 years astronomically. In fact, 2014, 90% of the influencers who worked with were macro influencers, big influencers. Now 90% are micros. The reason for that, in fact, is because they post less adverts. They're much more believable in an era where trust is completely evaporated, where Emma, the influencer you follow, posts saying she loves 8 different hotels and they're all her favorite. So these micro influencers, they hold trust more, and also they respond more. They respond to your comments more, they respond to your DMs, so you consider them more of a friend than Kim K or someone like that. So, yeah.
I'm glad that you mentioned your findings that the story has surpassed in the last year the feed, because that just confirms what I suspected. I've noticed, I don't know about you guys, that anecdotally among my friends, very few people are posting permanent posts anymore. I mean, I have friends who haven't done a post in a year, but they use Story constantly.
Yep.
And I think it has actually made a permanent post much more valuable and important. It's like, oh, if you're putting this up on your actual, a permanent photo you're posting, then you must think that's really special and you want that there.
And you're completely right. And imagine what that's doing to the existing advertising model of in-feed ads. If no one is posting content in the feed because there's transition to stories,
just looks like all
then
ads.
where are we going to serve the adverts that we've been paying, earning billions from revenue from? And this is part of the reason why I think removing likes will try and incentivize us to perform the behavior we perform on stories, where we know it's going to disappear, where we know we're not going to be ranked, and how pretty we are, or how good our, horizon photo is. And I think that must be part of it. I do not believe that they're going to implement this change to improve mental health, and the way they're going to track it is with surveys.
And anecdotal evidence.
Anecdotal surveys, right? Seems a bit loose. I think there's something else they're tracking, which is easier to gauge.
Do you think that this experiment might just be temporary, and that in a year or something like that, Instagram says, "Oh, guess what? We've actually decided to bring likes back"?
If we look back over the last 10 years, it's very, very rare where they U-turn. So the fact that they brought this change to the US after testing it in 8 different markets around the world shows that they saw something which was encouraging. What we did see in the influencer space was a reduction of engagement on influencers' posts between 3 and 15%. So influencers are furious, generally speaking. They've been building up this number for the last 5 years. It's their social currency. It's what makes them get free food in restaurants.
They still have the followers.
Yeah, but this is much easier to manipulate than any other metric.
No more likes. Now I won't like any of your photos.
You didn't like them anyway. You didn't like them anyway.
All right, Steve Bartlett, thanks for joining us. Really good discussion.
Well, another day, another cannabis giant missing estimates. This time, Canadian weed giant Aurora Cannabis missing on its top and bottom lines. The company notched an adjusted EBITDA loss of $39.7 million Canadian, which was wider than the expected loss of just over 20 million Canadian. But like its competitor, Canopy Growth, Aurora also pointed to constraints in the Canadian retail space as its main drag. Remember, here's what Canopy CEO Mark Zekulin had to tell us about that when we chatted with him yesterday. Take a listen.
The short-term factors in the Canadian market that are impacting our performance this quarter and frankly the next couple quarters are the same thing impacting the entire sector, which is there are not enough stores in Canada to sell our products, right? If you look at Ontario and Quebec, 60% of the population have access to 10% of the stores. And if there are not stores to sell your product, no matter what other decisions you're making, it's very hard to take on the black market and move that large prize, that $6 billion plus Canadian market, into the legal sector.
All right, so let's bring in Roy Bingham. He's the CEO and founder of cannabis data firm BDS Analytics for more on this. Roy, thanks for joining us. When we look at this, we keep hearing about that bottleneck effect, right? People saying that they need more stores to sell more product. What's interesting is that Wall Street analysts they've cut individual price targets on these names, but they haven't really cut the overall market size, the opportunity overall. Mm-hmm. So is it really true that these CEOs are pointing to excuses that are real here, that there's just constraints on actually getting more stores open in Canada?
Well, it is real. It's just taking time. And you hear these massive numbers like $150 or $200 billion market. That's the total potential market. Our projection is more like a $30 billion market in the next 5 years, a little bit more realistic based upon actual assessment of how long it takes to roll out the stores and get the regulations approved, et cetera.
And that's $30 billion internationally, assuming full legalization.
That's 30 billion in the United States, actually. Yeah.
And if we just think about full legalization, who would potentially be the winner there? Because something that I've found speaking with people in the industry is that some of these US-based players might not actually want immediate full legalization because it would allow some of these Canadian players who are more highly capitalized, have a larger built-out supply chain to actually come in and cannibalize the markets really early on. Is that something that you found as well?
Yeah, that's definitely a factor. A number of people are saying the current environment is attractive for me to get my business to be substantial and profitable. It is, however, difficult to expand from one state to multiple states under the current situation. You have to set up an entirely separate organization structure in each state. That's very difficult. So somewhere in the middle, there are large American companies emerging in California and Colorado. But they're not really yet able to get to the same sort of scale in terms of capital as the Canadians.
All right, let's talk about how this is setting up too, though, because we've highlighted just yesterday we were looking at Canopy, a rough day for them. Today, Aurora also down. I mean, when you look at it, the year-to-date performance, you can look at the MJ ETF, Marijuana Alternative Harvest ETF. They're down by about 35% on the year. I mean, the pain's been kind of nuts when you look at 2018. Are there any catalysts in your mind? I mean, you know the data. Any catalysts to kind of turn things around here?
Well, the big thing is the fundamental adoption of the products by consumers. So in the United States, we see market growth in the mature states of about 21% this year. And then you add on the new states and the new states that are going to adult use in January of next year, like Michigan and Illinois, and you can see tremendous growth. So we're going to see a market that this year will grow over 25%. It's just that some of the stocks have really crazy expectations, let's face it, in terms of the overall growth rate. You know, you can't have 100% compound growth rate for year after year.
And if we look at some of the players now, who's actually going to emerge as a winner? If you can't speak about specific names, what characteristics might those be? I mean, for example, one of the things I'm thinking about is the fact that there's just this oversupply, particularly in Canada, with some of these, with the marijuana flower, with these oils, kind of those base materials, and that maybe intellectual property will be the path forward. It might be licenses internationally. So what are those characteristics that will really see the winners from the losers?
Well, there's no doubt that ultimately consumers are attracted to brands. They expect that an experience is going to be consistent and predictable. Once they've found a brand that they like, they will stick with it. So we're now in this phase where it's not so much about distribution and getting onto the shelves, but actually starting to resonate with a consumer. And we're already seeing some US brands that are emerging. It's more difficult to do that in Canada because of the regulatory issues with regard to packaging, etc. So I see, some brands emerging now with very high quality products that are perceived to be the same kind of thing that you could buy in a Walgreens or a CVS one day. And certain companies are executing well on that. People are moving, of course, away from flour, which is generally generic and not branded, towards packaged consumer goods like concentrates and ingestible products. And that's been a trend for the last 5 years that is continuing in every state as it gets rolling. So we're seeing a lot of brands that are focusing especially on ingestibles and then moving into concentrates or the other way.
I mean, well, real quick, lastly, when we talk about it, to kind of harp on Emily's point here, when you're breaking out company-specific numbers, I mean, Aurora was stressing on their earnings call that they do have a lower cost to produce some of their goods as well. And we've seen the pressure on profitability for a lot of these companies. I mean, what do you make of the way that costs to produce are of course not the same across the board? Is that also going to be a key factor here moving forward if you talk about flour and all of those other things becoming less differentiatable?
Well, the encouraging thing is that with edibles and concentrates, typically there's a price point that is established. It might be a $20 product established in a consumer's mind. As your supply costs decrease, your production costs decrease in line with economies of scale, you see a margin starting to improve. And we've seen that in the United States consistently now, where the price point for the product is not declining, it's about flat. The price point for flour has declined very significantly. So if you're only in the flour game, you're not really getting the benefits of those reductions in production costs. But if you are in those derivative product markets, then you can look forward to good margins in due course.
All right, very interesting stuff. Not all, it's again, what we're seeing here is not all companies should be treated the same here in the cannabis space. But Roy Bingham, thank you so much for breaking all that down for us. Appreciate it.
Thank you, my pleasure.
A residential leaseback startup offers to buy your home and rent it back to you at a fixed rate. Nearly 25% of American homeowners cannot access their built-up home value without selling or moving, according to EasyKnock. By using EasyKnock services, homeowners can reap the financial benefits of selling their home without the hassle of moving, giving them another option until they decide they want to repurchase or buy a new house entirely. And joining us now is Jared Kessler. He's CEO and co-founder of EasyKnock. Jared, good to see you again.
Great to see you as well. Happy Friday.
Yeah, happy Friday. Since we chatted about this startup last time, you guys have raised another round, more than $200 million in equity and debt fundraising there. So talk to us about how it works. I described it a little bit, but I think a lot of people might be curious about how this differs from maybe a lease or a reverse mortgage.
Yeah, well, first of all, reverse mortgages are only for people over the age of 62. But in our product, if people love their home and they want to get the cash out of their home, and a third of the U.S. housing market actually has no mortgage, which is a very surprising figure for a lot of people.
Yeah.
Their only choice is to sell their home. They can go to some traditional products like HELOCs or cash out refis, reverse mortgages. Reverse mortgages are only available, only 30,000 are done a year. So if you love your home and you want to stay in your home, you're ingrained in your community, you can be a renter of your own home. And traditionally, the house has always been a liquid asset. We say to people, it doesn't have to be that case. We should create a more flexible experience for people. So if you want to stay in your house and your circumstances change, you want to buy it back, they can buy it back. If they want to pay market rent as a renter of their own home, they can do that. And if they decide they want to move, they can move, and they get the appreciation, the difference between the cash we give them to buy their home and what the value is when we go to sell it.
So what actually happens if that home depreciates in value? Because it would seem like your company is then left holding the bag in that situation.
In the case of EasyKnock, the way we do our construction of the deal is basically day one, we give them up to 80% of the home in the form of cash, and the second portion in the form of an option. And then when they either buy back the home for the cash we give them, or they get the difference between the next sale price and the cash they got day one. So the consumer is in the same position they were in before, and the risk for EasyKnock is 80 cents on the dollar while that transaction is occurring.
And you guys
hold on. So you have, say I have a house, I have a mortgage on it, I sell it to you, and then you lease it back to me. What's like the average amount of money that people save using you?
Well, it's not about how much they're saving, it's what you're comparing it to. So what people don't really connect in sort of what happened post-credit crisis was if people, the number you guys showed up before was 25% of the U.S. housing market cannot access the equity in their home. So what are they doing? They're migrating towards higher sources of debt vis-a-vis credit cards, student debt, payday loans. So what we're doing is we're saying our effective APR is much cheaper than those things. For middle-class American, that can be in the 20s. Ours is effectively 11 to 10% all in, so they can consolidate their debt. But it's also for people that are approaching retirement that want to hedge out their market risk by getting out a portion of their home. But also people when they're going to move, they could do a shorter duration, which is another product we have called Movability, which is essentially a bridge product without us being a lender.
Yeah, the whole thing just kind of giving you flexibility here, where a lot of people might not have that if they need to tap their home for liquidity there, or they don't want to move. Options on the table. But what's interesting is you guys have expanded since we spoke to you last year in now every state except for West Virginia.
Yes.
As well as the fact that, back then it was interesting because we were looking at a rising interest rate environment. Now we're seeing rates come down, though the Fed says that they're going to hold steady. I mean, what have you seen in terms of demand as the interest rate equation has kind of flipped?
Well, for us, we view negative interest rates as a huge opportunity for us because we're effectively driven by balance sheet partners to fund our homes. We have a prop tech and an opco.
Yeah.
So to buy those homes, the lower interest rates go, we can effectively have below market rents in a year from now for our company. We could be the cheapest option for people in the United States.
All right, more options on the table now to be aware of. Jared Kessler, thank you so much for joining us. Appreciate it.